Welcome back to Squawk. Our next guest says that the bull market's still intact, but certain factors could hinder it. So,
oh God,
start the new year. For
here you go again.
It's always good to talk to him, but
what are they?
Kind of message. I don't
Tariffs?
know. Paul Hickey's here. He's the co-founder of Bespoke Investment Group. He's at the table.
Wow, what a welcome!
I'm just saying, it's one way to start the year to say, hey, it could be good, but actually we got some things that we're really concerned about. Well, what are the things on your list?
I mean, I think we're optimistic about the market still, but you also have to be realistic. We've had two really big
exactly.
years.
That's the only reason.
Historically, you look at periods when the bull market reaches its second year. Historically, they last about 5 years, but that third year tends to be weaker than average. Okay, so you have that. We were talking about on Christmas Eve how the S&P was above its 200-day moving average every day last year. That's only happened a few other times. Average returns were about half. The next year were half the historical average. And then we had over 50 new highs last year, and prior years, 6 other years, 4 years, we were down the next year. So those are just things to be aware of. But overall, the factors of AI, I think what's going on in Washington and the broad economy are still positive. It's just, I don't think we're going to see another 20% year.
The only thing that it makes me have pause with that, because I understand all the arguments, just where we are at valuations and things along those lines, is that everybody seems to be thinking the same thing right now, that we can't possibly have another year last.
Right, and that's a really good point, because everybody was talking about how the first few days of this year were going to be weak because people are sitting on gains. We're up 1.5%, and so historically, that's been a relatively good omen for the market going forward. But I think you got to have some balance here, and I think when it comes to Washington,
we haven't had balance in 2 years, you idiot.
When you look at what's going on, because all we hear about is uncertainty this, uncertainty that. How are we going to navigate? Well, there's always uncertainty in the markets. I think we're all aware of that. But I think in the last several weeks of the year, people started to underestimate the potential positives of the new administration. And what you saw is when the continuing resolution was passed, and you saw Mike Johnson get reelected as Speaker on the first ballot. The market, 2 of the best days since the election were those 2 days. And I think that's telling us that maybe the market's underestimating what can get done going forward, and as far as the less of the regulatory burden and lower taxes. And I think that could be a positive surprise going forward.
Exactly.
Are you still you're still in the double digit at the end of this year? We're up. Or no?
No. I think we'll be up, but I just don't think it's going to be a year like we've seen the last 2. I wouldn't be surprised if we were down 5% or up 5%. Nothing would surprise me these days. But I think the alternatives to the stock market are weaker, I think. So
that's the question.
We're still staying invested, but just reining in our expectations.
But are you fully invested, or would you say you're waiting for something, something to happen, so you try to keep cash on the sideline because you think that there's going to be some moment, or that's not where we are anymore?
No. So what we're doing is we're still invested in our position.
Just
we
not
haven't
fully
necessarily been raising a lot of cash, but we're starting to diversify more from the growth orientated sectors of the market to more cyclical and value areas of the market. And so, we're looking
at some examples.
So you look at the industrial sector, it fell 10% in December.
Right.
I think in the industrial sector,
okay,
if you see less of a regulatory burden, some of these big projects, you see onshoring to the U.S., you're going to see these industrial companies benefit from that. The higher interest rates that we've seen in December were a factor behind that 10% decline. The longer term, we think the industrial sector will do well going forward.
Anything you wouldn't touch right now?
Anything we wouldn't touch. Right. I think energy is a tough sector. The economy is doing really well, and oil has rallied a little bit here, but it's still well off its highs. You look back to the first Trump administration, it was the worst performing sector, even though he was one of the friendliest presidents to the sector, because drill, baby, drill, that's going to mean a lot more oil on the market.
Well, thank you for coming in this morning.
All right, thanks for having me.
For America.
Thanks.
When we come back, McDonald's is the latest company to overhaul its DEI program. We're going to talk about those changes next. And later, New Hampshire Governor Chris Sununu will join us right here on set as his term as governor comes to an end. Squawk Box will be right back.
Twister. Whoa. Okay, well, time to boogie. We'll see what the outside brings.
McDonald's is making changes to its approach to diversity, equity, and inclusion. In a blog post, the company said it will no longer set, in its words, aspirational representation goals. It's like quotas. And will instead continue to embed inclusion practices into its day-to-day business. It will retire a DEI pledge in its supply chain, who it deals with, and rename its diversity team the Global Inclusion Team. Anti-DEI crusader Robbie Starbuck said that he had contacted McDonald's Friday to ask about its diversity programs, but didn't get a response. And after McDonald's announcement yesterday, Starbuck claimed victory in a post on X. McDonald's said the changes had been under consideration anyway over recent months and were a result of a variety of factors.
And ExxonMobil is suing California Attorney General Rob Bonta and several environmental groups, accusing them of defaming and disparaging the oil giant's advanced plastic recycling initiatives. Bonta sued Exxon last year, saying that the company had engaged in decades-long deception about the limitations of recycling. You may remember, if you're a close watcher of the show, Bonta came on here to announce that lawsuit going against them and gave out his reasons for doing this. But yeah, it was basically blaming ExxonMobil for lying, in his words, about what happened with their recycling program.
Right.
And Darren Woods, by the way, the CEO at Exxon, has been very outspoken in the last couple of years, really pushing back about any of the critics that have taken them on, whether that be climate change, whether that be shareholders who own a share or two.
That was a classic interview. That was classic. And I mean, the inanity of this whole approach was exposed by you, I thought, very well. But the idea that if it wasn't purely recycled into compost, then it didn't count. So turning it into jet fuel did not count as an effective use of the way. And then I said, how did you get here from California? Did you fly? And he goes, well, look, what do you want me to walk? And it's like, you know what I'm saying. You understand the hypocrisy in what you're saying. Don't look at me like you don't understand. So this is satisfying. I'm violating all my resolutions. Damn it.
Coming up on the other side of this break, Via is just speaking at the Consumer Electronics Show in Las Vegas last night. We've got the highlights. We'll show them to you right after this. You do not want to miss what he just said. Squawk Box, come right back.
6:25.
Make money.
Good morning, everybody, and welcome back to Squawk Box. We are live from the NASDAQ market site in Times Square, and the futures this morning are up once again. Dow futures indicated up by about 76. Of course, the Dow did close lower at the closing bell yesterday. The S&P 500 and the NASDAQ were up for the second day in a row, and this morning they're indicated higher as well, with the S&P up by about 8 points, the NASDAQ indicated up by about 20. Ulta Beauty CEO Dave Kimball is retiring. He's going to be replaced by the company's chief operating officer, Keisha Steelman. She's been with Ulta for more than a decade and became the CEO or COO in 2023. Along with the executive announcement, Ulta raised its fourth quarter outlook because of stronger than expected performance during the holiday season. Check out the shares. They're up by about 1%, but if you're looking over the last 3 months, up by close to 18%.
NVIDIA CEO Jensen Huang delivered the keynote address at CES in Las Vegas and unveiled some new AI chips. Christina Partsinevelos joins us now with more. Do they have a new name? yet? Are they Blackwell or are they?
Well, that's not new. Yeah, that's the current.
I know that one's not new,
family.
but do they have a new?
The next one is Reuben, but he didn't actually speak
Reuben.
about that. It actually, in a pivot away from data centers, gaming is actually back in the spotlight for NVIDIA. You know, going back to their roots. CEO Jensen Huang unveiling the company's latest breakthrough gaming chips built on the same powerful Blackwell architecture that you just mentioned for its AI data centers. The new GeForce RTX 50 series, lots of names to remember, uses AI to enhance everything from graphics to character facial details, coming to computers priced from $550 to $2,000 this March using Micron memory. Here's Jensen Huang right now.
You get this incredible graphics card here, Blackwell. We're going to shrink it and put it in there. Does that make any sense? Well, you can't do that without artificial intelligence.
Sporting one of his Tom Ford jackets, Huang announcing an expansion of their Omniverse product to include physical AI. That was on the screen. Tools so that computers could simulate any environment in real time. So that's bringing automation to warehouses. So he was also saying that there's going to be digital twins. So you could literally have a replica of your warehouse online so you can, move things around and make it more efficient. And then he also said it would boost humanoid robots. He spoke about driver assistant chips and software for the auto space. Toyota would be one of the first automakers to include the new operating system. Here's more.
This business for us, notice in just a few of these cars that are starting to ramp into the world, our business is already $4 billion, and this year probably on a run rate of about $5 billion. So really significant business already. This is going to be very large.
About a partnership with Uber. So these are a bullish sign for driverless vehicles like Uber. Tesla falls into the mix, Google as well. Investors definitely bought into the hype on Monday with the shares soaring to a new all-time high. But the stock today will really show if Jensen met those high expectations. You can see right now in pre-market.
What's it doing? Yeah, so looks like he did meet those expectations. I guess we should have known. I mean, if you can, in a game, have all that expressions on the characters and everything that, where it's become so real, that's all AI.
And so rendering in real time. So if you want to change your character right now and say go from a man to a woman in real time, or change the environment depending, I'm not a gamer, so of course I'm just speaking from watching the videos and stuff like that. It's incredible what you can do, and you think it's just gaming, but no, that's how they got to where they are in the as dominating and a first adopter in AI is because of those gaming chips.
And gaming is a relatively small business for them now. It's still $10 to $11 billion that they bring in it, which is amazing that that's a small business for them. But it's a lot less than the $100 billion or so that they have.
It's 80% of total revenues for data centers.
Yeah.
And so that was or is the focus for a lot of Wall Street, right? But that wasn't what he talked about yesterday, given its CES Consumer Electronics Show. Having said that,
where all the programmers who are writing for this stuff.
Yeah, but there is an analyst meeting this afternoon, and that's where they'll get most likely questions more about the Blackwell shipments. There's some, rollout going from Hopper to Blackwell, so that would be, the previous GPU iteration to the newer GPU iteration, and then so forth for the next Rubin. So he'll probably get questions like that, and that's when you'll see a lot of the reports.
It sounded to me like what he was talking about last night was very similar to the Internet of Things, right? When the Internet suddenly got put out into the real world. This is kind of like the AI of things, almost. At least that's what I took away from it.
Yeah, because he just covered so many facets and how we're going to be connected. Of course, we talked about home appliances being connected, but this is the next level when you're really simulating entire environments, especially in the workforce. He said that if companies don't put forth that digital twin, which is replicating your warehouse, you're going to be behind the curve. And then he also spoke about AI supercomputers, how driverless cars are going to be able to see any type of scenario in front of them in real time and react. So it's just incredible what they can do with this type of technology. And again, it all stems from those gaming chips that they, is at their core.
Great. All right. Christina, thank you.
We've got some breaking news to bring you. A big deal in the image space. And when I mean images, I mean photos, pictures, and video. Getty Images and Shutterstock announcing they have now entered into a definitive agreement to combine in a merger of equals. It's a deal valued at about $3.7 billion. The merger expected to produce annual cost synergies between $150 million and $200 million by year 3. The new company will operate as Getty Images Holdings and will trade on the NYSE under the GETY ticker symbol. It's an interesting deal because the other thing that's happening is now you have a number of AI companies that want to license photos to try to capture the value of those. At the same time, there is a question, and I wonder how regulators will think about this. There are very few photo archives like this anymore. This is a very unusual and specific archive, less on the creative side. So there's a whole number of creative sites. When I say creative sites, you know, still images of all sorts of things that are used in B-roll on TV or in all sorts of things like that. But their archive of news images is actually super unique and doesn't really exist anywhere else these days in the same way that others did. So that's going to be an interesting one to watch in those of us in the news business.
I was thinking about this. What was the deal yesterday? There was a $4.5 million deal, or $4.5 billion deal with Steve McMillan, the former Stryker guy, that was announced yesterday. And when you're talking, yeah, I think he's a whole. When you're talking to Lena Khan later, I mean, you think it's any coincidence that there's deal after deal? I anticipate that there's going to be a deal announced every day at this point.
I think you're going to see a lot of deals.
Yeah.
I don't know about this specific deal.
These are small deals, but I feel like there's a lot of things that were waiting in the wings.
Yes.
And the timing is such now that because there's a new regulatory regime coming in, you're going to see deal after deal after deal.
I think we're going to see a lot of deals. I'm taking this particular deal. I don't think it's in that category, but I think there's going to be a lot more.
Yeah.
Very, very much so.
Coming up, we're going to dig in to President-elect Trump's tariff plan after the break. And a reminder that you can get the best of Squawk Box on our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We're coming right back.
everybody. President-elect Trump has denied reports that his incoming administration would be exploring a tariff plan only covering critical imports. The incoming president took to Truth Social to say yesterday, the story in the Washington Post, quoting so-called anonymous sources, which don't exist, incorrectly states that my tariff policy will be pared back. That is wrong. Joining us right now to talk about tariff options for the incoming administration is former White House Council of Economic Advisors, senior trade economist under President George W. Bush, Christine McDaniel. She is a senior research fellow at the Mercatus Center, and former Commerce Assistant Secretary in the Trump administration, Nazak Nikakdar. She is now Wiley Reins National Security Law Practice Chair, and welcome to both of you. Nazak, I want to give you the first crack at this. There was the story in the Washington Post yesterday suggesting that this was not going to be broad tariffs, that they would be more targeted. It would be every country, but it would be targeted at issues that are very important to the economy or the national security here. The incoming president himself pushing back against that. What does it mean? What does that mean for global trade?
Yeah, good morning and good to be with you. Look, President Trump has stated that that America needs to impose global tariffs to correct for widespread distortions in the market, right? And these are distortions that stem from China that have distorted prices across goods across the global market. So absolutely, this isn't a sector-specific approach. China's distortions and its impact on the market have been absolutely so widespread that global tariffs are absolutely warranted. The president is going to pursue widespread global tariffs on imports of goods, and there's a number of legal authorities that he could use to impose those tariffs, right? All the tariffs are going to be, one, to correct for trade distortions, and two, are going to be appropriate under the law.
But do you believe, Nazak, that this is something that is going to be implemented as such, or this is something that is going to be used to negotiate better situations on a country-by-country or, industry-by-industry basis?
I hear that question a lot, and the fundamental purpose of the tariffs are it's to correct for distortions, right? And the entire goal of tariffs is not to keep them on goods indefinitely. It's to impose tariffs, correct for the distortions, and once our trading partners decide to eliminate their harmful trade practices, right? We want free trade, but we absolutely, and the Trump administration absolutely wants fair trade. And the imposition of tariffs corrects for the distortions, and once our trading partners decide to remove the distortions, those tariffs can be removed. So it is a negotiating tool, but the premise is to correct for the distortions and then compel through the imposition of tariffs for our trading partners to remove their distorted trading practices to make the economy stronger. Our economy is being weakened because our trading partners are taking advantage of the U.S.'s free borders to bring their distortions into the U.S. market and to the global market.
Christine, that sounds like a perfectly reasonable argument to come through with it, but I think in reality there are questions about whether it can be done that easily, whether other countries will go along and say, you're right, this isn't fair, and we will change things. What do you think? Christine, hold on for just a second. I don't think we're hearing your audio. Guys, if we can double check that.
Nazak is absolutely right.
Christine.
We are on, we have distortions of our exporters face distortions abroad that foreign firms do not face here. To the extent we can, President Trump can use a variety of policies and tools, including tariffs, to correct for that. That would be great. The one thing though that President Trump did campaign on is lowering inflation, and tariffs will make it a little bit harder to do that. And it will just be that much more important then to cut government spending, fiscal discipline, boosting productivity and an energy abundant policy, as he has also talked about. So can it be used as a negotiating tool? Yes. Does it work? Sometimes, yes, as we've seen in the past, especially with President Trump and Japan and ag. But can also lead to a lot of retaliation and could work. It could also lead to a global trade war. But there definitely are distortions out there that we do need to address.
Yeah, I guess for markets watching this so closely, for business leaders watching this so closely, the question becomes, how far will this be pushed? How far is this a hill that the administration's willing to die on? If it comes back in the form of much higher inflation, if it starts pressuring that. And I guess, Nazak, I'll ask you first, is there a point where, okay, we say we're more concerned about making sure Americans aren't paying a lot more than making sure everything works out perfectly fairly?
Look, I've been doing, and it's a fair question, I've been doing, trade policy and tariffs for about 25 years, right? And what we see often, and more again, is that when you impose tariffs, it actually makes the domestic industry stronger. It actually not only onshores domestic manufacturing, but increases wages. So this notion that we're just going to have inflation by the virtue of the imposition of taxes really doesn't take into account the reality that wages are going to increase. So yes, will goods be slightly more expensive potentially, but that the rise in prices is the effect of correcting for distortions. Workers are going to get more money, so they can pay for those price increases. The other thing I wanted to underscore is that in the first Trump administration, when I served, and when we imposed tariffs, we actually didn't have that level of retaliation. The International Trade Commission did a study. They noted that the effect of inflation on the Trump's first-term tariffs were infinitesimal, if anything at all. And we also saw that our trading partners didn't retaliate. They actually got into trading agreements with the United States, USMCA, et cetera, to remove the distortions, the tariffs on steel and aluminum, compelled countries to impose their own safeguard measures to protect themselves from China's overcapacity and pull exports away from the United States, where they were flooding the United States because of the secondary effects of China's overcapacity. So what we see over and over again, increased wages, no inflation, and corrections by our trading partners to remove the trade distortions that have been harming the U.S. economy. And one needs to look no further than the first Trump administration to see how that's going to play out once again. And finally, I will add that in the first Trump administration, he imposed tax cuts to sort of offset some of that initial shock to the markets of the imposition of tariffs. He's talked about tax cuts again, and I think that that's going to be forthcoming too, to help ease some of the transition period as the administration imposes some more tariffs.
Christine, no question. We don't want dumping here when it comes to steel, when it comes to automobiles or anything else. We don't want dumping from subsidized industries overseas coming here and disrupting things. But there is an entire school of thought that if you protect yourself entirely from competition with other countries, that companies will not be as lean and as efficient and effective as they could be or should be otherwise. You also have the issue of thinking that we can push our partners on things, but maybe our trading partners on things, but if we are picking an America first nationalistic view on every single issue, and I'm thinking in the case of Japan, where Nazak pointed out that we had very good things that we worked out with Japan in the last time, from agriculture with working on some of these tariffs. Now we're telling Japan that Nippon Steel cannot come here and invest in a U.S. company and buy that company and spend money here. Is there a point where there's a little too much pushing that goes on, or do you think that this actually makes for better deals?
There's so much there. Well, first of all, tariffs do raise prices. Okay, to what extent is questionable, and especially for the downstream industries. So we can't necessarily just brush that off. The ITC study and others definitely showed that the price increases, but it wasn't disastrous. That said, can it be used as a tool for reciprocity? Yes, absolutely. In some cases, President Trump did that in agriculture, after we pulled out of TPP. But look, there is no perfect world. Hopefully, we'll get a little bit closer to that over the next 4 years. But whether or not we're ever going to get to, a tit for tat, one for one reciprocity, you don't want to hold out for that, until the very end, and then you end up dooming yourself in. You get the situation where then you end up closing yourself off to competition. The Nippon Steel deal, I don't think it's over yet, but that was an interesting potential opportunity for U.S. Steel to get a real injection of capital, technology, managerial expertise, that could really, help them to be sustainable moving forward. Look, if tariffs worked, the steel industry would be booming right now. They've had decades and decades of a lot of tariff protection, a lot of a variety of other protection from competition, import competition. So if tariffs worked, we wouldn't have a declining steel industry. So just keep that in mind. Will tariffs be disastrous? Probably not. But they're not going to be costless either. And yes, they do help save some jobs in those particular protected sectors. But but then everybody else who buys those goods have to pay higher prices. So it's not a free lunch. It never is. Trump says he wants reciprocity in trade relationships. That could be a very good outcome. We'll just need very good negotiators to make sure that happens and doesn't end up in the global trade war.
Correct.
Look, I
Very
want to
nuanced situation.
I just want to add that we have over 100 years of tariff policy in the United States, and we have thousands and thousands of instances where the U.S. government has imposed tariff to correct for distortions. And this notion that Trump is going to come in and sort of willy-nilly, impose tariffs and is going to create all those market disruptions ignores the entire history and experience that the U.S. has, the positive experience that the U.S. has with the imposition of tariffs to correct for distortions, make industries healthier.
But I think the market took solace, and Zach, we're way over time, and they're going to kill me. I think the market took solace in that Washington Post story yesterday, thinking that this was going to be targeted and really thought through. And when incoming President Trump said that that was all wrong and that was not the case, I think it raised a lot of questions about what happens. We're gonna have to have you back frequently to talk about this, because we're all trying to suss this out and see what it means. But I appreciate having both of you on today. Nazak Niktar and Christine McDaniel, want to thank you guys both for being here.
Thank you.
Pleasure being here.
Coming up, don't miss an exit interview with FTC Chair Lina Khan. That's coming up at 8:30 a.m. Eastern Time. It's only on Squawk Box. We've got so many questions for her about the last 4 years, what it's meant for business, and where all of this heads when she exits.
And coming up, we're going to talk about the changes at Boeing over the last year. It's been a year now since the door plug blowout on an Alaska Air flight. Squawk Box coming right back.
Now. It is just before 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. I've got a number of big stories to tell you about this morning. Shares of China's Tencent holdings, they are falling nearly 8% overnight in Hong Kong. This after the company was added to a list of, quote, Chinese military companies by the U.S. Department of Defense. Now, Tencent saying in a statement that its inclusion on the list was, quote, clearly a mistake. It said it's not a military company or supplier. It said the listing has no impact on its business. Meantime, Meta Platforms adding UFC CEO Dana White to its board. White, of course, a close friend of President-elect Trump. And Meta CEO Mark Zuckerberg has developed a relationship with White in recent years as his interest has grown in mixed martial arts. Meta recently donated $1 million to Trump's inaugural fund. And contract talks between 45,000 dock workers at ports on the East and Gulf Coast set to resume today. The Longshoremen's Union wants to drop past concessions on automation or the use of semi-automated cranes to load and unload containers from ships, arguing they pose a threat to jobs. So the debate between jobs and technology at the center here.
And it raises questions about the 67% raise that they had before. If they get that raise, I don't think they'd be able to have that raise if they don't have some automation that comes in. So there's a lot of moving pieces, and you've got 8 days until that strike would take place. And again, it's half of the ports in the country. Take a look at the futures this morning. Right now, the Dow and the S&P are still in the green. Dow indicated up by 45 points, the S&P up by 2, but the NASDAQ has taken a step lower. It's down by about 15 points right now. Not a huge decline, but it has reversed course this morning. Let's get over to Dom, too. He's been taking a look at this morning's market movers. Hey, Dom.
Good morning, Becky, Andrew, Joe. We're just going to start with shares of NVIDIA, of course, climbing higher this morning. The world's most valuable company. CEO Jensen Huang took the stage last night at CES in Las Vegas. He unveiled a host of new offerings, including a gaming chip based on its blockbuster Blackwell next-gen AI chip, new autonomous driving technology, and an expansion of its Omniverse product to include quote-unquote physical AI for things like robotics, which Huang says is a multi-trillion-dollar opportunity. So NVIDIA shares building up another 1 3/4% today. Walmart shares are also moving higher as analysts at Bernstein named the retailer a top pick in 2025, saying that while it's an expensive stock on a valuation basis, Walmart still has room to run as analysts see the firm continue to grow its e-commerce business here in the U.S. domestically. Walmart shares up fractionally in the pre-market trade. And we'll end on shares of Robinhood trading marginally lower as analysts at JP Morgan upgrade that stock to a neutral weighting from a prior underweight. They also put the target price at $43, up from a prior $20, saying that while Robinhood's user base and profitability is still attractive, its products and asset size still shrink in comparison to competitors, implying maybe a little bit of room for run, a little bit of maybe upside. But anyway, for Robinhood, markets down about 2/3%. Now for that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get full access to the detail and analysis behind those big calls and stories of the day. Becky, I'll send things back over to you guys.
Okay, Don, thank you. We'll see you in just a little bit.
And it's been a year since the door plug blowout from a Boeing 737 MAX 9, which was operated by Alaska Airlines. Joining us now, Ron Epstein, BofA Securities Senior Aerospace Analyst. It's an odd anniversary to be celebrating. I guess it's an excuse for us to talk to you, Ron, but I'm sure Boeing doesn't want to celebrate this anniversary, that it's been a year. But let's look back. There has been a response to that. That seemed like wasn't the only thing that happened. Maybe it was the straw that broke the camel's back, or maybe not. What progress has been made by Boeing since then?
Yeah, so when you think about what's going on at Boeing, they've got a new CEO. Kelly Ortberg is in. He's been in the process of bringing in some new talent, executive talent. When you think about Boeing, longer term and shorter term, I think longer term, what's on investors' minds is 1, changing the culture, 2, fixing the production system, and then 3, funding innovation. And one of the things we're watching, most importantly around culture, is the Boeing Defense right now has an interim leader, and they're doing a search for a full-time CEO for Boeing Defense. So let's see who they hire. And that might be a strong indicator on how culture change is going at the company. And then shorter term, investors have been thinking about, and this has happened the last 2 years, do we want to be long airplane producers or parts producers? And in the last 2 years, the bet was was airplane producers, but parts producers kind of won out. And that debate's going on right now in the market. And in fact, this week, we're hosting the Bank of America Aerospace Defense Forum here in New York, where we're going to have some of the best experts talking about supply chain issues and what's going on in the aerospace world to give investors a better view on, do you want to be along the airplane makers or the part makers?
I mean, culture change preceded the guy Ortberg.
Yeah, I mean,
the culture issues that you're talking about that needed change. This is a decade at least, and so of all the problems. How long do the problems go back now? When were the software? When did the?
Yeah, so if you go back to 2019, culture won't change overnight. I mean, there's no way it will.
We're still talking about changing culture, though.
Yeah, for sure. For sure.
That was just the most recent total fiasco, the door plug. What's? You think it's over in terms of shoes dropping? That was a centipede at least.
Yeah, I mean, in that case, when the door blew off the airplane, they left bolts off the door, right? I mean, the door literally wasn't bolted on.
Big problem.
Right? Now, the FAA has been expecting them, much closer. And this gets back to the stabilization of the production process. So we watch really closely what's going on there. And our hope is, our expectation is that they'll stabilize at a lower production rate. We're forecasting this year they'll deliver about, on average, off their production line, about 31 airplanes. We're hoping they end the year at about 38, that's 737s. And then next year they'll be at an average of 38 per year. But that's something we watch closely, and the FAA is looking for quality. And it all gets back to quality management on their production system. And that all gets back to culture, and that doesn't change overnight, and we don't expect it to change overnight. This is stuff that's gone back probably over the last 15, 20 years, and I would expect it to take at least 5 to 10 years to change.
I guess Boeing's been able to live off its phenomenal reputation and known for quality for how many years? How long has the company been in business?
Yeah, over 100 years, right?
And even with all the issues we talked about, those jets, if we still think of them, we wouldn't get on them if we didn't think that they were safe.
Yeah, and
they are.
And they are.
Like Six Sigma safe. You're talking about 1 Air and 8 million or something, but it's still too many when you're talking about that. So you think the culture is changing? You think Ortberg was the right person?
Yeah, we're seeing changes in the right direction. I mean, I think it's early innings, right? So
is it still early?
It's still early.
It's unbelievable when we're talking about really 5, 6, 7 years.
But Ortberg's only been there a year, not even a year yet, right? So it's still very early days for him. So I think for the market to make past judgment on him at this point, it's just too soon.
Was it 400 at one point?
Yeah, I think it topped out at 440. And if you look at production this year, Airbus will have delivered, when it's all said and done, around 770 airplanes. Boeing will have delivered only about 340. And part of that was the impact of the strike, but Airbus is really killing it right now. And something we watch very, very closely, you have other producers out there who are thinking about maybe it's time we jump in and do something bigger.
Who would be a third competitor?
Yeah, Embraer in Brazil could do it. You have other new startup companies like Jet Zero, who are looking at blended wing bodies, a whole different configuration. But
that's the game changer, to really have no longer a duopoly.
Yeah, that's right. And people don't talk about it a lot, but China has Comac, the C919, that's been successful.
Sell us stuff from Tencent for gaming things, right, or components.
But the Chinese market is a large market for aircraft in and of itself, right? Sure. So that's 300-400 airplanes a year. So if they supply them to themselves, right, that would impact demand for both Boeing and Airbus. Yeah.
All right, Ron.
Fascinating.
It is. Normally, Airbus. I don't like, but hey, I like a bunch of safe jets. Airbus are pretty nice. Typical jets.
They're all safe.
Yeah. Go Airbus. Give us a bunch of jets. We need to go places.
Go Boeing.
Go Boeing. Go Airbus. That's what I'm saying.
Yeah.
I usually say I don't like seeing Airbus deliver twice as many jets as Boeing, but hey, someone's got to do it, and they're beautiful planes too, and quality somehow from France. Coming up, will adding crypto to your 401k help boost returns in 2025? We'll take a look at strategies to maximize your retirement plan. You have great wine. And in the 8 a.m. hour, an exit interview with outgoing FTC Chair Lena Khan. Squawk Box coming right back. The futures right now, as you can see, we've got a little bit of green. See how long that lasts for on the markets and what options are saying about equities. Let's bring in Amy Wu Silverman, head of derivative strategies at RBC Capital Markets. We don't want it to be obvious. It is, but it's still important, and it's the beginning of the year. Seasonality plays a big part in how options behave and how markets behave.
Yeah, it totally does, and I agree. It feels a little bit obvious, but it doesn't mean that doesn't end up being what happens. Yeah. Joe, when you just look seasonally, last 5, 10, 15, 20 years, January is not a great month. It tends to be a month where you get VIX rises and market sell-offs. You know, I kind of like to joke it has a little bit to do with New Year's resolutions. The portfolio managers out there all say, we're going to be more disciplined, we're going to be more cautious. And then, 3 months later, some FOMO momentum takes the wind and we can throw that all out the window. But right now, not as much of a sanguine outlook as when we started the beginning of December.
Tried to talk about resolutions right at the beginning of the show. No one wanted to talk about resolutions. So even you are bringing them up as something that affects trading, because even market participants, in the way that they trade, they start the year and it lasts how long? 10 days. 10 days. I think
it's the same as the average diet.
There's an actual day if you look it up. I guess I've seen it where people give up on their New Year's resolutions. You do point out that the risk has not been a market sell-off, but in missing out on upside. That's the way it has been. Is that the way it's gonna be?
So every year we get another 20% rally in the S&P. I'd say your baseline makes that a little bit tougher, but I wouldn't count it out. And one thing we've seen post-COVID is that right tail risk has been just as serious as your left tail risk. Now you throw into this year the deregulation potentially around cryptocurrency, around financial regulation, and I think if you look at the consensus narrative right now among derivative strategists, it's that volatility is too low, VIX should be more reactive on the downside. I'm not saying I disagree with that. I just think we have to continue to pay attention to that right tail, because when that spirals, you get that volatility up, spot up, just like we saw in 2023, just like we saw in 2024. To me, those odds are just structurally different now than they were pre-COVID.
So Quitter's Day is coming up. It's this Friday, the second Friday in January. It's when people traditionally give up, or they most frequently, because they haven't thought through like the longer term implications. Yeah, I can do this for a week or two.
It's options traders too.
We'll see that during earnings season when that benchmark FOMO, that need to participate, starts to overweigh your evaluation discipline. I think one of the big themes everyone keeps talking about is we need to see a market breadth widening, but we're still suffering through the same paddling duck market. I like to call it that because it looks smooth and calm on the surface, right? But you've gotten these huge violent rotations, maybe down in healthcare, up in financials, and so that index level volatility continues to look calm. Your VIX isn't really signaling much, but you throw Donald Trump into the mix and the changes in fiscal policy, and I think that dispersion is going to really impact the market.
Mergers and acquisitions are probably going to be back. You say at this point it's not priced into the option market. Why not in the option market? Why not? Everything else gets priced into the option market. Why is this not priced in? And should it be? Or is the option market right? It shouldn't be priced in.
So I think this is one of the most interesting opportunities in options, and one of the reasons I think it hasn't been priced in is the last time you saw a really big M&A wave was actually like around 2010. So it's almost like the wheels are a little bit rusty for the folks who haven't gotten on the bike for a long time. And this is kind of a unique pocket, right? It's not like other themes that happen every single year. When you think about the wave of M&A, that usually gets priced in the options through term structure, so how the future looks to the present, and through skew, how the downside looks to the upside. Neither of those are pricing in any wave of M&A, and yet we've been talking about it for a while. So to me, one of the biggest deployments you could do is using option strategies to play potential M&A.
So it's coming then?
It's not priced in, but if it does come, that's an opportunity to use options to leverage those M&A scenarios.
Let's go back to, just so I understand it maybe a little bit better, the divergence between the volatility in equities versus rates. Can you explain that to me so I understand it better?
Yeah, so when you look at all different kind of instruments, you have treasury volatility, you can use the MOVE index as a proxy for that. You have equity volatility, you can use VIX as a proxy for that. We measure the ratios of those divergences. So meaning when you see equity volatility pretty sanguine, but then rates volatility is quite high, you know, we're talking about the same market. So somebody is right and somebody is wrong. And one of the reasons we like to use those cross-asset metrics is you could argue that rates is driving everything, right? Rates isn't just driving the rates market. Rates is driving every single market. So the big question right now is why is the rates market saying there's more volatility and uncertainty ahead relative to the equity market? When you back test that over time, someone's right and someone's wrong. It has not always been that the rates market has been right. But usually those divergences happening means one of the narratives has to fall in the next few weeks.
Well, that would be bad. I mean, if the rates are right, then it's setting us up for something scary in equities then. Right?
And I would say that is the common narrative right now for derivative strategists who say, you know, watch your downside, potentially put on trades that are protecting your downside. It's because you're starting to see that divergence kind of red flag signals that we didn't get through the last half of last year.
The rates volatility has been all rates moving higher. Is it? It's not like it's just been down, up, down, up. It's been up, 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 up ever since the first cut, since the 50 basis points.
Yeah, and one thing that our own interest rate strategists have been saying, I think we talked about this last time, is one of the kind of common mispricings wasn't necessarily about, you know, what the next cut is going to be. It was just how short and shallow it was going to be. If we have that wrong, meaning ultimately it's just the terminal that's higher, that differential is being priced more into rates volatility, so treasury volatility, than it is into equity volatility.
Right.
Now, again, you have this problem of the maximum being such a big proportion of the equity market that tends to kind of influence everything, and then we don't get a clear signal.
Okay. Hurts my head. Amy, thank you. No, I like it. I always like it. You know, I always like it. I always like it. My New Year's resolution is to understand it. I'm going to give up on Friday. Thank you.
Thank you.
Okay. Coming up, a CNBC investigation into what happens when the Silicon Valley dream of big payouts for early investors doesn't pan out. Then later, the implications of tariffs and trades with our friends to the north when Prime Minister Justin Trudeau steps down later this year. Squawk Box. We'll be right back.
Time now for today's Aflac trivia question. Which president is on the $2 bill? The answer when Squawk Box returns.
money.
And now the answer to today's Aflac trivia question. Which president is on the $2 bill? The answer, Thomas Jefferson.
The Silicon Valley story most investors like to promote has founders and investors teaming up to launch big ideas and, when it works, making millions or even billions of dollars. But there's a darker side that we rarely get to see when startup founders and financial backers clash, going to battle over control, money, and reputation. And John Fort joins us right now with more on this. Hi, John.
Hey, Becky. Yeah, this next story is exactly that kind of battle, and it's unique in that it was exposed in court, captured on camera. And while the characters might be new to you, insiders tell me the plot that unfolds, it's all too common. Here's the story.
At the center of this battle, the startup TopTal, short for Top Talent. It connects companies with highly skilled freelancers. In one corner, founder Tasso Duval.
I started TopTal in 2010.
In the other corner, financial backer Dennis Gross.
I was also giving them $1 million at a very fragile point in their history.
More than a decade ago, the two men were on a mission together to turn the tiny startup with less than 50 employees into a powerhouse. Years later, Duval says TopTal has about 600 employees. By 2021, court documents show the company was generating more than $200 million in annual revenue and was valued as high as $3.6 billion. But in 2023, the two men became opponents in a courtroom. Behind the scenes, Gross orchestrated what he called a cancer patient strategy.
What do you think of it? Making it so crippled that they could steal the company.
This is just a preview. We're going to have more on Closing Bell Overtime. You can go to CNBC.com to watch the full story. It includes courtroom footage, evidence that gives an inside look at this saga. But, I mean, I moved to Silicon Valley about 25 years ago. This is maybe the wildest startup story.
Because what? I mean, you've seen a lot of crazy stories.
I've seen a lot of crazy stories. Tasso Duval is his high school dropout. 15 years ago, he starts this company, structures it as an LLC that he controls. From the very beginning, it's pretty profitable. But a couple of years in, he takes some financial backing, structured as a loan that converts to equity if he raises a round from venture capitalists, which is pretty common. Thing is, he never does raise that equity round, pays back the loan with the 4% interest. The financial backer, Dennis Gross, in court documents, he says he felt like this wasn't fair. He ends up setting up a competitor company secretly, poaching employees from TopTal while attacking Tasso Duval's reputation in the press, and then this gets exposed when Duval takes him.
And on the other hand,
yeah, exactly.
I mean,
is there another?
It's Tuesday.
Investors expect that they're going to get a return.
You don't need to do another hand.
Right?
I was just wondering if there was another hand.
Of course, Tasso Duval won the first round in court. Dennis Gross is appealing. This is so unusual because usually the growth at all cost strategy means that founders take on all of this money, and when things like this happen, the investors say, well, why don't you just settle?
So this is unusual, you said at the top. This is very uncommon just because of what you see. How often do rifts like this happen between the founders and the backers?
They happen a lot. I mean, look at what's happening with OpenAI right now, right? And you've seen a little bit of it. You got an unusually powerful founder and an unusually popular investor in Elon Musk, right? We saw it with Uber, right? There are some times when this peaks over, but very seldom do you get a full court battle with all these details coming out.
Okay, stay where you are because this is another tech story you might even have some commentary on right now. We have some news just coming across the table. Facebook's parent Meta, it is ending its current third-party fact-checking program in the United States. Will instead begin moving to what they're calling a community notes program. It's similar to the one that Elon Musk has implemented on his platform X. Meta will be moving the, quote, trust and safety teams that write content policies and review content out of California into Texas and other U.S. locations. The company says it will take a more personalized approach to political content so that people who want to see more of it in their feeds can. And that's a very interesting move on top of both the move to add Dana White to the board, which just happened in the last 24 hours, add to that potentially maybe the inauguration
And the change in the policy officer.
and getting rid of Nick Clegg, and I mean, there's a lot of movement that would suggest this is a true move. I don't know if it's a move for the entire platform to the right per se, but politically,
it's a move away from the left.
It is clearly a move away from the left by getting out of California and everything else.
We've kind of seen this movie before going both ways, and 4 years is a long time, and no one wants to be left out in the cold. I thought about this yesterday, and I won't bring it up, but when we were at GE, we were owned by GE, and Obama came in. You saw Immelt's currying a favor with it. Really launched the whole eco-magic, whatever the hell that was. That entire movement was based on currying favor with Obama, and basically almost bankrupted the company. And Immelt, went down in flames after it all happened, but. That had a lot to do with getting in tight with an 8-year Obama administration. Didn't help the company very much so when it was all said. It's coming back, Colt, thank God. But, I mean, look at that foray into...
So are you suggesting this is a good idea or a bad idea then? Because what you
bad idea back then, it's a good idea.
Well, but that's why I'm asking you this question.
Depends on who you're currying favor with.
Well, it depends on who your regulators
favor
are.
with socialists, it's not a great idea.
Yeah, but it depends on who your regulators are. In some ways, we've been talking about this over the last couple of days too, John. The idea that tech companies, some of the big tech companies, were very proud of the fact that they were on the opposite coast of Washington, D.C. and tried to keep their distance. You saw changes over time with Microsoft after it went through the huge anti-regulatory issues that it had. They've dealt with things differently, and I wonder if some of the big tech companies are kind of taking note of that and trying to do the same.
I think so. This reminds me of seasoning the soup, right? When you don't have a recipe. It tastes like it needs a little bit more of this.
Yeah.
That could be a mistake.
Oh, it's a little too much, right? They overcorrect in one direction versus another. These platforms are so complicated. They got billions of people on, or at least, Facebook, Meta does. They don't know exactly what this is going to do, but they're going to try this out, and sometimes it does some different things in one country than another, but they've got to have a policy.
Where do you stand on this idea of community notes? Because one of the things that, so if you remember, if you go back in the history of this, Facebook was out there exposed early on because there were people putting misinformation on their platform, and then maybe you would argue they overcorrected by building an entire sort of content team to try to police everything. And this appears to be sort of the reverse of that, to say, you know what, we're actually going to go back to the idea that we're going to rely on the community to do this, right?
Misinformation can't be in the eye of the beholder, and that's what it was at Facebook.
I doubt that's what this is. It just doesn't make sense to me that they'd be going to, okay, we're going to go to real people putting notes on these things. So much is about AI. Where's AI going to come into this for things getting flagged to the community or checking the community? I want to know more.
But do you want to rely on the quote-unquote community? That is actually a fundamental question. Elon Musk has said that that's how he's obviously done it, and he's done it without.
You don't want to rely on the editorial. Andrew, you don't want to rely on the editorial board of a legacy media operation to decide what's misinformation. You definitely don't.
Well,
That's why media's at 6% approval at this point, because that's the way it's been. I'd much rather have a influx of common wisdom come in to tell me whether something is true or not what the Washington Post editorial.
Well, take the Washington, take the folks who you don't like out of the.
There aren't any left.
Well, that's its own.
There aren't any left in legacy media.
Humanity broadly?
No, but legacy media.
There is this. There is the idea that, first of all, the stuff that trends online is typically the most outrageous stuff, right? Like that's how it works.
Right.
Clickbait. And the second component part of this is that when you have this sort of clickbait, typically the stuff that's wrong trends farther first, and it's very hard to put the genie back in the bottle, the toothpaste back in the tube, whatever it is. Even when you get the community note or whatever it is on the item after the fact, the number of people who see the correction versus see the first story is usually night and day.
This goes all the way back to Mark Twain, and I'm going to not quote him perfectly, but he said something about how a lie will run around the world before truth gets out of bed and puts the pants on.
But the alternative is so much worse.
Well,
trying to suppress it in a consistent, logical, or fair way in the first place.
And this is one of the great questions of our time, folks.
It's a social experiment, right?
It is. We're in it right now.
Thanks, John.
It's a simulation. Maybe not.
I think it is.
When we come back, New Hampshire Governor Chris Sununu.
Matrix.
Maybe he's part of the simulation as well. He's going to join us to discuss President-elect Trump's economic agenda and what is ahead for the new Congress. Plus, you do not want to miss this. Outgoing FTC Chair Lina Khan in a first on CNBC interview. It's her exit interview to discuss the last 4 years running the nation's antitrust agency and now how it may shift under the next administration. We've got that in just about an hour. Don't go anywhere. We'll come right back.
Some breaking deal news. Getty Images and Shutterstock announcing that they have entered into a definitive agreement to combine in a merger of equals. That deal valued at about $3.7 billion. The merger is expected to produce annual cost synergies of between $150 to $200 million by year 3. The new company will operate as Getty Images Holdings and trade under the NYSE, trade on the NYSE under GETY.
When we come back, Justin Trudeau stepping down as Canada's Prime Minister. We'll talk about what it means for trade and tariffs under the incoming Trump administration. Futures this morning have been in the green. Dow's actually up by about 90 points. NASDAQ has bounced in and out of positive and negative territory. Right now it's basically flat. Got the S&P futures up by about 8. Squawk Box will be right back.
side wealth.
Welcome back to Squawk Box. Canada's Prime Minister Justin Trudeau announcing plans to resign after nearly a decade in power. Trudeau says that he will stay on as Prime Minister until his Liberal Party picks a new leader later this year. Joining us right now to discuss the implications for the U.S., including trade, tariffs, and so much more. I want to bring in Bruce Heyman, who served as U.S. Ambassador to Canada in the Obama administration. He is author of The Art of Diplomacy, Strengthening the Canada-U.S. Relationship in Times of Uncertainty. And boy, are we there right now. Mr. Ambassador, thank you for joining us. Maybe one of the first casualties of a trip to Mar-a-Lago, Ambassador.
Well, while those dots look to connect, the reality is that in Canada, prime ministers of either party, conservative or liberal, have about a 10-year term. And while they've been reelected various times, and it isn't a term, but a 10-year life expectancy as prime minister, and Justin Trudeau is at about that mark right now. And so it's not surprising. Also in a post-pandemic world, we've seen a lot of changes in government in the Western world, and Canada is no exception, having experienced some of the same issues that we faced in the United States with inflation and cost of groceries and rising levels of government debt and those kinds of things. So look, he faced a battle within his own party, and he addressed that directly when he addressed the Canadian public. And he knew that the election was scheduled to take place this year, and he knew it would be very difficult for him to survive that.
Okay, so but let's talk about the implications of this, how the politics change in Canada, how that changes the relationship with the United States.
So let's just go at a high level, first of all, for all of Americans. The U.S. has no better partner, no better ally, no better friend in the entire world than Canada. And we're lucky that Canada is our northern neighbor, but if we went around the world and said we could choose anybody, I think we'd go back and choose Canada again. And so how it will change, I think it's a good moment, actually, in some respects, that we'll have a new leader in the United States, a new prime minister in Canada, and it gives us an opportunity to sit down and have a dialogue and build on what we have done so successfully historically in building this incredible relationship. Over 2/3 of the United States their number one export market is Canada. And I have traveled with Republican governors and Democratic governors throughout Canada in promoting trade. Most recently, even this last year, with Governor Pritzker from Illinois. So I think the opportunity set is quite large here, and I think it's going to be a good moment as a reset moment for two new leaders to sit down.
When you think about this, though, what is the take inside of Canada about some of President-elect Trump's commentary as it relates to Canada being the potentially great 51st state of the United States? What does that do to the psyche of all of this?
Well, look, there's a range of reactions. Some of those reactions are thinking it's humorous. Others, take it as a compliment. You think we're so valuable up here, you'd like us to be part of the United States. But the reality is the Canadians are very proud people. They are while next door, and some Americans may think they're just like us, they're not. They are a unique culture. I've experienced this on both sides of the border in business and politics. And I will tell you, I think it just energizes and gives the opportunity for Canadians to come together as one country and to have that dialogue with the United States. But I think everything that Donald Trump would like to see get accomplished with Canada can be done diplomatically and can be done behind closed doors and a conversation with new ambassadors, with new Secretary of State coming in, Marco Rubio, and gives a real good opportunity for the United States to do some level setting. Yeah, sure, there are some small areas of concern, but for the most part, this is the richest relationship between two countries in the world.
Is there anything in any joke, they always say that there's some truth. So when President-elect Trump says that the trade imbalance with the U.S. basically subsidizes a lot of what happens in Canada. And that's the point he's making, that being next to the most powerful economy on the planet, it has been very lucrative for Canada. In certain ways, you say there are small areas that aren't fair. Is that all it is at this point, Mr.
It was
Ambassador?
interesting, Joe. I sat down with a foreign service officer and I looked across the table at her when I became ambassador, and I said, what are the challenges that we have with Canada? And after a pregnant pause for a while, she said, there are none. And I said, there are none. Well, we have Keystone Pipeline, and we have, softwood lumber, and we have the Detroit-Windsor Bridge, and who's going to pay for that?
Milk,
Milk,
right? How much?
milk.
Yeah.
We have milk and dairy. And she said,
Real
no,
milk.
sir, we
Not
just
almond
have
milk.
we just have opportunities. We just have opportunities. Now, the trade imbalance that people are referring to is substantially energy. And look, we need that energy in the United States, and we benefit from this strong relationship. And the energy that we get from Canada is of all types. It's from renewables to fossil fuels, and it's from hydro to solar. And so, look, I think the opportunity set to expand the energy relationship is there. But, this trade deficit is small in terms of the total size of the relationship. We have a multi-billion-dollar daily trading relationship and investment relationship that creates jobs on both sides of the border. And our trading relationship is literally that math that 1 + 1 is 3. It's better for both of us. We create jobs, and we're better as a result of it.
Okay. Ambassador, we're going to leave the conversation there. I want to thank you. Appreciate it.
Thank you. Pleasure.
Okay. Coming up, should Bitcoin be part of your 401k? We've got that story ahead. And in the next hour, you don't want to miss this, a wide-ranging exit interview with FTC Chair Lena Khan. All that's happened over the last 4 years and what may happen over the next 4 years. Squawk Box coming right back after this.
Bitcoin began the week trading back above 100,000. It's right around there now. And some analysts see the crypto asset rising to $180,000 or higher, it says here, in 2025. But there's still skepticism among investment advisors if assets that are as volatile as crypto are good for a 401k. Sharon Epperson joins us now with more. Morning, Sharon.
Good morning, Joe. Crypto was one of the fastest growing categories of exchange traded funds in 2024. The most popular of the funds, the iShares Bitcoin Trust, ballooned to over $50 billion in total assets. Right now, crypto is a small part of the 401k market, but it could grow substantially in 2025. The Security and Exchange Commission's approval of spot Bitcoin and Ethereum ETFs last year was a key change for the industry. Crypto investors now have new options in various types of accounts, including individual retirement accounts and brokerage windows for plan sponsors that offer a self-directed option for 401ks and employer-sponsored retirement plans. Views are mixed about how much crypto to add to retirement savings or if it's wise to add any at all. Some financial advisors say crypto should be a part of a 401k plan because it's a non-correlated alternative asset class and a hedge against the devaluation of fiat currency as central banks increase liquidity. Others point to volatility and risk as reasons to be conservative. Since crypto can significantly increase risk, a retirement nest egg could suffer a large loss at the wrong time. Now, it's important to also take advantage of other strategies to boost your retirement savings this year. You can contribute up to $23,500 in a 401k and other employer-sponsored plans in 2025, and that's $500 more than last year. You can make a catch-up contribution of $7,500 if you're 50 or older. And you could supersize your savings if you're 60 to 63 years old with a catch-up contribution of up to $11,250. For a lot more tax tips and retirement savings strategies, sign up for my free Money 101 newsletter series at cnbc.com/Money101. Joe.
How does the brokerage window option work?
Well, if you look at the largest 401k provider like Fidelity, they have something called Brokerage Link, and that allows you to invest in stocks, funds, ETFs, have a much wider array of options than you would the traditional fund lineup of a 401k. Now, not every plan, every company is offering that through their Fidelity 401k plan, but that's a way to do it.
Okay. All right. Sharon, thanks.
Sure.
Coming up, news just out from Facebook parent Meta. It is ending its current third-party fact-checking program in the United States. We're going to get Wall Street reaction to the news. The Squawk Box will be right back. You can see right now, shares are off by about 0.4%.
is potential.
Welcome back to Squawk. We have some news out that's, well, causing a lot of not controversy. I would say conversation, for at least for now. Maybe controversy. We'll see. From Facebook's parent Meta, it is ending its current third-party fact-checking program that's ending in the United States. It's going to instead begin moving to a community notes program that would be similar to the one on Elon Musk's platform X. Meta will be moving the trust and safety teams that write content policies and review content out of California as well. They're going to be moved into Texas and other U.S. locations. And the company says it will take a more personalized approach to political content so that people who want to see more of it in their feeds can do so. And we're looking at the stock off marginally, but I don't think it's necessarily a function of this. We should also say Meta saying it has started using an AI large language model to provide second opinions on some content before it takes enforcement actions. And I think it's got a lot of people talking. We should show you, Mark Zuckerberg put together a video accompanying this announcement to explain it, and we'll show you a piece of it right now.
After Trump first got elected in 2016, the legacy media wrote nonstop about how misinformation was a threat to democracy. We tried in good faith to address those concerns without becoming the arbiters of truth. But the fact-checkers have just been too politically biased and have destroyed more trust than they've created, especially in the US. So over the next couple of months, we're going to phase in a more comprehensive community notes system.
All right, joining us right now is Dan Flax. He is Neuberger Berman's senior research analyst. Dan, I haven't seen the entire video that Mark Zuckerberg put out, but he basically makes it sound like it's legacy media's fault for what they were actually doing during some of these things. What do you think of the changes that are taking place right now? Is this a fair and accurate reflection after the elections and the results?
Good morning, Becky. I think the company is trying to figure out a better way to balance the respecting of all different views across the spectrum versus trying to remove some of the pernicious content. I think we'll see how the changes play out. I think this is going to be a journey. I think they're going to constantly, they and others are going to constantly make tweaks and adjustments. I think the most important thing, if we step back, is are they able to generate value for users on one side and then value for the advertisers on the other? So looking ahead as they make some changes here, if we see, for example, that the level of pernicious content and hate speech picks up meaningfully and advertisers pull back, I suspect the company would then make course corrections. But I think we're in a new phase here, certainly to CEO Zuckerberg's comments. With the change in the administration here, I think Meta is responding and trying to look at things a little bit differently. It'll take time, though.
I mean, look, this is a work in progress, trying to find out, look at it as a social experiment, and probably always has been with Facebook, even before Meta platforms. It's a new form of media, it's new reality, it's a new way of dealing with things. Does it surprise you at all to do this? Is this something Wall Street wanted to see happen?
I think Wall Street is looking for Meta to continue to evolve its policies. Clearly, if you have human oversight, which is too biased and moving too far to one side, that is not appropriate. Keep in mind, of course, different communities, different countries, different markets that Meta operates in have a variety of different political and, of course, other viewpoints. And so I think there's to your earlier point, there's a continued role for so-called legacy media. I think what we're seeing here is just this continued evolution of all the different platforms to pull in bits of content from different places. They're going to have to do a better job on making sure all voices are heard. At the same time, the platform has to be safe. It has to be somewhere that users want to engage and to share and to bring more of their time to it. If they're able to do that successfully, the company can continue to grow.
Well, that was going to be my question. That was going to be my question to you, Dan, which is to say that I think that there's some community of folks who are very happy with the way X is playing out, the variety of content you can see there. There's other folks who say it's too much, that it's you know, that there's stuff there, and I occasionally will open it, and it's complicated, especially if you have kids. Facebook has not been that, at least for the last couple of years. At least they've tried to avoid that. The question is, what do you think it does to the user experience on one end, but then on the other end, what you think it does to the prospect of any kind of regulation?
For the user experience, I think there's a large cohort of users that will be happier with a lot less direct oversight from the company and the traditional methods it's used. For others, Andrew, I would expect there to be concerns about divisive content. I think you're always going to have that push and pull across Meta and the different platforms. And broadly speaking, I think the importance of free speech is obviously critical. And broadly speaking, these platforms need to remain healthy environments for people to engage. X has a different set of issues in terms of trying to surface content. Obviously, under the ownership of Elon Musk, he's continued to make changes. We'll see how that plays out. If I think about where this is going, it's going to be about, will Meta be able to add value in areas like generative AI and evolve the user experience, even with the new boundaries, as it were, around speech. I don't think this dramatically changes things in the near term. What will matter, though, as I look out over the next 6 to 12 months and beyond, is whether this is going to be viewed as a vibrant, safe place for users, and then, of course, the advertisers. X has struggled with some of the advertisers going elsewhere, and were Meta to see a problem with some of their big advertisers, both here in the United States and more broadly globally, then they could change course.
That's interesting. This company has been caught in the crosshairs time and time again politically, I guess.
Well, they're doing it in the U.S., by the way, not in Europe.
Cambridge Analytics, you're thinking through that, then you think about the pressure, the direct pressure they got from the Biden White House to change things that were being put up during COVID. Dan, thank you for your time this morning.
Maybe he told Rogan.
Yeah.
The FBI told us to bury the laptop.
Right. Yeah.
You don't need a small group of people deciding what's true and what's not.
Yeah.
The other system is terrible. The community, it's just the best we have.
It's like capitalism. All right, it is just after 8 a.m. on the East Coast. And, well, it's the best system out there.
Yeah, it's great. It's great.
It's not perfect, but it's the best system out there.
Kind of is perfect.
There are soft, rough edges that need to be softened
Usually
from time to time.
when you tamper with the purity of it.
Yeah.
It's all the work. It's all that sets prices. It does what it does. The world is, there's scarcity in the world.
There are people who get left behind because they don't have the capabilities that the market is looking for. That
obviously, it's the only thing that generates the prosperity.
The largesse of capitalism you want to take care of.
You either divide a smaller pie or you
I'm not questioning capitalism. I'm just saying it's not.
I just don't think it's terrible.
I don't think it's terrible either. I think it's the best system out there, but it's not perfect. All right, it is 8 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Gonna make you take a picture of everybody. Thank you.
There we are.
Among today's top stories is the Defense Department adding Chinese tech giant Tencent to a list it keeps of Chinese military companies. That led shares to fall 7% in Hong Kong trading. Tencent labeling this move, in their words, clearly a mistake. It could eventually prevent the Defense Department from buying any Tencent products or services, and certainly sends a message to U.S. companies about doing business with them. Getty Images and Shutterstock are merging to create a $3.7 billion company focused on stock images, video, music, and other content. Getty Images stockholders will own about 55% of the combined company, with Shutterstock shareholders owning the rest. And you can see Shutterstock shares up by close to 25%, but that's nothing when you look at the gains on a percentage basis over at Getty Images, up anywhere from 42% to 77% because it's a gain of $1.11. And Apple is looking into adding new countries to its popular news app. That's according to a Financial Times report. It says that the tech giant is also considering beefing up locally focused news coverage in the United Kingdom.
Let's get to Dom Chu with a look at this morning's pre-market movers. What's moving, Dom?
All right, so Joe, Becky, Andrew, speaking of those moves that we're talking about here, we're also looking at shares of Apple right now, sinking as Moffett downgrades the stock this morning to a sell rating from a prior neutral. They're cutting their price target to $188 from $202. Analysts there are saying that antitrust issues dimming China prospects and increasing competition are going to drag what was once likely a winner in that race to monetize artificial intelligence. So Apple shares down about 1%. Also, shares of Tesla sinking today as Bank of America downgrades that stock to a neutral from a prior buy, but they raised their target price up to $490. It was at $400. Analysts there are still remaining cautious on production and pricing of Tesla's robo-taxis moving into the new year. B of A also noting that potential risks of a regulatory environment not being as favorable as Tesla expects could be a problem as well. Tesla shares down 1.5%. And then shares of Bank of America higher over 1% right now as both HSBC and UBS upgrade the bank stock to a buy from a hold. HSBC is citing the big bank's recent pullback as a buying opportunity, and UBS is calling the stock an overlooked winner in 2025 ahead of a looser regulatory environment, or what's perceived to be one. Those shares are up 8% or 1% right now. For that and other top calls of the day, just head over to cnbc.com/pro. Subscribers get all the detail and analysis there behind those big calls. Andrew, I will send things back over to you guys.
Okay. Thank you very, very much. When we come back, the Lena Khan exit interview. We're going to talk to the FTC chair about everything that's happened over the last 4 years and what she thinks of the politics and maybe competition in the next 4 years. But next, we're going to speak with New Hampshire Republican Governor Chris Sununu about the GOP's new era in Washington. Don't go anywhere. Squawk Box coming right back after this.
/30.
Our next guest joins us now to weigh in on President-elect Trump's economic agenda and the reordering of power in Washington. Let's welcome Governor Chris Sununu of New Hampshire. His fourth and final term ends this Thursday, does it?
Two more days, 48 hours, and then I become a real nuisance for everybody. Then I can really shoot my mouth.
You could be a contributor here. We might offer you that contributor here. I would love to have you as a contributor here. Break the mold.
I'm really cheap. I'm really cheap. Although I drove into your.
That's TMI. That's TMI. I don't need to know anything about your personal life, but this what we saw with Mike Johnson, and we remember. You were here Friday. Remember, Becky? I was talking with Jake Sherman about, remember the last speaker, just that complete morass, 15-vote mess that we were in?
Kevin.
Said, right.
He was here yesterday.
Yeah. So with Trump, where he is and his, people out there will get mad if I say stature, but he does have stature.
Sure.
Now
No,
in the
without a
Republican
doubt.
Party. And the haters are going to hate. But I said, it's going to be different this time. Is he going to be able to literally be a whip and make this happen? Because people were saying that Mike Johnson was going to be 8, 9, 10 votes short, 30 votes short.
It's going to work.
He made 2 phone calls and it happened.
Yeah, it's going to work because, again, you have Tom Massey and some folks that are real ideologues, but they're not completely irrational like Matt Gaetz was, right? Some of the irrationality has gone out. Ideology I think can be managed by Speaker Johnson. Kevin was dealt a really bad hand. Kevin's great. I think he would have been a phenomenal speaker if he would have stayed and they would have kept him in. But he was dealt a really bad hand, and they, I think, got really bad deals on the rules. So I think what the solution is this. Trump's going to get a lot of what he wants, even with thin margins. But if I were Massey and some of these guys that want to, vote no and really hold Johnson's feet to the fire, you got to put on paper what you want. You got to be really clear about the strategy. It can't be we want complete entitlement reform tomorrow, or we're not going to move forward. That's not practical. I think these guys are practical, and I think they can lay out a strategy, find that middle ground, and understand in government you can't get everything you want.
Kevin McCarthy was here yesterday, and he said more than them being ideologues, and obviously he's still smarting from what they put him through, is they are negotiating for their own interests in terms of what you want. And I want to be on this committee. I want to be the chairman at this committee.
I want to be famous.
Yeah. Look, and by the way, that's the easy stuff. You want to be on a committee, put them on a committee. Who cares? The committee's not going to do a whole lot.
Except that you irritate the rest of the caucus, who has been there supporting you and who is maybe doing things by the books.
Right. I think the biggest opportunity for Congress is, and I'm a believer in DOGE. I'm a believer in what they're trying to do fundamentally. If they nip around the edges on a program here, a program there, stop wasting our time. They got to really go after it. They got to say, we're going to give the money and the control back to the states. We're going to understand what federalism is all about. We're going to kind of lean into those ideals. And I think Trump believes in that. I think the DOGE folks believe in that. I think a lot of folks in Congress believe in that, and especially the senators. So there's opportunity there. Again, you just can't get everything you want at lightning speed. I do think that there's a different hand being dealt to Johnson than there was to Kevin. I think Kevin was just very unfairly dealt with, unfortunately. I think the Speaker and Trump will have a lot more cachet. There was no Trump. I mean, Trump was out there as a guy running. We think he's going to win, or maybe not, who knows. Right. But he wasn't in there today. He's in there today and can really drive.
Well, he had lost 20 and 22, and there was that perception that you go with Trump, you're going to be a loser, and then it turned into 7 swing states and a popular vote, and
that's real.
The House and the Senate, it's all real.
And that's why I think what he does
312 electoral votes. Yeah. What really got me, and the irony of it occurred to me yesterday. So you got these high-minded guys, with Johnson. I'm going to stand up to this spending. I'm going to do that. I'm so virtuous about. No, this is all about me and the American people. And you go. Trump says, well, if you do that, you're going to be primaried. And they go like that, and it's like, I could... It's about them keeping the
I don't really understand.
The minute you pull the rug
of a job anyway.
That's what I mean. But so you threaten them with not being in the House anymore, and suddenly it's then you see who it's really about.
That drives me crazy. I mean, look, this is public service. It shouldn't be a public career. We can go all day about the civics of what they're doing.
But once you tell them that, okay, never mind about the spending. Spend what you want. I just want to be.
But I will say there's something to be said for wanting spending limits, and the Treasury market is pushing and paying for this too. So how?
Look, I'm a balanced budget ideologue. I really am. Now, I'm practical. I don't think it has to happen today, but I think they have to lay out a plan. I'm a firm believer that if you don't at least start talking about entitlement reform, 10 years from now, a massive economic crisis is coming to this country when Social Security and Medicare go bankrupt and we're well over $40 trillion in debt. That's just math. That's not politics.
Should we be cynical that I saw John Thune talking about in one of his first speeches about the filibuster, and it's what our forefathers envisioned the Senate to be. So the biggest bill we're going to do, the big beautiful bill, is going to be done through reconciliation.
Yeah, I hate the reconciliation stuff.
So we love it, but to do what we want to do, we're just like the Republicans are just like the Democrats, and they'll ram everything in there and do it through reconciliation.
And what it forces is everything to be put into these 15,000-page bills, as opposed to like dealing.
He wants a big beautiful bill. He keeps saying that. And vintage Trump.
Here's the solution to all of it: send it back to the states. Get rid of these massive departments, get rid of a lot of your regulations, send it to the states, and let California do what California's going to do, New Hampshire do what New Hampshire's going to do. Because, by the way, as bad as California or New York is being run, they're actually a lot more fiscally disciplined than Washington, D.C., and they're run by liberals. So for all the Republicans in Washington, take some pride in yourself and actually understand that you're blowing it fiscally.
Is it sending it back to the states, or is it letting the states keep what they earn? And should there be redistribution of what state? Because what New Yorkers will say is, wait a second, we send a lot of money to the federal government. Why shouldn't we get?
No, I don't mind the redistribution part a little bit, because it's a big country and states are so different. And I'm not saying change the formula. You keep the same formulas you have. Get rid of the massive departments.
Let's say if New York says we want to provide more social services, so we should be able to keep more of our revenue and do that, rather than supporting social services for other states that aren't producing or won't raise sales tax.
No, I would say, look, give them their Medicaid and a block grant, and get rid of this waiver system. Get rid of all the rules and regulations and the strings, because New York knows what New York needs. Education. New Hampshire knows exactly what they need for special ed, special needs, charter schools, public schools, right? And every state's a little bit different, and that's a good thing. So send the money back, let them decide, get rid of the Washington strings, but it's not just a sense of financial mismanagement in Washington. They are also holding the control, the strings, all that come attached to the regulatory. And that's where the economic opportunities for businesses, to understand that regulatory environment, how it's going to play out. When they say we're getting rid of the Department of Education and going to send stuff back to the states, that's a very good thing. But what does it mean from a business aspect? What does it mean from a state-to-state aspect? So I think there's a lot of opportunity.
What does it mean from a consumer perspective?
From a consumer
if you're
perspective,
somebody who's got special needs kids and you feel like the states may not do the same things that the federal government was requiring they do in order to get the funding from the government.
In New Hampshire, I have a surplus in my education trust fund, but there's only certain things I can do with it or do with the federal money that comes in education, even though I have more needs in special ed. But the feds won't allow me to do it. Same with Medicaid. I have special needs and demands in my social services and programs that I have to go to Washington and wait 2 years for lawyers to review a waiver just to get somebody the services that I know they need and that would be more affordable and more efficient at a local level. So there's a huge opportunity there. It's not hard.
Your state is better run than some others.
Better? I think the word is best, but we'll use better.
Do you have a forwarding number or address or anything? Or is there a private equity? Where are we going to find you?
I'll probably be in private equity. I'll be here. I came in.
Honestly?
I'll come down, absolutely. I'm looking I'm going to live locally, work nationally, help some of these private equity groups understand.
That was a total guess.
No.
That was a total guess.
I want to make money, my friend. And business is what I do. I'm an engineer. I'm a business guy. I obviously understand the regulatory environments that are happening.
Do you work for Amtrak?
Amtrak? You crazy?
You said you're an engineer.
So I came in last night and
not that kind of engineer.
I got to pay a congestion toll driving in last night.
It drives us a little.
You did? How you like that?
Awful.
Thank you, Governor. But I will say, leaving here yesterday, there was no traffic.
Well, that's just it. Government trying to control behavior of its citizens is always a bad idea.
There's not going to be anybody here.
Oh, we'll get it right this time.
And who gets hurt? Low-income families.
No, they're never going to get it right.
Low-income families.
That's what they tell us every time. Governor, thanks.
Thank you. When we come back, a potential confrontation averted at the Fed. The bank's vice chair for supervision will step down next month, probably removing the possibility of a showdown with President-elect Trump, or definitely removing that. We will talk about that. Then we will hear from FTC Chair Lena Khan in an interview you don't want to miss. Squawk Box will be right back.
Washboardjim.
The Fed's top banking regulator, Michael Barr, will step down from his position next month. That will pave the way for President-elect Donald Trump to name a replacement for that job. Bank stocks rallying after that announcement. Take a look. Bank of America shares up by about 1.4%, Citigroup up by 1.5%, and JP Morgan Chase up by 0.4%. Joining us right now is Brian Gardner. He is Stifel's chief Washington policy strategist, and this is a pretty big deal for the financial stocks. Brian, why don't you walk through exactly what happened here, because this is a situation where Barr is stepping down from that oversight position. He's still going to be a governor on the bank, and I guess that means that incoming President Trump will have to choose someone who's already on that Federal Reserve board for who comes next in supervision?
Correct. Yeah, so with Barr stepping down from his leadership post but staying at the board, that restricts who the president-elect can choose to fill the leadership spot. There is no opening yet on the board. Probably won't be until next year. So you look around at the board members, there are 3 Republican appointees, being obviously the chairman, Governor Waller and Governor Bowman. And Governor Bowman, who has been active and outspoken on regulatory issues, seems to be the obvious choice. I mean, there's no guarantee, but to me, it looks like Governor Bowman would be the likely and logical successor to Vice Chairman Barr.
So we saw the financial stocks up on this, the bank stocks higher on this news, but what are the implications with Barr stepping away? What does it mean for the legislature, for the oversight that's been in place, for the rules that have been proposed?
So look at his title. It's Vice Chairman for Supervision, and he runs the Division of Supervision and Regulation. Those are 2 different issues that are very connected. Supervision, I would argue, you're going to see the most immediate impact, but this will be behind the scenes. These are how bank examiners go about their jobs of overseeing the banks for which they are responsible. And you can have changes to that behind the scenes on day one. So I think you're going to see a more benign supervisory environment for banks on March 1, as soon as the replacement takes over, whenever that is. Then you have the regulation aspect. And let me back up. On the supervisory side, you're going to have M&A as well, right? The head of supervision oversees the vetting of merger applications. And I think you will see a quicker, more efficient process that's probably going to be more beneficial for smaller and mid-sized banks. There'll be some gray areas for the larger regional banks. And this is a question I get a lot from clients, like how big will the regulators approve new mergers? So that's going to be an ongoing debate, but I think it's going to get a little bit easier for them. And then, just fast onto the regulatory side, the actual rewriting of the rules and the Basel III endgame, the capital rules, which were proposed after Silicon Valley's collapse in 2023. It's been on hold for a while. The Chairman Powell, has been saying they're going to make significant revisions. I think it probably gets a total rewrite. Some people would argue it's going to go away altogether. I'm not so sure. I think there's a very good chance it comes back, but in a way that is capital neutral, which was supposed to be how it was done all along. Not a backdoor for capital increases for banks, but really reflecting more sophisticated ways of measuring capital for banks. I think that's the likely outcome, with Barr being replaced by somebody like a Mickey Bowman.
Brian, thank you. Brian Gardner.
Good morning, guys. Thank you.
Thank you. When we come back, we've got some breaking economic data. Stay tuned.
We're just seconds away from some new international trade data. The futures this morning, as you can see, now triple-digit gain, barely, on the Dow Jones. Treasuries this morning, we have seen 460, I think, for most of the session. Those are some recent highs. Rick Santelli standing by at the CME in Chicago. Rick, you've got some numbers for us, please.
Yes. Yeah, trade balance. We know it's going to be a deficit. It's for the month of November, expecting a number around minus 78 billion, almost spot on with expectations. Minus 78.2 billion. In the rearview mirror, at least up till now, unrevised October, minus 73.8 billion, just revised, but only a smidge from 73.8 to minus 73.6. Now, there's something interesting about 78.2. First of all, it's the biggest deficit since September when it was 83, almost 84 billion, and that was the biggest deficit going all the way back to May of 22. I'm going to give you some trivia, Joe. Okay, we started following the trade balance in January of 92. If you look at pre-COVID, February of 2020, it was minus 40 billion. Prior to COVID, so from February 2020 all the way back to Jan of 92, the biggest deficit we had was minus 68 billion, and that was in the summer of 06. My point is that so much has changed post-COVID, whether it's with trade, whether it's baseline spending by the government. These numbers are shockingly high, and even at 78.2 billion, that's well below 101 billion that was in March of 22. So these numbers have really grown significantly, and it's something we need to pay attention to, and how tariffs or legislation with the next administration may affect exports, imports, trade deficits. Only time will tell. I know that in the first administration of Trump, of course, these deficits were considered something to pay very close attention to. Technically, on interest rates, I've been monitoring 30-year bonds. They had a double top on a closing basis with a yield of around 481, 482. Yesterday, we surged over that. We are now holding above it. It doesn't mean that we can't see rates come down a bit. What it tells me technically is the consolidation levels right around that 480 level in 30s or the 460 level in 10s. Most likely, we're going to be doing more work at higher yields above that. Joe, back to you.
Okay, Rick, thank you. Steve Leisman joins us now with more. Hey, Steve.
Good morning, Joe. Yeah, I think the issue of following the trade deficit is interesting. Not quite sure we should follow these numbers because there's a lot of sense, Joe, that one of the reasons for the increase is because of front running on the tariffs, as well as some of the payback from the port strike. So those two factors right now might be pushing up the deficit. What will happen economically, Joe, is I believe you'll have the trade deficit widens, that detracts from GDP, but this stuff ends up in inventory, which maybe sort of offsets it. So not a big economic impact, but right now I think the numbers are distorted a bit by front running, although the China trade deficit did come down to a still elevated 24 billion. One quick thing, if you don't mind, Joe, I want to editorialize on Michael Barr leaving as vice chair of supervision. I don't think he should have left, and the reason is because I think it subverts the will of Congress. Congress put the vice chair in there on a term that did not go along with the president because they wanted that to be separate. And so what I think ought to happen is if this is such a political position that the president should have his right or her right to pick that person, then I think that that should be separated from the Federal Reserve. So my sense is Barr ought to have stayed. Now, whether or not he's the right person for the job, I don't know. But by him staying on as a board governor, he doesn't give the Trump administration the flexibility to pick the person they may want. Mickey Bowman could be a perfectly good replacement, but you'd think the administration, if it's such an important job politically that the president ought to have his pick, then it probably ought to be out of the Fed, Joe.
Rick still with us. Did any of that?
President gets his pick for the chairman of the Fed.
Right. Where's Rick?
Sage, Beck, I didn't hear what you said.
Oh, so what about? So is that it? The numbers you were talking about, they're skewed from the tariffs coming in later.
You know, I think the front running that Steve talked about is real, but I do think for the most part it's already peaked. I don't see that it's necessarily affecting the numbers now as much as it has affected them potentially right around mid-24, when we're at 75, 76, 73, 79 billion, all skewed together. Now, it doesn't mean that after Trump is in office, we may see these numbers moderate a bit. But if you really take a step back, it's really hard to ignore how much the world has changed post-COVID. I mean, it just really has changed. Whether it's, we spend 25% more, all these things ultimately are going to come back to haunt us. Because with the trade balance doing what it is, should the tariffs actually be counterproductive, you could see this number back up to 90 or 100 billion again.
Right, Steve?
I don't know that it matters. I mean, there's a big long debate about that. I know you got Lena Khan coming up. The producers are anxious, but I'd be happy to have a nice discussion with Rick about the extent to which the trade balance matters. President-elect Trump believes it does. A lot of economists believe it do not.
Yeah. We consume a lot because we deserve it. All right. What, Steve?
We'll do it some other day, Joe.
Okay. See you later. Thanks to Rick and Steve. Andrew.
Thanks, Joe. Coming up after this, we've got the big exit interview. FTC Chair Lena Khan is going to join us for a wide-ranging conversation. You do not want to miss it. Squawk Box coming right back after this. Welcome back to Squawk Box. Joining us right now, first on CNBC for her exit interview is FTC Chair Lena Khan. Chair Khan, thank you for joining us. We've been talking to you now for 4 years. This is we get eight more days before
Business
it's
days.
over.
That's right.
Business days before it's over. I want to talk about the last 4 years, the way the business community's thought about all this, the way the business community's thought about you, the way you've thought about them, and all of that. But I want to start before we even get to sort of looking back on this last 4 years. I don't know if you just saw the news that came out this morning from Facebook's, from Meta, around community notes. They're going to effectively get rid of their policing, if you will, of content on their own. And they're going to move parts of their team to Texas from California. There's a whole sort of move afoot. Also, just yesterday, Dana White joined the board of Meta. And the reason I'm even mentioning this is I wonder whether you look at that and this effort by some of the tech companies and others as a rebuke, if you will, of what you and the FTC have been trying to do over the last 4 years.
Well, Andrew, it's so great to be here with you. And look, what the rules are for speech online is an enormously important question. And a world and an economy in which those rules are being set by a single company or even a single executive is deeply at odds with why we have the antitrust laws and the anti-monopoly laws, right? I mean, this is an economy that has thrived when we have fierce competition. And I've heard a lot of concerns, including on both sides of the aisle, about what happens when you concentrate control and have gatekeepers over who gets heard and who gets to speak.
So it sounds like you'd be a fan of what Meta's doing then.
Well, look, I think we should have an economy where the decisions of a single company or a single executive are not having extraordinary impact on speech online. And I know that's a concern that we hear bipartisan members of Congress talk about, and so it'll be interesting to see what happens. We, of course, have litigation ongoing. There's going to be a trial starting this spring, FTC versus Facebook, alleging that their prior acquisitions were illegal.
What do you think, though, of the relationship that we're seeing between big tech and the next administration? What do you make of the meetings and pilgrimages with which we're seeing Mark Zuckerberg go to Mar-a-Lago, or we're seeing a Jeff Bezos or a Tim Cook? I mean, this is a very different kind of relationship than the administration, the Biden administration had, and specifically what you represented to the business community.
So I approached my job with a focus on faithfully enforcing the law and making sure we were doing that across the economy without fear or favor. There has been, as you know, a lot of concern about dominant digital gatekeepers, again, on both sides of the aisle. And even as we've seen the president-elect announce some of his future appointments, he's noted that he's making these appointments with a view that they're going to continue to maintain a tough line against some of these big technology companies.
Do you think they are, given the meetings that we're seeing, given the $1 million donations to the inaugural? I mean, on a very personal basis, there's only 8 business days left in your role. What do you make of that?
Well, look, I can't predict what future people in my position are going to do. It is true that the FTC has been very successful, including in its ongoing litigations against Amazon and Facebook. And so it's only going to be natural that those companies are going to want to come in and see, can they get some type of sweetheart deal, right? Can they get some type of settlement that's cheap, that settles for pennies on the dollar, and lets them escape from a liability finding in court?
Do you see that happening? Is that what you think is happening?
I hope it won't, but again, I can't predict that. And we are set to go to trial against Facebook this spring, against Amazon in fall of 2026. Of course, they would want a sweetheart deal, and I hope future enforcers wouldn't give them that.
You mentioned Amazon. That's a company that just made a documentary deal with Melania Trump. What do you make of that?
Well, look, I think in general, our economy, including our tech sector, has done best when we've had open, competitive markets, right? We have an economy that has traditionally shunned the centralization approach that other countries have taken. We've had an economy where even incumbents have had to look over their shoulders.
And I know you're talking in a very sort of academic way about this. I'm asking from a very practical perspective and a personal perspective, given the approach that you've taken, what you think is going to happen over the next 4 years, and to the extent you've seen these meetings taking place and you've seen the rhetoric in the business community. By the way, you've seen the number of deals that that you keep hearing about, a sort of massive pipeline that's already started. What you think of that? People even saying, I'm going to do the deal now because guess what? Lina Khan's not going to be in the job in 2 weeks.
So there's no doubt that under this administration, we took a more rigorous approach to enforcing the law. And we've been vindicated in court time after time, right? I mean, just a little over a year ago, we introduced new merger guidelines. We've now had over a dozen courts cite those guidelines as persuasive authority. there used to be a view that even blatantly illegal deals, for example, could be cured by a divestiture of a hodgepodge of assets, even if that wouldn't create a competitor. We rejected that view, including in the Kroger-Albertsons deal. The court vindicated us. There used to be a view that vertical mergers were presumptively legal or benign. We've successfully blocked close to a dozen vertical deals. We've had courts vindicate us on going after serial acquisitions, private equity roll-ups, including in healthcare markets. So look, is there a risk that there would be a backsliding? Of course. But now that the courts have so resoundingly vindicated our approach, we know that if there is a reversion, that's going to be in contravention of the law, not because of it.
Let me ask you this, though. One place where you haven't been vindicated is this issue around non-competes. This idea that the non-compete has been effectively, this Texas court is fighting it, right? Do you think that that was overly broad? Do you look back and say, I wish I had done that differently?
So the non-compete rule we finalized last year after 25,000 comments from people across the country sharing, as you know, these provisions are now used for fast food workers, security guards, janitors. Ultimately, we got sued in 3 different courts. Each of those courts came out a slightly different place. So the Eastern District of Pennsylvania said preliminarily the rule is lawful. The District Court of Florida said the FTC does have substantive rulemaking authority. You're right that the Texas judge has put the rule on hold, and we are now appealing that. I think we're right on the law. I think we have a duty to the American people to eliminate non-competes if we think they're violating the law. And thousands of non-competes have already been dropped for workers because of the FTC's efforts.
Let me ask you this. You've been in this role now 4 years. You've learned a lot, I imagine. I hope you've learned a lot. What would have you done differently? Given what you know now, what would have you done differently? And given that you became a symbol to a large degree for many industries, which, by the way, turned out to ultimately vote for President Trump, interestingly, whether you think about that, whether you think that that matters, whether you think about the long-term viability of all these things you're talking about, backsliding, bring court cases today that may get undone later, I assume you would have wanted, even though I know you don't think you're political, you would have wanted Vice President Harris to have won or President Biden to have won. And so when you think about sort of the long-term nature of all this, what would have you done differently?
So look, of course we would have wanted more time. And, you know, one person I found a lot of inspiration from during my tenure was actually President Reagan's FTC chair, Jim Miller, who came in with specific vision, with a lot of focus, and ended up creating durable change in how we do antitrust and consumer protection. Of course, directionally, I wanted to do something different, but in terms of the durable impact that they were able to create, that's what we have really looked to follow, and I think we have gotten some wins that will be durable. One other thing that I really prioritized during my tenure was hearing from Americans across the country, right? In these types of jobs, it's very easy to become insulated, hear from people in DC, hear from, you know, deal makers in New York. And one thing I heard from people across the country was a desire for a more aggressive cop on the beat, right? Not once did I hear that the answer to our economic challenges is more monopolization or more consolidation or more mergers. And so I think across the country, there's a recognition that the work the FTC has been doing is making people's lives better.
There's one thing that you can point to over the last 4 years that you wish you had done differently?
Well, look, one frustration always is just how long some of these cases take. Right? I mean, the Meta case that's going to trial this spring was filed originally during the Trump administration. The Amazon case will have taken 3 years. And so, of course, you always think about, is there something we could have done differently?
No, I know, but I'm saying for you, your own decisions. I mean, by the way, this is the Kamala Harris question. What would have you what would have you done differently? What would you do differently? And by the way, I think she lost a lot of points publicly because she unfortunately, was on The View and was unable to answer that question. So I'm asking you, you've been in this job for 4 years. There must be something you said, you know what, I regret that. I wish I had done, if I had just done that, that would have been interesting. I've learned something. What did you learn?
Across the board, there are always hard decisions you have to make about which lawsuits you're going to bring, which lawsuits you're not going to bring. I think every lawsuit we brought because the law and the facts were on our side. Overall, of course, you have to think about resources. The FTC ended up, getting constraints budgetary-wise that made us rethink some of the cases we were bringing. But overall, I think we used the tools that we were given.
Nothing.
Well, look, I do think we could have thought through, is there a way to move some of these things even faster?
Let me ask you this, and it relates to big tech. You obviously, there's a big case with Google. We talked about Amazon. There's all these cases out there. Then there's the AI piece of all of this, which is a lot of the cases that are out there today actually are backward looking. One of the things you've been looking at is AI and how that's going to change things going forward, and also the relationships that many of these companies, Microsoft has, for example, with OpenAI, Anthropic has with Google and Amazon. What is the state of that, and how do you think that plays out in 20 days from now?
So we have an ongoing inquiry looking at some of these investments and partnerships between the incumbents and some of the newer startups, trying to understand what's really going on here. Are these investments that are really interfering with the independent decision making, and is that going to undermine competition? That inquiry is ongoing. I'm hopeful that we'd be able to share something publicly before I end my chairship.
There's an announcement, you think, coming in the next week or two?
I hope so. I mean, we're a multi-member commission, so we have to vote. But
what could happen, though? What can you do in the next 2 weeks? And by the way, how do you feel about doing anything in the next 2 weeks as it relates to bringing suits or anything else, given that there is a new administration coming and there is an argument that executive orders and other things that the administration is doing today that they shouldn't be doing. They should hold off and wait to the next administration to get into office.
Well, look, of course, we're going to do everything we can to smooth the transition, and I've offered that to my colleagues. But we're going to use every day we have to enforce the law and make sure we're stopping
how do you feel about trying to
lawbreaking.
lock something in now? I mean, that's some people would look and say, look, the other guy won, and the American people spoke, if you will, and so trying to lock people into something today that then someone has to try to undo later is unfair.
Well, look, inauguration will happen when it happens, and until this administration is in place, and I took an oath to enforce the law and do our job as long as I'm in this job.
Biden just blocked the Japan-Nippon deal with U.S. Steel. I'm curious how you think about, and how maybe you think President Trump should think about foreign countries that are allies of ours, and whether they should be allowed to make acquisitions in our country.
So as you know, this was a process that was, led by CFIUS. The FTC doesn't have a role in thinking through some of those national security implications. I do think across the board, though, there has been a growing recognition of how extreme consolidation can pose a national security risk, right? We've heard senior members at the Defense Department note how extreme consolidation in the defense industrial base is creating that risk. And we've seen how even in areas like, aircraft manufacturing, extreme consolidation can create that risk. I know people, including airline executives, have traced some of the challenges at Boeing all the way back to the McDonnell-Douglas merger a couple of decades back. And so we need to be aware of the deep connection between having robust competition and how that helps us domestically, but also internationally.
Trump's pick for your job, the successor, is Andrew Ferguson. You know him. What do you think of him, and how do you think he's going to do this differently than you?
Well, look, I've really enjoyed getting to work with Commissioner Ferguson. We've had, deep engagement and debates, and of course, I wish him all the best. Of course, the FTC has been extraordinarily active these last few years, and I think there's going to be a lot of expectation that the FTC not go weak and just, revert back to a less rigorous
Have you had that conversation with him?
Well, we're, of course, helping him with the transition and providing any type of support that we can.
What about the Vice President Vance, who's apparently a fan of yours? Have you talked to him?
Well, look, in this role, I've had the chance to engage with a lot of senators, including with him, and have appreciated that on both sides of the aisle, there's a recognition that we really need strong anti-monopoly enforcement, and that's good for America.
Final question for you. What do you think of, this sort of sense that there are now individuals in our country who are super wealthy, who've had enormous success? I'm thinking of Elon Musk on one end, Jeff Bezos and others, and that now have their hands in lots of different pies, if you will. And whether you think that regulators need to think about that in a different way than they had in the past.
It's an incredibly important question, and you're right that some of how this is playing out is going to look different. But historically, we did have things like structural separations, right? I mean, even in banking, we traditionally had this separation between banking and commerce, the idea being that the entities that are providing credit for the rest of the economy shouldn't be conflicted when they're directly competing with some of those businesses. So we may need to reactivate some of those principles, especially in infrastructure industries.
What do you do next?
Right now, I'm focused on the next 8 business days and finishing strong. We're going to be running through the tape.
The next 8 business days. Becky and Joe, that is Lena Khan, the FTC chair. Lena Khan in her exit interview. Thank you so very much for joining us. We're going to come right back in just a moment after this.
Athletics.com.
We are watching NVIDIA shares at the Consumer Electronics Show in Las Vegas. The company revealed new chips for desktop and laptop PCs that use the same Blackwell architecture that underpins NVIDIA's fastest AI processors used in data centers. With NVIDIA's move higher this in the pre-market, its market cap has passed Apple's again, now making it the world's most valuable company.
And Ulta Beauty CEO Dave Kimball is retiring. He's going to be replaced by the company's chief operating officer, Keisha Steelman. She's been with Ulta for more than a decade and became the COO back in 2023. Along with that executive announcement, Ulta raised its fourth quarter outlook because of stronger than expected performance during the holiday season, and the shares this morning up by about 3%. Let's take a look at what's been happening with the markets this morning. You'll see that futures in the green. We've bounced back and forth a little bit with the NASDAQ, but the Dow futures solidly in the green, up 130 plus points. S&P futures are up by 15, And remember, this is after 2 up days in a row for the S&P. The Dow's been down. NASDAQ has been higher the last couple of sessions, and you can see it's up another 27 points, indicated up this morning. Treasury yields have also continued to climb. In fact, the 10-year yesterday closed at the highest level since November of 2023. You can see this morning the 10-year's at 4.63. 2-year sitting right at 4.27, but we're going to be watching that very closely too. We got those trade deficit numbers that showed a higher than expected trade deficit, and that's something Rick has been very concerned about. We'll talk more with him about that in the rest of this week. Okay, that does it for us today. There's Andrew. Andrew, great job with Lena Khan. Make sure you join us right back here tomorrow. Right now, it's time for Squawk on the Street.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Stocks look to add to Monday's strength in tech, at least, as NVIDIA's presentation is well received, but we do have an eye on the 10-year testing 4.65 this morning and some rare downgrades of both Apple and Tesla. Our roadmap's going to begin with NVIDIA reclaiming the most valuable crown pre-market. Jensen Huang at CES says AI agents and self-driving cars will be among the next multi-trillion-dollar growth opportunity for the tech giant.
Plus, the corporate step Trumpwards. Meta is the latest to make a shift, appointing Trump friend and UFC CEO Dana White to its board. It also ends its years-old third-party fact-checking policy. It's now in favor of an X-like community-driven system to check facts. And Apple shares are lower this morning. This ahead of the open. Nathanson downgrades the stock. It's now a sell, pointing to a drumbeat of bad news.
Let's begin, though, with NVIDIA. Jensen Huang delivering the keynote last night at CES. A lot to unpack. This is what he had to say about the Blackwell GPU and where it fits into the company's AI picture.
You get this incredible graphics card here, Blackwell. We're going to shrink it and put it in there. Does that make any sense? Well, you can't do that without artificial intelligence.
Not just AI, Jim, but physical AI is
Right,
all
well,
the talk.
You talked about the evolution. I've got to tell you, this physical, the first thing I'm going to say is that there's just a huge amount of people saying Amazon's gunning for NVIDIA. Well, Amazon, they play good game of chess. No, they play checkers. After this, Amazon's a checkers play. Jensen's playing chess.
So, what does that mean?
Well, because Amazon, the big reason why Amazon, that Amazon's supposed to be gunning for NVIDIA, right? Microsoft's supposed to be gunning for, good luck, he left that behind because he's doing physical. So what he's doing...
Well, just to stop, what you're talking about is the development of their own chips? Is that what you're saying when they're gunning for them? But they use NVIDIA chips as well, but they also use ARM-enabled architecture for things that help them in the data center.
These guys are using Micron for high bandwidth. No, I'm saying... Welcome back, first of all, because I'm one of those guys like the guests that come on. If you hit them, they say, "Well, first, I really enjoy it."
Guys. I like your time.
Okay. Oh, thank you.
Beautiful.
Great. Okay, that's not here nor there. All right. So here's what's going on. There have been a lot of scrum about who's doing maybe inference, and then Amazon's moving into training. NVIDIA's not talking about any of that. NVIDIA's talking about robots. They're talking about the way you build a factory. They're talking about physical. They're talking about Toyota going the way that Tesla's going. They basically just said, you and I are going to have robots. I don't know if Card may get a robot, maybe not.
Well, he keeps talking about the ChatGPT moment, right, for robotics. Others have been talking about that a bit as well lately.
Yeah, but,
Jim.
Yeah, but no, my point is that he's leaving everyone behind.
Okay.
And that's why its stock can go higher. Because if we're doing physical, what that means is that you are going to have a robot that is going to be doing exactly what we can do. A robot will be able to talk. It'll be able to be our buddy. It'll do things that we hadn't been able to think they could do. And this is what this is about. This is about productivity and robots. Now, yes, the PC that we showed, that's going to be for sale for a very good price. I think that's going to be very competitive, and maybe there's really going to be AI. But I was just blown away by the digital twin for manufacturing, the Toyota being like Tesla, the humanoids. Remember, he keeps using the humanoids. They even threw a bone in for Apple Vision Pro, which the downgrade says is a bust. Okay, fine.
I saw you mention that earlier.
But I just think that it was about not being the Jensen Huang that we've been hearing about. That he's this, even though he did have the incredibly cool leather jacket.
Yes.
I don't have that one. But I just think that this was dazzling in intellectual purposes, not showman purposes.
You mentioned the Toyota partnership. There's the Uber partnership too, and you spent quite a bit of time talking about autonomous. Take a listen to this.
After so many years with Waymo's success and Tesla's success, it is very, very clear autonomous vehicles has finally arrived. Well, our offering to this industry is the 3 computers, the training systems to train the AIs, the simulation systems, and the synthetic data generation systems. We're working with just about every major car company around the world, Waymo and Zoox and Tesla, of course, in their data center, BYD, the largest EV company in the world. 100 million cars built each year, a billion vehicles on the road all over the world, 1 trillion miles that are driven around the world each year. That's all going to be either highly autonomous or, fully autonomous coming up. And so this is going to be a very large industry. I predict that this will likely be the first multi-trillion-dollar robotics industry.
Okay, so who's been a huge customer? Tesla in the data center. Notice he said the data center, didn't say the car, because they're not making the ones for the car. But if Toyota does that, Toyota has the balance sheet to do it. They have to buy they may have to buy 500,000 chips to get this done. So you're looking at orders from now till Kingdom Come. Now, over and over and over again, he says, we're ready to ship. Blackwell's ready to ship. Blackwell shipping by. So therefore, you want to put the numbers up right now. I thought there would be people who say, you know what, I've already heard this. Remember, that's a new thing. When we have it, I go over with
we
NVIDIA
knew this,
to say, well, okay, which is the new? Which is the new? David, there's a lot that was new. It just wasn't Jensen just going, wow. There's no wow. And by the way, you know what it started with?
Tell me.
A bartender making a drink, mixing a drink.
Well, you've talked about that a number of times when when you were there for that, right?
Right. Well, no, I'm just saying that I was spot on that. Like Jensen might listen to the show.
As we start this year, there are a lot of. It could be an amazing year for advancement in various areas of technology, whether it is robotics. As he said in this ChatGPT moment where suddenly all the things you've talked about start to come to fruition that we all have talked about. There will still be significant advances made in AI itself. I mean, Sam Altman quoted in a recent interview saying, well, one of the, in the next 4 years during the Trump administration, we're likely to get to AGI. He said that.
Yes. Interesting
to see him sort of discuss the next 4 years and artificial general intelligence being reached, which is the reason that they even created OpenAI, of course, way back when. And autonomous vehicles as well, and the advances that are going to be made this year. There's a lot that we're going to be, as we have been for years, but it may now start to happen. The question is, what's it going to mean for the enterprise?
Right.
What will it mean for companies in terms of use of robotics? What will it mean for AI in terms of intelligence being used in the enterprise to help efficiency and productivity?
I'm going to Verrazano bridge you.
Okay.
The reason why you do the Getty Shutterstock, this thing can read video. It's just a killer. I mean, this is the type of thing that I would never allow. Say, if there's like a guest on earlier. This is like these two should be competing against each other. Instead, this is the video. See, they can. Let's say you wanted. This is the picture. I've often mentioned that. If you want to know how to strike out every single player on the other side, you just, the robot can do that because it ingests video. It's a big thing. So you want pictures. Getty was mentioned to me by Jensen. I owe him it was a SPAC. But David, the deals that are happening.
We got 4 at least on our docket today to talk about.
None of them enormous. We've obviously got Cintas coming public with their hostel for another uniform company.
Whoa.
And a very significant premium.
Yeah.
We've got a deal in medical devices with Stryker. We've got the one you just mentioned, of course, as well.
Paychex Paycor.
And then Paychex Paycor just got announced a brief
These
time
are
ago.
all fabulous competitors, David.
Yeah.
And you take them out. It's so good. I celebrate these deals. These deals are about capitalism, not socialism.
Jim, if the enthusiasm on AI is so strong, why is Moffett coming out today? David mentioned the downgrade to sell, saying that consumers seem unmoved by AI functionality.
Well, let's first talk about the fact that this man had a hold on it during one of the greatest runs I've ever seen in my career. Second, it is multiple stretched. I'm going to give him that. But you don't know what Apple Apple is the free rider of all time. Now, I did think the one thing that was interesting was he did talk about the lawsuit, that Google might not pay them in order to be de facto, but
May not pay Apple, right?
Yeah, but that lawsuit, that's going to be resolved in 2027. That's when I'm going to put it on the docket.
You're referring to the DOJ ongoing monopoly case.
There isn't anyone who thinks this thing is going to be resolved next year even.
Okay, back to Apple and monopoly.
Well, no, I'm saying the lawsuit's not going to happen in 2027, but I just think, it's an easy shot. The stock's been down for 7 days. It had a little rally yesterday. It goes up, and look, I don't think the quarter's going to be that certain, but I do think that there's a new way to look at Apple, and he ought to get on board. The way to look at Apple is just that they didn't have to spend anything on AI. Everyone else is spending $80 billion.
There's no doubt they will benefit as you mentioned, a free rider, so to speak, not having had to make the enormous investments that so many of the hyperscalers are making in terms of AI, and yet benefiting from it and being able to bring it to their consumers.
What's brilliant?
It is, if in fact it actually really does generate that significant uptick, which hasn't come yet in sales.
No, it hasn't. I think it's interesting that it was totally viewed as a gamer thing last night.
And then just to Moffat Nathanson's piece here, there is a lot of concern about China and their prospects there, as it is for any number of other companies as well, U.S. companies. A consequence, though, of both intensifying competition and near certain reluctance about Western AI models being allowed to proliferate.
Well, it's retaliation. And look, if Peter Navarro got his way, yes, I speak to Peter a great deal, I think it would be tough to do business. Because there are people in the administration who we're in like a Cold War with them right now, that we just don't want it to be hot.
Yeah, I thought it was interesting that Jensen mentioned BYD there.
Yes.
I don't know what he's going to be able to sell to BYD. He also, by the way, got a little ahead of himself, saying it's the largest EV company in the world. As of the last numbers, not quite. Tesla was still ahead of them on EVs.
Well, we do have Tencent down pre-market on this designation as a Chinese military company.
Well, I think that's the new world, which is that we find that these companies that spy on us, these companies that have any sort of technology that could be used militarily, we're taking them out.
Yeah, well, although speaking of spying on us, the incoming administration, I think, is not going to try and shutter TikTok. And we're waiting, by the way, for the Supreme Court to rule.
What do you think about the battery?
The free speech.
It's Ford's battery company.
Yeah.
I think that's very significant that too is on the list. Now, we don't know what the list means. It's just like when Biden banned all drilling yesterday.
No, that was offshore drilling.
Oh, yeah. Okay, I forgot. Today's onshore.
That was offshore.
Today's onshore, right? How about the Permian? We can shut Permian down?
Have you seen our production numbers?
Look, when he's speaking about Permian, he's talking about the production of James Dean, using Marfa as the background for Giant. Isn't that what he's talking about with production?
I think it was offshore.
No, I know that. See, that was being what's called facetious.
I'm aware of your facetiousness.
Yeah.
That's the word.
Why don't you go play chess with
Did
Jensen?
you not
see how that goes?
Yeah, it's still a nice tie. That's about all you got going for you, but it's nice.
Did you know that there's talk that in NVIDIA they could have a bartender?
A bartender?
He minimizes the most.
It's sad. It's sad.
It is sad.
Why can't he cheerlead?
And I'll tell you why. Because it ended at 11:14, and he had been asleep for an hour and a half. I chose to not sleep so I could go back over the video.
Actually, I was asleep for about 45 minutes. You're right. It's not
during it? You fell asleep during the keynote? What, when he asked for the Michelob Ultra? Is that when you fell asleep?
We're going to get some first-hand accounts of people who were in the audience later on this morning. When we come back, Meta's definitely in focus. Mark Zuckerberg announcing an end to fact-checking, at least third-party fact-checking, and UFC's Dana White is going to join the company's board. Take a look at the pre-market. We'll get to some of these other upgrades this morning on names like Bank of America, Vornado, Disney, Shaq, Snow in a minute.
shares.com.
We're going to get back to our roots and focus on reducing mistakes, simplifying our policies, and restoring free expression on our platforms. More specifically, here's what we're going to do. First, we're going to get rid of fact checkers and replace them with community notes similar to X, starting in the US.
That's Meta Zuckerberg in a video he posted just a few hours ago. The company is scrapping its third-party fact-checking program, at least in the U.S., to start in favor of the community notes approach. The decision comes as Zuckerberg does look to build a relationship with the incoming Trump administration. Jimmy said that politics was stressing people out, but that we're in a new age now.
It's so funny. What did he use? He used X. It's really the Reddit plan that he's using. And what he should have said is that Reddit is a superior form of getting people out of the community who are doing destructive things to the community. David, the embrace of anything Musk is something that we could spend most of our lives talking, because I think there are a lot of people at home who say, who elected Musk?
Well, I know in Europe, a lot of leaders are certainly saying that. In fact, they've been forced to. It is amazing to me, and I know to so many others, Elon Musk, of course, who running Tesla, overseeing SpaceX as well, although Gwen Shotwell obviously runs it, and so many other companies, and X, and advising the president, and yet able to share his thoughts on so many different things, including the way that governments in many other parts of the world should be run, back to him. And then having influence here as well, conceivably. I mean, there wasn't that long ago that Zuckerberg and Musk were at each other's throats, by the way.
Just like he was.
Remember, we almost had that caged match. It was going to be in the Colosseum in Rome. And I was hoping to be one of the announcers. What a moment that would have been.
That would have been
and
amazing.
then it just never happened.
No,
Now, I don't know.
I'm
Now
sorry.
they're kind of, I don't know if they're friends, but they're following each other.
Well, there's a lot of people who, look, I mean, I debated Give Me $1 Million.
Oh, to the camera. Everybody's doing it.
Because I didn't want to be left out. But then I didn't get invited to Davos, so if I'm not going to go to Davos, I'm not going to go to the I'm not going to do anything. I'm going to stay home and watch the Eagles go all the way.
The other point on Meta is Dana White joining the board, which again is also fascinating. Obviously, Mr. White, a very successful businessman, having built the UFC. Now, remember, it's a part of Endeavor, or TKO, excuse me, sorry. Which has done very well, by the way.
Yes, it had
Public
up a
company.
stock.
Yeah, Endeavor's going private, but
no, but it's,
and you know that conceivably will. I mean, by the way, the interesting boardroom there. You got Dana White in there. I mean, who knows what could happen
with hot tan. Can you imagine?
Yeah.
Holy cow!
Who knows what could happen? And obviously, Dana White is close to President-elect Trump.
I got to be a fly on the wall.
Yeah.
See what that's like.
Do you think that Zuckerberg is trying to narrow the lead that Musk has in terms of influence?
Well, I think he wants to play ball. I think that he is. I think that he's not a changed man because of this. I think he's been going toward this for a long time. I think he realizes, look, we got to play a role in this country.
He realizes that he doesn't want to be censored anymore. Hello, retail traders. Good morning. Good morning, Chris. Mannequin. Wow. Man, it's cold outside. Whew. Like, Looks like SPY just kept going this morning. U.S. Redbook's 0.6.8 versus 7.1. Exports are down. Imports are up. Trade balance close to estimates. What happened here? Oh. That's strange. Got 6 minutes, so I'm going to go get me a little cup of coffee. Warm my hands up a little bit. Make sure my platforms are up. Oop, that ain't good, right? Went and got me some shoelaces. I hope I got the right size. Idiots downgraded Tesla again with the price, but also kept it at $490. People are wanting to get into that trade. BOFA, Bank of America. To a neutral rating from a buy. Bank of America got an upgrade just because they said it looked cheap, and that's bullshit. I'll tell you if it looks cheap or not. There's pulled back on PANW. No, it doesn't look cheap one bit. Cheap's around 30 bucks, 35. So this thing ain't cheap. Hell no, it ain't cheap. 3 black crows off the 21. UBS upgrades Bank of America to 53 bucks. Everybody came in here and upgraded it. HSBC, JP Morgan, Daiwa, whatever that is, Goldman Sachs, Morgan Stanley. I think that's a behind the door deal there. It'll probably move, but I still wish I'd have saw them 3 black crows earlier. It was on the weekly too, wasn't it? Oh yeah, that'd have been a good buy. Down to 1 minute. Fee, fi, full fum, I smell an Englishman. Hickory dickory dock, Washboardjim's running up the clock. Yeah, they're going to pile on Bank of America. Broadcom. Here we go. Today's losers, QSI, Zim, Mr. had too big of a run. Oh yeah, I wanted to look at Rhyme. See if it pulls back. We're at the VWAP on Rhyme, R-I-M-E. SMCI's up. Mara above 20. Tesla. Meta. We've got Apple down. I can't tell you how many times I've been censored on, even thrown in jail on Meta, especially during that Hunter deal, which was true. I swear everything I said was true. Watch Meta here. SPX opened up at the pivot point. We had a good sell-off into close yesterday. It's AMD. The only one that's up is Apple. This morning, the other ones are at the, we got the Meta's at the 200, so watch Meta. And AMD's bounced up off the reversal here, off the 2 engulfing candles. China looks kind of flat right now. SMCI had a pullback and bounced. And then you got Tesla bounced up $4 already. You can't bring us down, man. So Meta, today's Tuesday. Come on, won't you? The 640 strike for Meta. If we get above the 200, I think it's off to the races. So I'm going to grab me one here. We got a shoulder line support. So we're going to squeeze Meta 640s at 315, 305. $281. So watch it real close right here. Nvidia's pulled back to 150.31. If it stays above that, we're still bullish. I had a nice little breakout this morning on Meta. I'm liking that. $264. There's a 275. How high are we on this thing? Let me look on the 20-day 1 hour. Oh God. Yeah, we gotta wait. I gotta wait. This thing's up too much. At a double top. I don't like to trade it though. Okay. boy keeps pumping AMC, and people are you can't follow every move that Roaring Kitty makes. He's been saying Roaring Kitty for the last year that it's going to move, and it ain't done crap. It'll do it one day. But I think you can put your money to better work. SPY has 3 black crows. SPX is pulling back. Let's see what that is there. 5-day. Let's get SPX here. I just have so much success with this stock and SPY. If I'm trading the SPX, you could be trading the SPY YouTubes. Man, this delay is killing me. Yesterday we hit the 21 on the SPX on that dip in the close. And we're above the 9. And this is on the weekly. Rhymes pulled back. If it stays above 20, we're still bullish. No rhyme or reason behind that, just because I called it out to 10 to 20. RIME. We're just up too much on Facebook. Man, my fingers are cold. I can't stand the cold weather. I lived in Hawaii. I wore a pair of jeans one time. To a banquet. Might have wore one on a date. I don't remember well on that one. Hawaiian chicks are the best. So we pulled back to the 21 here on the SPX. I'll get that coffee going so I can warm my hands up. This ain't working too well right now. The SPY's at the 200. This could be a reversal possibility on the SPY right now. Yep. They'll tell us if we're bullish or not. This ain't, oh, yep. Watch Meta. Meta pulled reversed a little bit. So close to the VWAP right now. I'd like to see it dump down one more time. There's 30 cents on the Meta reversal. SPY is the 8th. Missed that one. Should have grabbed it at the 200 and got out of it by now. Meta's already popped on that news. My meta play currently, you get the 640 and the 630. Oh, you've already been in them? Or did you just get them in today? Morning, Mike. Morning, Magnificent. Jesse. Johnny. I think Meta's is up a little bit too much. I'm going to look at the 616 area. SPY 120 to 133, the 599s. Oh yeah, QUBT. Bank of America's pulled back to the 200 on the 1 minute. Yeah, this seems like an unnecessary pump right now. To me, it's one of the least of the banks I'd want to trade. And you had the Boeing pump yesterday. You've got Dow. All the airlines are up. Dang, my hands are freezing. So SPY just made a head and shoulders, inverse head and shoulders. Contracts are 118. I may want to get Come on now. No politics. Stop pouting. Hey, I missed that trade too. Due to politics. $116 to $133 on the SPY. So it's going to decide what it wants to do right now. Two engulfing candles is exciting. Okay, we're back down again. I'd like to see it come back and hit the 200 one more time. It's kind of a bear flag that formed, but you never can tell. Now AMD did pop back up and pulled back down close to the 200. We got a new low on NVIDIA, 148 with a double bottom of yesterday's low after hours. Well, not close to it, but close. Again, they brought up the market cap yesterday on NVIDIA. Jolt's data comes out at 10. Watch your positions. Mike says watch your positions. Jolt's comes out at 10. We had a little pullback here on the NVIDIA. Let me see if I can find a good solid support on this beast. 5 minute, 5 day. We are definitely now getting to where I like it. But I don't really appreciate these pre-market and after-market runs as much as I do in the day. I was going to pull up Mike's scan he put on yesterday. So that's a good spot. I like it a lot better down here, right around 145. Yeah, I think we'll do that. I adjusted my alert to 145.20. It can bounce right here. This is a double bottom off that fat wick this morning, pre-market low. SPY pulled back to the 200. We're going to find out if this thing wants to stay bullish right now. You're at 108. I'm going to grab a couple here. Look at the SPX. Double bottom. I'd still like to see it hit the 200. But this is a double bottom here with 3 crows. What are these things at? The 6,000s, So if I go out a month, let me see here. Go out to the 17th of January. The 6,000s on the 17th of January. Comfort. So I stick with the 6,000s here. Oh God, there you go. That's what we're looking for right there. The 6,000s at 610. The SPX 6,000s at 610. I got one. These are the jolts. Yep, jolts just came out. A big spike on Rhyme to 30. Damn. Let's see what they say on the SPY. PMI 54, there's 53, which is much higher. Well, stopped out of that. I got stopped out. Okay, I got one contract. To grab another one right there. Got a hammer off this Crows. That's to move back up to the 200. The SPX January 7th It's not reacting good enough yet. We got some higher lows. Okay, we better do something here fast. Might get out of them. Damn. Come on, baby. We're at the 200 on the 5-minute. Which was yesterday's high. So that's another confirmation. I forgot I got to meet that bank guy today. SPY pulled back to my support to stay bullish at 592.86. So we got a falling wedge, breakout, higher low. Dropping more. Can we get back to the VWAP on the SPY? We've got a hammer off the 200.
If not, I'm collecting some big option premium for doing so.
All right. I like it. Give yourself a wide range. And I'm kind of surprised that the pricing is available for that, for a pretty volatile.
Tempting to get out of these just to save grace. It's trying to make up its mind. If it waits too long, it's going to dive. I sold them there. I'm out. $175. Out at 253. And they'll probably jump. I got a little bit, this is what I don't like when I'm in a trade, is when I go below that blue line. That kind of scares me a little bit. I'd rather be up above it, especially on the same day lotto. So when that thing spiked up, I just said, push. Now this thing can move up, depends on what kind of day we're going to have, but it's best to get out with profit. But when I go below that blue line, it seems like it doesn't appreciate it as much as if I was above it. The price, I mean, it kind of deteriorates more throughout the day. So here's the trade. In 295, added on at 245, and out at 253. Actually, I got pretty good right there because I pushed the button at 225 and got out at 253, so it gave me 253 credit, which is 75 extra bucks. Yeah!
Some trouble ahead, so we are pulling back.
Okay, tell me about that.
Turn up the heat.
I love that we're going to macro here. Great
66 degrees in here.
Perspective, because that's what we're talking about here. Yields are moving up right now. We got the dollar looking strong, but it's giving back a little bit here. Do you think Bitcoin's move today is related to what's happening in interest rates?
I really do, and I believe that the movement down for most of December and even now today, it's just a little bit of weakness in risk markets that's holding Bitcoin and other crypto assets from going up to what their potential is under a new administration that favors crypto. And really, when I get into it, it's, the Fed just lowered rates again, 25 basis points in December, but the long end crept up. So that's the concerning piece. There's risk on the horizon, even though rates are going down, which is why yields went up on the long end. You also notice that mortgage rates went up on that move up because they're correlated to 10-year Treasury, of course, but also the spread of risk in consumers getting new mortgages is concerning. You're seeing everything from credit card defaults going up, auto loan defaults going up, mortgage defaults going up. So all of that's related, and it's going to have a drag on all risk assets.
Okay, so to break apart a few things there, Stephen, when it comes to what could drive risk assets down,
Bitcoin down $4,200 today.
Kind of discounted cash flow type of flows thing where people are going to go, hey, now I'm getting this amount in the bonds again. We kind of go back to that 22
Okay, here we go again.
Of logic a little bit.
I'm going to move these up
Is it that you're now actually going to
to the
have
59.75s.
an actual risk-off event?
SPX?
More like an economic deterioration. Like people won't be able to buy a bunch of cryptos because their credit balance finally blew up on them.
Well, that's exactly right. So it's affecting retail a lot. You got higher than normal inflation, plus a lot of leverage that's already on the retail consumer. So there's not a lot of extra cash to make investments with. Really, where I expect to see a lot of the cash flow is going to be from institutional investors that are deploying capital right now, and they can do it through the ETFs, which is why Bitcoin's been very strong in the last couple of months, where the other alt
59.75s at 380.
That those ETFs have given professional investors the ability to hold them, where some of the alts have been flailing a little bit.
So does that kind of lead a bit? What kind of correlation do you prioritize when it comes to trying to figure out which direction is Bitcoin moving? Like, should we be looking at softening in the altcoins, similar to how the Russell 2000 softened before the S&P the past week? Or do you just look at this rate thing and go, if yields go up, Bitcoin goes down?
I'll put a stop on this one just in case.
The dollar has to go with
Should have sold them right there. We got a double bottom.
To tell us?
Yeah, so really what I'm looking at right now is I have the ability as an investor, I have the ability to get higher yields in the bond market at the moment over, say, equities. And when I'm reducing my equity allocation and increasing my bond allocation, it does make its way across all risk.
Yeah.
Now, that being said, I do believe that Bitcoin will likely double from here in 2025 because there's also an increase in the
Watch the
amount of
VIX
allocation going into Bitcoin, or a new allocation to Bitcoin that never existed before. So if you're, say, a pension fund or insurance company and you're trying to get access to the yields that you need, you are creating a strategy where you're holding more bonds because of the yield, but as you're taking equities out, you're looking for other non-correlated or lower correlated assets that can still give you a high return to increase that total return. So whether it's Bitcoin or more private equity, these are the areas that they're looking at. And so Bitcoin, will either have a new allocation or a higher allocation. And even some of the other alts that are out there too, there is an Ethereum ETF. There are other ways to get access to alts that just aren't Bitcoin. So yeah, Bitcoin will likely double. Alts will probably double or more over 2025, but it's not the kind of smash that we wanted to see with a new administration that really favors crypto policy.
Okay, Stephen, so to come back to that last part, though, because it sounds like you're arguing that as people recalibrate their portfolios in more favor of fixed income as yields go higher, they'll drop equities, but they won't drop as much crypto. They might take some of that equity allocation and put it into crypto because of whatever portfolio diversification they may think it's
Oh, God.
Did you just say that right now in this moment they are
Don't suffocate.
to go down as stocks go down? Is that not
Shit.
just a correlated beta to the equity market?
Well, really, what's happening is equities are dragging crypto down a little bit. Crypto's really trying to rally because people are making new allocations and higher allocations. But that risk-off move is dragging it down a bit from where it could go. My price prediction for 2025 was originally 250 for Bitcoin, maybe even 300. I'm adjusting that to probably closer to about 180 for 2025. So it's still going to rally, but it's not as much as it could under this administration.
Do you think that's because it's going to get hit in the near term and then we'll have to recover? Is that kind of what we're talking about then, if the macro case in the first half of our convo comes true?
Yeah, I don't think it's going to get hit as strong as it did. And by the way, before the show, I was planning on saying that, I think Bitcoin will probably pull back to about 98. Well, about 30 minutes before it came off, it happened. So I can't really say that, and that's a good predictor anymore. But that was our internal discussions. Is 98 is probably the low here. We'll see a pullback to there this week, and then starting middle of January through the inauguration and through likely April, when all of these allocations are being made, we could see Bitcoin hit 180 by April.
Okay, so the first half of the conversation about the risk related to rates, that was like a theoretical thing, or do you actually think that's going to happen? Because right now rates are going up, and what you described is happening. So do you think that this is going to stop then? Because when you say this is the low for 98, then it seems like the thing we discussed in part A of this must be ending and not starting, right?
Yeah, and really, if you think about the overall portfolio for a manager, that's probably something like 70-30, equity to fixed income, and of course a small sliver for private equity and other lower correlated assets or uncorrelated assets. We are going to likely see that shift.
470. I can get out now and be happy.
But you're also adding in that allocation for Bitcoin that either didn't exist or maybe it was only 1%.
So the correlation has to break, is what it boils down to. If stocks
Maybe this could be the one that gets me up a couple grand a day.
Bitcoin needs to be either equal to stocks or less. Technically, it should be less. If what you're saying is true in this risk-off moment, then when stocks go down,
We got a double bottom.
less, right?
Okay, we got a wedge.
Shut
Shut up, Anthony. I'm talking. We got a wedge, breakout, pullback, higher low, back to the 200 if this breaks out from the 9. If not, I got to get stopped out. I should have sold it right there at 470, $5. There's 380. So I got to stop out. I don't want to take too big of a risk here. Yep, there it goes. Stopped out at 360. And of course it'll probably reverse. I just had one. I'm not taking too big of a risk today. I don't feel up to it. Plus I got to meet that banker. Today for lunch, I'm going to have an egg and a hamburger patty.
What the S&P index would be, for 2025, it would probably be closer to 6,200, which isn't a crazy move, but it's still higher, just not as high as people expected.
All right. Love the conversation, Stephen. Nice to talk relationships, relevant trading correlations, helpful stuff. Appreciate it very much. And nice. We got a framework to follow now from you.
Thanks, Oliver.
Thank you. Stephen McClurg, CEO at Canary Capital Group. All right. Good discussion there on a day where Bitcoin's lower alongside stocks. Chartmaster coming up next. So we got some tech names, looking at Snowflake, looking at Atlassian, and things in the market are percolating, definitely selling. It's got a little bit more intense. We'll keep our eyes on it.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Oh man. It's cold outside.
All right, let's talk some charts. Stock markets are getting hit. We're watching it right now. S&Ps are lower by a good chunk. We're down 43 points. NASDAQ down 1.5% almost as Nvidia's getting hit. We got a couple tech names that we're looking at here this morning, Jenny. Firstly, Snowflake. Upgrade, pretty big one, but it's still down anyway.
Snow ain't one I've noticed here in a long time.
They upgraded shares to overweight, but they said that they believe that shares are positioned now well into 2025, as they do see this budding product cycle, a possible rotation towards software, and an attractive entry point given the fact that this name has underperformed the tech trade. But I think the problem with Snowflake is simpler than that. I think the fact that they're still competing against some of the biggest
They had a huge gap up off earnings.
companies out there, and the fact that also right now, as far as like cloud competition, they're going up against, various forms of AWS, Google's cloud. So like, I know they're not necessarily the same, but they're in a tough space right now to carve out a niche in what is, I know we have deep pockets when it comes to cloud, but they're in a pretty cutthroat environment, and price targets range all across the board in this name.
All right. $200 is a pretty big one. To get back there, you'd have to have a pretty major reversal of short-term trend, it seems like, right?
Yeah, I had my eye on a very similar level, 195. This pink line here, you can see it was a low point, and then a subsequent high point after we had a gap down. So this old support becomes new resistance, and this is not the greatest chart. First, I thought, well, it looks kind of like a cup and handle forming here. We've got this rounded base forming. We had a nice rally here, but we fell quite short of that pink line, so we didn't really even make it to the post gap down high point here, and now we're trailing off. We made a new low, actually below the point where our gap up opened after earnings here. Now today, big red candle. We are right on the money of our white trend line here. We are falling below our yellow 21-day exponential moving average, and RSI is also not really able to hang on to this 50 midline either. So the situation could be deteriorating, but for now, we're still above our trend line here. So next area, 153, this set of lows, and then perhaps our 252-day EMA, which comes in a little bit below that, near like 147 or so. And then to the upside, this is the area to beat. These highs.
Two double oaks within a month.
Today, a little engulfing candle?
Well, typically the previous day's candle would be green, but the general type of action, yes, you're
okay. I see.
that today's big candle is
the range. Yeah, okay, that's a good point. It has to go up and then down to be an engulfing. All right, so it kind of looks like probably think more towards like 150 than. Or 160 rather than 170, because that would at least get you back into like the bottom end of that trend of today.
Two double oaks within 1 month.
The other one, Atlassian.
I've never had one my whole entire life.
It is positive. So Truist with an upgrade to buy from hold, price target raised to 300 from 250, saying they believe there's still room for upside from here. In their view, they see a more favorable model setup for the year with their unique AI opportunity and the potential for margin upside. And they do believe that because of their infrastructure coverage right now, that we could see some overall favorable trends as we enter the new year. I think it's amazing because this name has basically been cut in half from its all-time high, that there's still such conviction. There's 21 buys, 9 holds, and no bears in this name. And the average price target right now is around 281, which does imply about 12% upside. So all things considered, I mean, this name right now from Truist, 300 would put it above, of course, the average, but it has not also done a whole lot.
So I've had 2 double yolks in a month. And that, I've never had one in my whole entire life. And I ate a lot of eggs. Protein Palace, baby.
Looked like if it turns back up, maybe the momentum's more recoverable. But this one, with the size of today's move, despite a positive note, to be down 3%, the only thing we've kind of got going is the hope that this downtrend outside broke, but it still is below 50.
Yeah, I mean, we could see there's a pretty decent supportive area to be watching here. If that's if
it's still $11 away.
So, yeah, exactly.
Right.
So that's an area to consider. Not making a prediction or recommendation or anything, but 218, 235. Those are or 236 or so.
I like that level too. It reminds me a little bit of the S&P 500. My point earlier, which is like, why wouldn't bears try and take a stab after hot data this morning? Thanks, Rick. Appreciate the look at the charts. Thanks, Jane, for a look at the notes. And indeed, bears are taking a stab. We've got stocks down 46 points in the S&P. We're basically the lows of the section.
Bears are taking a stab
for the Nasdaq. And despite software upgrades from those analysts, no bid, and not much of a bid elsewhere. Alphabet, kind of the only green right now.
Do shall I try it again, or should I make lunch? So let's go over the watch list real fast. Volume highs. Now coin had a good run the other day, and we're down 20 bucks. With Bitcoin. Bitcoin's down 4 grand.
accelerate your market knowledge,
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast
Kevin
Market
Hickey.
weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
One guy said 77,000. I don't see 77,000. I see 71 and 80 and 90. $89. That's just under 90, a couple $100 under 90, so it'd be 90. Those are established on the triple top breakout.
Stocks are near the
Three
lows
black
of the
crows,
session.
each one of
S&P's down
them.
43 points have recovered, just the absolute slightest amount since our break. Caroline Woods back with us from New York. Dan Grant here with me in the
Caroline
studio.
Woods.
Senior specialist of retail trading, a bond guy at his core. A strong core, Dan Grant.
Came from the bond pit where the
God,
bond
you're
vigilantes
cute.
were well known back in the 80s and 90s. So we don't.
What do the vigilantes
Smooch.
look like? What do they dress like?
Kind of like me, but not as a lot younger.
Oh,
right?
okay.
So
I was
more
thinking like
you, but-
Old West, like vigilantes, you know, like
kind of.
Magnificent Seven or something.
I mean, holding a government.
She's holding it in.
Spending.
Admirable.
Inflation.
Yeah. So are they coming back, you think?
It sure looks like it. Yields in the dollar continue higher as we're getting hot numbers coming out of the economy. The yield curve is probably never going to invert again, or not anytime soon, right? We continue to steepen the curve out. Bond yields, 30-year bond yields are bumping up against 5%.
If I just make $175 today, I'm happy.
You schooled me there, man. I haven't even mentioned the yield curve yet this morning. I can't believe it. Can you believe that, guys? I haven't even mentioned the yield curve once. Dan Grant got to it first. You're totally right. That's a big move. That's big, by the way, because what's important is when yields were going up to 22, we were getting a lot of flattening. This is still saying growth, surprise, positive.
Correct. Positive, right?
Yeah, I'm gonna take off my shoes.
Right? I mean, this is what it's supposed to
Put
be.
on my
Normalization.
muffins.
Is this a reflation trade? Don't know.
Footwear.
Might be.
The important distinction, again, and that's what's so key about this, is that when we were getting hot numbers in 2022, we were not getting, or in 23, by the way, we got some steepening a few times, but the curve was mostly flat, okay? So this is very important. This is not saying that the Fed's going to have to start hiking necessarily, right? Because wouldn't that be a much flatter curve?
That'd be horrible.
Correct. Yes, you would see that. You would see the shorter rates pop up, and we're not seeing that at all.
Exactly.
They're staying lower, even going lower.
It's a 2-year out.
2 years at 430. I looked at this morning.
That's nothing.
Which is down a little bit in the last week.
That's nothing.
But 30-year bond up at 491, and yeah.
That's so crucial, Caroline, because you know, look. On the one hand, there's like this whole like policy Trump kind of euphoria thing that I don't know how we describe as anything other than a bubble or a mini one. Just devaluations in the market, right? It's just they only reach a few other times in history, so it's not like we need much to prick that open. But this doesn't mean the Fed's got like a lot of hype and stuff. This isn't the end of the world by any means.
No, I mean, that's certainly not consensus either if you take a look at the CME Fed Watch tool. But I think overall, the tick higher in the 10-year yield is certainly weighing on stocks today. We're seeing red arrows across the board, and even the strength that we are seeing in, you know, energy, healthcare, and materials being offset by bigger losses in discretionary and tech and communication services. If you take a look, the Mag 7, Google, Alphabet is the only one of the Mag 7 now. I was going to say firmly in the green, but even that has pared its gains and it's only up modestly right now. Nvidia, which obviously hit new highs yesterday, retreating after Jensen Huang's speech yesterday, not really doing much to inspire investors right now. But as you said, it wasn't a hyperscaler conference, it's the consumer conference. Thought that was a good one. Tesla also lower after that bullish downgrade, if you will. In terms of the best and worst performers on the S&P 500, though, Palantir is actually the worst performer in the S&P 500. It was a huge winner last year, but adding to yesterday's losses, and it's interesting because Morgan Stanley, of course, assumed coverage of Palantir yesterday with an underweight rating and a $60 price target, which implies about $10 downside from current levels. But Palantir didn't care what analysts were saying all last year for the most part. We've talked about that so much. If you take a look at the breakdown, median price target for Palantir, 41.50. So has been trading very differently to that, but maybe tides are turning. We also saw that Cathie Wood just recently dumped about 15 million in shares of Palantir, so could be adding to additional pressure. Other big winners from last year: Constellation Energy, Vistra Energy also under pressure today. To the upside, though, I mentioned Jensen Huang's keynote not giving NVIDIA a boost, actually giving Micron a boost today, though. It's charging higher after he called out in Micron, saying that they're providing memory for GPUs for their gaming chips. That seems to be giving Micron a boost today. And Micron, a big winner so far in 2025. Shares up about 24% year to date, if you will, only a few days in. But seeing some strength across some of the other chips as well: Qualcomm, Intel, Texas Instruments, Applied Materials. But the best performer on the S&P 500, Moderna, actually. It's one of the few companies developing a vaccine for bird flu, and of course we just saw the first U.S. death from bird flu in Louisiana, and it seems like investors are upbeat on Moderna, which has really struggled to find its footing after declining COVID sales. We saw it a big loser last year, but it's a winner today. We'll see how that plays out. So there are some winners, but overall, red arrows.
Carvana and Moderna, a match made in fill in the blank. Everyone's own preference.
Because Carvana was such a big winner last year, Moderna wasn't.
All right. I like the point also too that the tech stuff had already faded overnight. That's important to your point about NVIDIA, and then also to Tesla too, which was down, and then Palantir 2 getting hit, which is more along the lines of like some of the policy bubble getting popped a little bit, because that was one too that was super like they're just going to get every government contract because they're right leaning or whatever.
So 2 quick points.
Hit me down real quick.
Yields highest since November of 2023, and Apple recovering off the lows after the downgrade overnight.
There you go. Nice eyes on Apple there. Again, better to have hot data than cold. Call me a simpleton. If stocks are selling off on that, then stocks have got valuation problems. So nothing to be alarmed of economically. Good numbers. Maybe some sticky inflation. I think we're done. We have to go. Up next, Trading 360 with Diane King Hall.
Coin reversed. There goes the SPX.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore
$2 to 4.
Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
No, I didn't buy extra large. Yeah, I bought large.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft.
Today's
and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can...
Today's info commercial is Land of the Ozarks, Land of Lakes. Large brown eggs, grade A. Great eggs. Eggs are expensive. These cost $5 a carton. These are cheaper than the other ones, but they're organic. A farmer's own brand. Brown eggs both gave me a double oak. Now I heard that the younger chickens lay the double yolks. Damn, there's 540 on my calls. Bingo! It looks like it wants to head to the 200. We broke the 63, so let's see if it does. Right now they're at 540, and I got them at 2. Oh, we got a 1, 2, 3. 1, 2, 3. We'll get there before the 200. 59.64.89. I'm going to sell mine right here. $59.75s are at $640 now. Thank you, double yolk. Double yolk eggs is a sign of two things. Either you're going to get some chick pregnant with twins, or it's a good luck. I'd wait on the puts until we broke all these moving averages, but I didn't even notice that. That was a good exit idea that I did. If it SPY hit the VIX. Oh man, I forgot my bread. Sheet. Excuse me. Good job, Randy. Oh, belch. Deeter, deeter, deer, deeter, deeter, deer, deer.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I like when he says that.
Where are you going?
Schwab.
No can do.
Schwab, a modern.
We're in a traffic jam.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access. Even
Randy's
when
inputs
are closed, all on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
You sold your puts like a dumbass. Oh.
Trading 360, I'm Diane King Hall. Time now for the big
I called
story.
Randy a
Three stocks,
dumbass.
3 charts, 3 trades. Rick Ducat will take us through the charts. And here to take us through the trades is Jessica Inskip, Director of
Well,
Investor Research, Stockbrokers.
I ate my soup.
It is great to see both of you. Jessica, I'll say Happy New Year to you because we haven't talked yet in the new year. And let's get right to it. Let's talk about your first trade. It's NVIDIA. The shares are under pressure today, hit a new all-time high yesterday, popped out the gate. But tell us about your thesis here.
Absolutely, and Happy New Year to you as well, Diane. So great to be on with you. I really think that this year we're going to have a little bit of a narrow rally. That's what it seems. The big
narrow,
of course, is interest rates is what I'm concerned with. But I think the growth side and NVIDIA could be resilient to that. I think NVIDIA's CES, the keynote that Jensen Huang gave last night, gave me really iteration or this reinforcement of its AI leadership and this inference point that I'm seeing within the AI narrative. What the big concern with the street has been is NVIDIA just chips? is this excessive earnings going to continue at this growing astronomical speed and earnings that it keeps feeding? Is that something that is absolutely possible? And what I heard from the keynote, because we have to remember that Jensen Huang is not Steve Jobs, he's going to give us 20 things, is that there's an integration and an ecosystem that's coming into play where it's hardware, software, and data. And I know that's a long-winded response, but just kind of the highlights from that. Essentially, the NVIDIA Cosmos, there's a platform where it utilizes actually the LLM for Meta, where it's requiring the training, so it's this infra layer that's on top of the chip itself. So you're requiring, essentially, across all of these things that he announced, it's not just the chips. There's a layer, there's architecture on top of that, where it's positioning NVIDIA to really just be the seamless corporation and the go-to platform for AI. It's going to take a while to recognize, but any downturns are certainly a buying opportunity.
Okay, it sounds like the view is there's buy the dip opportunity. But Rick, tell us what your read-through is when it comes to the chart on NVIDIA.
Yeah, pretty discouraging morning so far for NVIDIA bulls here. And the reason why is because you can see that we had an old high right here. This was our old intraday high at this red line, 152.89. That's roughly where we opened up today. We did wind up making a new high slightly above that level, but a large bearish engulfing candle, today's large red candle, completely swallowing up the previous day's smaller green candle there. So definitely not what the bulls would want to see. We had a breakout beyond a short-term white trend line here that took us up to this resistance level, but now we seem to have stumbled a bit here. Recently, we also pulled back to a key supportive area. We had this area right here, our green line, represented.
Always clean. This is Jim. May I help you?
Jim, this is Brandon, the appraiser that's looking at the property on Claremont.
Yes, sir.
I'm finished up here at my other appointment, so I'm heading that way. I should probably be over there in about 10 minutes.
Okay.
Will that be okay?
That'll be fine.
Okay, well, I'll see you there.
I'll put on my shoes and I'll head right over there.
All right, appreciate it.
Yes, sir. Well, you got to go to the bank. Go to the IRS.
Struggling here with our moving averages close by 139 to 135 is our 21 and 63-day EMAs. Now, when we overlay our volume profile study, we can see that this is also a key trading area, an area of heavy volume, as well as down here around 124 and 105 or so. And you might say, why would I be talking about this?
Coin broke to 63.
Still sell puts for about 80 cents or 70 cents or so at this level for next month. So 45 days, you would need like a 26% move to the downside. The expected move is only like 19%. So there's some opportunities in big names like this on days like today where you have a significant downward move. But the level to beat's the old highs, obviously, and the levels of support are 130 to 135 is kind of the main area.
Okay, those are main areas to watch for NVIDIA. Jessica, let's move on to your next trade. It's another member of the Mag 7. That will be Alphabet. Right now, shares are a little bit higher today. It didn't perform as well as some of the leaders, but it did have it did beat the S&P 500 last year. But what's your view here?
Absolutely. So this is going to be actually one of my top stock picks of the year thus far. And it goes again with that AI narrative and the AI ecosystem. And the next leg that I see that's going to come is actually AI agents. There is lots of resources and next-gen assistants and even this Vertex AI agent builder that Google has, or Alphabet rather, that is going to lead that initiative and makes it easier for enterprises. So we still need that NVIDIA chip. There's still this interconnectivity amongst the hyperscalers, but I think AI agents is what we're going to see transform, and really is my theme from the AI lens for 2025, and I put Google on the forefront of that.
Okay, so the next layer of the AI trade.
Well,
here,
I'll be back. I got to go meet a bank appraiser.
What do you see when it comes to the chart of Alphabet? I know it's had some headwinds, but what do the charts tell us?
Another stock that's near the highs here. We had a situation where we hit 201.42 just recently. We came pretty close today, but we didn't quite break through that level. Now we can see that price is kind of a ascending triangle type shape. We have a upward sloping trend line, depending on where you begin, maybe from after the gap here, maybe from this low point here. The general idea still is that we have a series of higher lows, but we are also experiencing a ceiling near this 201 level. So the bulls would be looking for a breakout move beyond that level. The bears, would be having their eye on levels maybe around here, maybe around 191 based on these old highs that we experienced here. That was roughly our high closing price. Or perhaps here, we had a low point and then a subsequent high point after a breakdown below it. That was a ceiling and a floor once again. So you can see support and resistance, it all depends on whether you're above or below these key price levels. They remain important. So 182 is another level to the downside to potentially watch here. RSI also experiencing a breakout beyond a red downward sloping trend line here. So now if we were to incorporate our other studies here, volume profile and standard deviation channels, we can see, well, we're kind of stuck right here near our +1 standard deviation channel, 1 standard deviation above our blue linear regression line. So this could be a potential consolidation point right here if we do get that breakout. +2 channel comes in near about 214. So another potential area to watch down the road. And once again, support 182, linear regression line, repeated stopping point for price. That would be a key level to think about.
Okay, there's some key levels to think about, but again, Alphabet on the plus side today, a little bit higher even with some of the choppy action that we're seeing in the broader market. Jessica, let's pivot to your final trade. It's not a member of the Mag 7, but it had a strong year last year, and that will be Walmart. Even it had a strong year, as some wondered about the state of the consumer. But what's your view on Walmart in early 2025?
Yeah, so it's really interesting how this one came on my radar, but it was a TikTok trend. There is this sold out look-alike Birkin bag, and the fact that that's sold out in a consumer discretionary item is incredible to me. So if but that's where earnings surprises come from. No one is expecting that type of thing, so it's a play that I want to hold into earnings. And then of course backing up with the other data that I like to look at. Even though we had a shortened holiday season, there was a surprise in retail sales that were up from an e-commerce end. Walmart is definitely a beneficiary of that. I think the big headwind for Walmart, of course, is tariffs, but looking at them in comparison to Target, for example, because they're broad-based, that could be an issue, but that's not implemented yet. Whereas this sold-out bag is something that will certainly translate into next quarter earnings. Tariffs is the headwind. Well, I'll wait to see what happens and the market reacts, but that's a shorter-term play, slightly defensive, but an interesting investment thesis based on massive trends.
They call that one the work-in, right, Jessica? I've seen that trend. I mean, I haven't seen it in person, but it's not a bad look-alike, so, and obviously there's a huge price difference between the work-in and the actual Birkin. But Rick, tell us what the charts signal when it comes to Walmart.
Yeah, sure. So a pretty nice chart. I mean, it's hard to complain about just a steady move from the lower left to the upper right here. A little bit of a slowdown recently. You can see now within the past couple months, more of a triangular type shape. We have this longer term trend line going across the lows, but also starting at these highs near 96, you could say we're trending downward. We haven't made new highs beyond that point. Hovering right around our yellow 21-day EMA, but below it right now, on pace for a lower close so far on this rather weak day. Pretty close to our trend line. The next low point here, 89, that was a small gap up and then a low point and then another subsequent low point there at our green line here. We can look at RSI as well and see that our green trend line, a bit of a longer term upward bias has been broken, a bit of fluctuation around that 50 midline. Now it's looking like we are staying within the confines of that downward sloping red trend line and once again drifting back below the 50 midline that separates bullish and bearish momentum. So when we look at our volume and standard deviation studies, we can see that actually up here, this area, this period of range bound activity near about 95 or so was a heavy trading activity area. So 95, 96 could be resistance. Then perhaps 103 based on our +1 channel there. To the downside, well, 89, like I mentioned, is where we bottomed out a couple times around that same area. Then we had a similar point here, kind of the top of a range there, near about 85.50. That could be another, notable point of interest.
All right, 95.96, that resistance level makes sense, especially when you think about the 52-week high. All right, great insight from Rick Ducat, the Duke of Data / Chart Master, and Jessica Inskip, stockbrokers.com. Thank you both. Coming up next, we're going to spotlight Disney after its big deal yesterday with Fubo. We'll find out what it means for the streaming world and more. That's next on Trading 360.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
King Hall, live from the floor of the New York Stock Exchange. Time now to spotlight Disney after its deal yesterday with Fubo. Joining us now is Ken Leon, Global Director, Industry and Equity Research, CFRA. Ken, thank you so much for joining us today. Let's talk about overall the deal. The Disney shares still higher today, up by 1%. What does this signal now about the landscape of streaming, this deal between Disney and Fubo?
Well, it's great to be here, and what this means is trying to create some sanity from a fast-changing industry, one where there's fragmentation. There's always questions in terms of who's going to be the winners and losers as we move from the traditional legacy networks to streaming. What we had with this announcement, and I cover Disney, we have a buy rating, is how to address some non-core assets where they can get some return and value. And that's Hulu Plus Live. I think Bob Iger and the management did a very smart deal where they're able to take off their kind of income statement results that will now be on Fubo that they'll own 70%. What is this? A lot of investors are saying, well, how is this different from a Netflix or traditional players like Fox? This is called a multi-channel video programming distributor. In short, what this means is Fubo is a very smart aggregator of different types of live sports and news for streaming, similar to Comcast Xfinity, Spectrum, or Verizon Fios. So it does two things for Disney. One, I think financially puts it in a much stronger position to win in this category. Two, it gives Fubo certainly the position where they can now compete So it's quite interesting, but again, I would emphasize for Disney, this is a non-core asset. They still have Hulu, where they have an option put clause to buy out the minority interest from Comcast. And they're also still trying to figure out for their sports segments how to have ESPN Plus and perhaps with other partners. So it's interesting. It got a lot of attention. For Fubo, it was a big move in their stock we don't cover, but for Disney, it was smart business.
So for Disney, you mentioned that you have a buy rating. You previously had a hold rating. You boosted your price target to $128 a share now. What's the view on what gets there? I know that's your 12-month price target.
Yeah, so we did that several weeks ago, and it speaks to more visibility for Disney executing on its strategy. You know, the really cornerstones for Disney is having success and experience, which are the theme parks and cruise lines, also their ability to drive profitable growth for Disney Plus, which is beginning to happen. They even gave guidance. It was quite interesting over a month ago for 3 years. I think they did that. It's the first time I've seen that in decades, just to speak to their confidence that they can now manage that massive change from broadcast to streaming. Likewise, cable's not going away tomorrow. It will over time. And I still think they still have very good cash flow generation from areas like ABC and other networks. So I think Disney's in good shape, and I think the market recognizes that.
I want to ask you, you mentioned obviously at the top of our conversation about Iger and some of the changes. I mean, when he came back in, he had to do a lot of cleanup. His role will end again in 2026. Is Disney being positioned better now in your view than it was, especially when you think about just how rocky things have been for Disney?
Yeah, it's a great question. And quite honestly, for Disney and Iger, there's just a little bit more clarity about the tremendous changes that are going on in the industry. Turbulent, yes, but how can you manage great franchises through this? And that really speaks to what Disney's been doing, including the announcement for Hulu Plus Live with Fubo. So I think what investors want to know from Disney, of course, is future leadership could be announced certainly maybe by mid-25 or sooner to who will be the next CEO in 26. You always want to go out as a winner, and I think Iger, along with his team, are putting themselves in a position where Disney will succeed. We can't say that's true for all of Disney's competitors, but when you have monolithic competitors such as Alphabet, Google with YouTube or Meta and Amazon Prime Video or even Netflix, it's a tough game, and it's one where I think Disney can compete.
You mentioned earlier cruises. Another big piece, obviously, of Disney is their theme parks. I mean, they've been revealed plans to invest billions into theme parks and cruises, and the experience economy has been sticky. It shows up in the numbers we see from the cruise liners and the airliners, etc. How do you expect Disney to, operate in this new experience economy? Do you expect them to be a beneficiary of the stickiness we've seen there?
That's right, and for investors, that means these are more defendable businesses with great franchises. They're investing $60 billion over 10 years into experience, particularly for parks and new cruise ships. First week of January, I was up in Orlando, and I can tell you the parks were crowded. The worry that analysts have with theme parks is any hit to the economy or recession, and I would say at least U.S. economy is expected to grow over 2.5% this year, and that's good for parks. And there is discretionary spending, at least for those that are in the middle upper incomes, and we're seeing it in traffic.
Okay, all right, something to pay attention to. Shares of Disney still higher, even when we're seeing some weakness in the market today. Disney up by 1%. Ken Leon with a buy rating on Disney CFRA. Thank you so much. Coming up next, we've got the disruptors. Alex Coffey joins us to take a look at Carvana, which was upgraded this morning at RBC Capital. He'll break down the call and tell us what's behind us, plus an example trade. That is next on Trading 360.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Diane King Hall. I'm in for Nicole Petalides, live from the floor of the New York Stock Exchange. Time now for a look at developing stories this morning. I want to bring in Caroline Woods, senior markets correspondent here on the Schwab Network. We're taking a look at Apple after we got Alex up right now. We're coming back to Alex. I know you've got Carvana covered. We'll come back to Alex in just a moment. We're looking right now at Apple. Shares under a little bit of pressure. This after a downgrade this morning. What is the latest?
Yeah, this is a notable downgrade because MoffettNathanson is turning all out bearish on Apple, downgrading shares to sell from neutral with a price target of $188. If you take a look, Apple's currently trading around 243, 244. So that's more than 20% downside from current levels. Now, reasons for bearishness: too much bad news, according to this analyst. They said, despite the steady melt up in Apple shares over the past few years, there has actually been a steady drumbeat of bad news. And then in addition, a lukewarm response to Apple's new AI features, Apple Intelligence, saying not only have we not seen any sign of an upgrade cycle, something that would have been concerning enough on its own, but we have seen growing evidence that consumers are unmoved by AI functionality, not just Apple's, but indeed everyone else's as well. So going back to some of the bad news as well, highlighted the fact that that judge decided that Google's payments to Apple to be the default search engine were illegal. Apple's position in China, they say, is steadily weakening. And then, of course, the Vision Pro, they said, having disappointed even the low expectations that had been set for it. Now, tariffs are another potential headwind for Apple. This analyst does think that Apple will likely be exempt from those tariffs,
like they were before,
but said that there's genuine risk of retaliatory tariffs actually impacting Apple from countries that are negatively impacted by those tariffs. So all of that has led this analyst to rate Apple as a sell. And then said the company's growth rate is by far the lowest of the Mag 7, and yet its multiple is the highest. The outlook for Apple shares, given this challenging backdrop, is unfortunately decidedly unattractive in our view. So Apple shares picking up a little bit of, the losses are picking up a little bit of steam, down about 0.6% right now, but largely shrugging off a pretty negative downgrade. And, you know, if you take a look, it is down about 3% so far in 2025. It's about 6% away from the highs. So, you know, it is lower so far this year, but 70% of analysts almost still rated as a buy.
That's why I noticed that, you know, more analysts than not are still bullish on Apple. I mean, and there's a few things that seem to be supportive of that. I mean, once you're in they've got more than 1 billion users, so once you're in that ecosystem, it's difficult to get out, even if you're not a big fan of the AI.
True, it's just how much of that is already priced in, and if you take a look at the median price target, it's $250, and it's currently trading around $244, so that's only $6 upside. So potentially fairly valued. We'll have to see if other analysts kind of weigh in. There are only 2 sell ratings on the street, so this analyst very much in the minority.
Yeah, but the valuation argument that it's you know, where it is now is stretched, that makes sense. You know, so it'll be one to watch. We'll see if it continues to be a momentum play. Caroline Woods, thank you so much. All right, time now for the disruptors. We've got Alex Coffey, senior equities contributor, here with today's company. That would be Carvana. Shares are higher. Now, it's been facing a lot of news of late. It had that Hindenburg, the short report on the stock. There were, you know, a lot of things baked into that report, including something about its relationship with Ally. But today, it's got an upgrade helping the shares. Tell us about this call.
Yeah, and also this stock too, Diane, as you recall, also made it back from sort of the brink of bankruptcy. Not many companies actually usually make that kind of recovery. So it's been a fascinating name to monitor over the last few years, and it continues to be just that. RBC Capital's analyst Brad Erickson upgraded the stock to outperform from sector perform, providing a price target that is a slight raise from their previous price target of 280 up from 270. They talk about after the fact that the stocks made this remarkable turnaround last year, they actually see this, what they're referring to as a controversial pullback, probably in the light of what you described with that short report that came out, in these shares as an opportunity. RBC's bottom-up cohort analysis implies retail unit upside at Carvana, particularly as supply improves. And they believe that the gross profit per unit levels are largely sustainable despite recent concerns, and is intrigued at Carvana's marketplace opportunity. They expect marginal.
I'm here, Jake Paul. I'm here.
As the company illuminates a clear path.
We got a bull flag.
Free cash flow. So positive view, seeing this pullback.
We got bull flag.
Recent news as an opportunity to get a little bit more bulled up.
And then you've got an example.
275.
Can you take us through, Alex?
Yeah, so going out to the February monthly cycle.
We're still talking about Carvana.
Neutral to bullish vertical spread. This is a name with volatility very heightened at the moment with all the uncertainty and the fact that this is already just a relatively volatile stock. You look at its performance over the last few years, you'll understand why. Selling a put vertical below the market using the recent lows of around 175.
I understand why.
Point for this particular trade, that's the short strike.
I'd rather wait for it to hit here. We got a Harmony.
Looking for at least.
This is called a Harmony candlestick pattern, and that's called a spinning top. So if you break the 21, it can easily run up and hit the 9, right around 214, maybe under the body of this candle right here. That's where you want to go ahead and put your resistance line. And that's Carvana. Now the SPX 5975 is at 275. Baby, it's cold outside. God, my hands don't like it no more. I used to love the cold. But I mean, it's cold. It's got to be 0 degrees outside. Okay, get ready for a double bottom. Well. Right about here. 195, the 59.75s. Not in them yet. Slow that train down. Got one at 165. Oh, maybe I should have waited on that one. It's funny how that moved up. One, two, three. Right to my support level. Double bottom. See if it wants to hold. Not, I'm going to get out. Could go just a little bit lower, but not much. Let me adjust that support line. That's on the 5-minute. Okay, don't do it. We're at 120, 130 right now, 125 to 130. It's got to really hold this support level, or it's going to come down and double bottom at the top of the head. That didn't want to do that. 115. I walked the banker through. Okay, now we're between the 9 and the 21. That means the squeeze might begin, but we got to stay above this here trend line. And we broke down the triple bottom, so that's called a J hook. And I'm a little bit too far out of the money.
2 GPUs to 1. Now they're doing one where it's 1 to 1, so it's a smaller version. I mean, he had positive things to say.
Yeah, and the CFO's been positive on his commentary. That continues
Stock
in
down
CF.
5%.
Yep, down 5%. Hit a high, all-time high of over $153. Settled at a record yesterday, but some weakness there, leading that semiconductor, the SOX, down pretty significantly after over 3% gains yesterday. Let's expand this conversation. Bring in Kevin Green, Senior Markets Correspondent here. KG, give me your take here on the reversal. I'm blaming it on the data here at this point. You see in yields up at, let's see, the 10-year yield now sitting, it's up there, 4.685 at this point. So the yields causing some headwinds, and the dollar kind of reignited from lows that we saw earlier in the day.
Yeah, I would say I am leaning towards more the economic data as well. I mean, when you're kind of looking at the ISM services print, I mean, we did have an expansionary print, came in at what, 54.1 for the headline number, which is good. It was better than what we saw last month, but the rate of change when it comes to prices is obviously going to scare the markets here a little bit. And it's starting to kind of remind me of what we saw when ISM manufacturing data started to turn like this a little bit, where the prices started to get a little bit hot. And maybe you can make the case that it could be a little bit stagflationary fears. In the market.
Might have to sell this.
Why we actually did see that sell-off. But if we look under the hood, 56% of the stocks are still in the green here today. This is a defensive rotation that's taking place. You're having a lot of traders selling out of their winners in tech and kind of getting into these underloved sectors. Healthcare is doing a pretty decent job here today. You can look at industrials catching a little bit of a bid. Utilities was catching a little bit of a bid earlier, but did kind of fade here a little bit. And staples, for the most part, is pretty much flat. So I think we have a little bit more of a rotation rather than a sell everything type of environment right now. And we have an elevated VIX that's sitting at around 17 and a half, which actually, if you kind of look at the reaction that we had today, you would think that the VIX would actually be up a little bit higher. It's not. Let's see what's going to happen for the remainder of the session here. I get a little bit concerned about yesterday in that technical setup, though, and this will be the last thing I will say. We had like the shooting star candle on the 1 day, on the daily chart for the S&P 500. We tried to look above that 20-period moving average. We closed below it here. Just a lack of momentum towards the latter part of the day yesterday. And then giving this morning's events when it came to semiconductors, seeing that buy the rumor, sell the news event that you guys all talked about here, just kind of shows that we're still kind of stuck in this range or in this consolidation pattern. Until we break below 58.65, or break above 6,000 and close above those levels or close below those levels, I think we're going to remain in this area right now.
Yeah, one of the areas that have been leading the market for the last few sessions has been semiconductors. We saw rallies in NVIDIA into the keynote from Jensen Huang last night. AMD was up over 3% yesterday. Saw some of those names. We got the SOX chart here. Big, if you look at this on a tick chart or candle chart, big engulfing candle here in the SOX, bearish engulfing candle. I got that from Rick Ducat, our lead market technician. He gave me that little bit of note. But the SOX is down 1% today, so lending some headwinds. But Kev, you know, you look at the JOLTS report.
Yeah.
You look at the weekly jobless claims numbers that come in under estimates. The job market's still robust. The economy's still growing 2.5 to 3.5%. So should we be able to absorb the 10-year yield at 4.68%?
Should it surprise us that JOLTS came in higher than expected, or over 8 million? We've been getting strong jobs data all throughout the last month. So not really surprising that some of this data is coming out a little stronger, especially when it applies to the labor market. And by the way, ISM services, positive business activity, positive supplier deliveries, and lower supply chain disruptions is what they reported. So pretty solid number there too, over 54. And I don't think that helped the situation at all.
Yeah, and Kev, with that in mind and prices rising, that's not good for any Fed rate cut hopes, along with that CPI, PPI data that came in a little bit hotter than expected. Also, then, you know, this kind of throws the market into this, you know, maybe idea that, hey, maybe 2 cuts aren't in place for 2025 and maybe we get none. Is that part of the concern that the equity market's having right now?
If they're having that concern and it's only, 4 trading sessions into the new year, we got a big problem on our hands for 2025 here. I think it's way too early to be able to make that call. I think right now,
not until Trump's elected.
Yields that's really putting some pressure here on the markets, especially when you're looking at the longer end of the curve. Now today we will have the Treasury auction for the 10-year. And so that's also going to provide us a little bit of price discovery when it comes to yields. If we have a weak auction there, that could be a really big problem. But I think the market's really just kind of focusing on, I think they are focusing on the rate cuts. What I find very interesting, though, and maybe you guys can go pine on this as well, it seems like we're starting to get back into that we need a rate cut regime in order for markets to go higher. And we kind of got out of that towards the latter half of last year, where we kind of had yields up, equities up, kind of that early cycle behavior. And now it seems like we're getting a little bit more thirsty for rate cuts. And I don't think that's a good environment for us to be in at this point in time, because you brought up the commodity side of the equation. I mean, services inflation has been very sticky over the last couple of quarters.
You're pushing it.
But commodities themselves, or goods inflation, actually has been, for the most part, deflationary. That's going away. Egg prices are up 60 to 70%, almost on a month-over-month basis. You got, energy prices moving to the upside, utility prices moving to the upside. There's a lot there that if we see these elevated levels for commodities over the next month and a half, the Fed's going to be in a very big problem. They're going to have a rock and a hard place type of decision to be able to make here. Hopefully, we're just seeing kind of weather events that are taking place in the commodity space, but I think the market right now is trying to figure out, is good news, or is good news bad news? And I really don't like the good news is bad news, type of markets. Those are really tough to trade, and I don't think it really does us justice here.
That's an interesting point about good news becoming bad news.
Right, and think about that. I mean, you would think like a services number like the ISM being better than expected, but then there's a couple components within there that kind of throw a wrench. 10-year at highs that we haven't seen since last April. We get a breakout above there. People have been talking, Kev, about the 5% level for the 10-year. That's not going to be good for equities. And then you still got the dollar, 108.5. So that's not positive either.
Because what a 5% yield becomes when you think about stocks at a valuation like this is competition. Right? I mean, remember, you've got stocks that are not cheaply valued, and you've got a 10-year that's getting yields higher and higher. It's going to start becoming competition.
Yep. KG, you look at that. You mentioned the fact that we've got some sectors within the S&P 500 that are still positive. There's about 5 of them. But you look at consumer discretionary, information technology, communication services, all leading to the downside. Those are the major components within the index at this point. So to that mantra where, tech led us the last couple of days, off some weakness into the end of the year, I mean, you've got to take that into consideration that if they're pouring out of those and not fully going into other parts of the market, that we're not seeing a broadening at least of the rally, right? Or the weakness.
I mean, we are. Today's a broadening of the rally, a broadening of the market. I mean, market's down, right? Because of the market cap weighting. But I think the S&P 500 equal weight, if I'm not mistaken, was actually still positive on this. It's flat on the session right now. If you're looking at the equal weight S&P 500, look, this might be a value, type of rotation taking place in the market. You can look at each and every one of these sectors here, and you can go on a weekly chart. Bring up your RSI, look at your MACDs, bring up energy. What do you really see? Oversold territories, stochastics crossing. You may look at, some buyers probably stepping in or maybe stepping in. Healthcare, same type of oversold environment. You have the same thing for materials. Financials hitting the 20-week moving average, which has been a really reliable indicator over the last 3 years for it. So I think you are looking at some technical structure that's taking place in some of these underloved sectors, selling out of the big names, and we kind of talked about it on the Future Show, I believe, yesterday. If this is a 4-year bull cycle here, first 2 years you have mega cap tech leading the way. The next 2 years, you could actually have value leading the way. I mean, that's kind of what happened in the dot-com boost or leading up to it. 98 through 2000 was more of a value play than, obviously you had the internet sliver there. But this might be, value kind of is perceived to be cheap right now if valuations are going to hold up and the market's willing to pay a multiple of a 23 or 24 multiple for the S&P 500.
Yeah, it does kind of equate to maybe not fully rotating out of the market, but they are, as KG mentioned, going into healthcare, materials, industrials. Those were really big underperformers in 2024. Maybe a little bit of a safety play. Also, staples flat all there. Also, you see the heat map there. So there is quite a bit of green on there, even though we've got equities at or near session lows at this point. All right, guys, let's take a quick break here. When we come back, we're going to take a look at Tesla The EV maker stock has rallied over 60% last year, but it's been under pressure since hitting those all-time highs in late December. Stick around, Fast Market's coming right back.
Break it. I'm in the SPX. Just one contract here at 165. I don't know if I want to sell it, take the small loss, or $59.75s. Come on, you cowards. Okay. $18 million chandelier. Mine costs $56. Damn it. Come on, man. You get close to breaking out. Need to break it. I'm back to even. Caroline, tell the market to move up. Baby's talking about Tesla right now.
Feels like I'm getting whiplash from these. It's up one day, it's down the next. That's okay. We love volatility here, but you know, there's a lot of opinions on this name, and you're right. They have risk of, you know, full year 2024 earnings. They have risk of EV 2025 guidance. They have all these other, and by the way, we should probably start every show with, whatever we feel about a name, if there's a global sell-off, names like this are going to be involved in a global sell-off.
Yep.
That said, full self-driving and robo-taxi and all these
As far as I
things that
care,
it's working on,
we're the only
at
market
least
that's
from
been
a
up.
regulation perspective, are probably getting closer and coming to fruition faster, Caroline.
Yes, and I think the question is, how much is that already priced into shares at these levels now? And it seems like maybe B of A would sort of take the case that it's, as the analyst said, becoming more fully recognized, although there's still more than 20% room to run. So it just seems like maybe this is kind of a cautious call from B of A. I mean, if you take a look, Tom mentioned the upgrade yesterday. That was from New Street. That's with a $460 price target for a buy rating. So that's $30 lower than B of A's price target. And they are looking very much at the same catalyst in terms of growth reaccelerating with the lower cost model, FSD progress accelerating, and you know, they think that
The more it waits, the longer I don't like
continue
it.
to be reflected in share prices. It's hard though when you take a look at the analyst.
We kind of broke out of the flag. We're holding up the 9, and we got a 9/21 crossover. So if we, just saying, I'm not. Tempting to just get out of it, not forget about it, Damn it. See, it didn't have to happen. I'm going to triple bottom here. Getting a little risky. Tesla had a snake breakout pullback higher low, but that's the first time I heard global sell-off. I thought we were the only one that was up. And some of them were wanting to put money in Europe, and I said, "Are you kidding me?" Heard that story before. Okay, well,
Kev's talking about there is pretty significant.
50-day moving average right there. KG, as I mentioned, implied volatility levels elevated in the top 1/3 that we've seen over the last 52 weeks. How do you want to look at this from an example trade in Tesla?
Yeah, so actually looking at next week, or the January 17th expiration here, is trying to sell a credit put spread, selling the 370, buying the 360 put spread, doing this for a credit of $1.90.
We're not close to the 50.
The credit received $190.
That's down here at my 360 level. That's where I'd want to buy it.
$10 spread minus the credit received here with a break-even point of 368.10. This is trying to capitalize on the high IV that we are seeing in the stock for right now. I mean, if we do see maybe some stabilization in prices and the implied volatility kind of goes a little bit lower here, trying to look for that credit to really kind of juice, be reduced and be able to buy it back at a cheaper price. You have to be aware of that 360 level for an area of support. So if it kind of blows through that 370 level, probably risk management before the time of expiration is probably going to be key for this particular trade, but you're still trying to maybe some buyers are going to
I got to make a business decision here
until January 17th, and that's where the trade can be maxed out if it's above 370.
All right, yeah, let's break this down. The stock has pulled back 19% from those all-time highs that we saw just at the end of December also, so it's had a pretty significant pullback, nearly in correction territory, bear market territory if it gets down 20%. Let's take a look at this one. Jan 17th, so just 10 days to expiration. Sell the 370 put, buy the 360 put short. $10 wide neutral to bullish put vertical. Collecting roughly about $1.90 credits what we've got on there. Probably collect about $2.10 right now, so a little bit more because the stock has moved down. But if you collect that $1.90, $386.10, Kevin, is your break even to the downside. So you've got that big cushion you're taking advantage of, high implied volatility, and the move down that we're seeing today.
Right. This is Kevin using technical analysis to try to look at a place to enter or a fade point on Tesla. And he goes to the 370 put, collecting about $1.90. It's probably trading closer to $2 or slightly over now. So this is one of those, Tom, it's collecting theta, it's risk defined, it's high probability, doesn't mean it doesn't have risk. And the risk is the width between the strikes minus the credit. Whatever that is, that's where your risk is.
Yep, just about $800 on that one. KG, when you look at that, you mentioned, maybe try to buy it back cheaper. You've only got 10 days, and it's short-term positioning. So time decay is going to work in your favor here on this one as it contracts in value on a daily basis.
The market's closed on the 9th.
Hey, if it remains above 370, you just want it to go out worthless, right?
Exactly, but what you would like to see leading up to that expiration is prices kind of stabilizing for a little bit, right? If you continue to see implied volatility moving to the upside, and you're seeing wide-ranging intraday swings, that's where you get a little bit more cautious around the trade and maybe you have to take some action here. But this is trying to capitalize on a crush or IV crush over the next 10 trading sessions here, and if that does not happen, once again, you have the ability to risk manage, and once again, this is risk defined as well. So the most you could lose is going to be the difference between the spread minus the credit received.
Yep, probability of that short 370 strike finishing out of the money about 73%. So you've got that higher probability of success, but that's why you're only collecting roughly about $2 on that short $10 wide put vertical because you do have that higher probability in this position. All right, great stuff. Great look at the Tesla trade. Thanks to Kevin Green, senior markets correspondent here for joining us. But coming up after the break, we're going to be joined by Landon Swan from Likefolio for a look at sentiment data in Lululemon. Yeah, leisure stock struggled in 2024, but it's rallied 75% from 4-year lows that we saw just about 5 months ago. Stick around, that's up next.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists.
We're having technical difficulties.
All with low fees.
We're experiencing technical difficulties.
Carl.
We're experiencing technical difficulties.
Schwab, a modern approach to wealth management.
Here we go with 3 small white soldiers. I haven't got out yet, but I'm thinking about it.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Landon Swan. He's a co-founder
If we
of
can break to
Lightfolio.
63,
Welcome back to the show,
I guarantee
Landon.
we'll go on up.
Good to see you.
Good to see you too.
Hit that trend line at
It's been a roller
59.50.
coaster for Lulu investors.
So,
Saw
it's
some
either
weekend
get out
foot
here.
traffic sales in the U.S., especially that's
Shut up. I'm going to trade. What do you think, Randy? You're still in them? Did you get in the same time I did? Oh, an earthquake in China? We got to keep the politics out, at least if it ain't got to do with stocks, we got to keep the politics out of the room. That's why I created bureaucrats. I was going to just eliminate it all, but we had a vote, so I'll let you win. Come on, break it. If I get back up here, it ain't going to be very much. Be even a little above it. Now, if we can stay above the 63, this is our second crossover with a 9. Damn it. I'm not feeling it either. But we do have a megaphone, kinda. If we can get back above, we just didn't have a full body candle above that 63. I think we'll know here in another minute or two. Stuck. Yeah, it's not working. We just now hit the right shoulder for the first time. We hit left shoulder, head, right shoulder. See if it still has it in it. We got higher highs with a double top. And we got a short week. The 9th, I think we're closed. Yeah. Give it a few more seconds here. Where's my coffee?
And then we've seen the pullback in the equity market, which are at session lows. All right, good look at the bullish, unbalanced or broken wing call butterfly there in Lululemon. But let's take a quick break now. We come back, we're going to take a look at Apple. The iPhone maker stock was up 30% last year, hit all-time highs in the month of December, but was downgraded on valuation today. Stick around.
I hate to sell it right here, but it's going to have to come down to it. This is a day low, triple bottom. So triple bottom's usually an upward channel, but being in the now right now, PLTR down $5. Love Airlines is down. So we got a triple bottom. It's almost like a fallen wedge. Come on. Thing didn't want to get in there. Jenny have a tattoo? Yeah, I got to get out of here. It's just
we're at session lows as we speak. Let's take a look at the four major indices here. Got the benchmark S&P 500 down at nearly 0.9%. The Dow Industrial is now off over 100 points. That's actually being supported by a couple big names in there. Remember, that is price weighted. NASDAQ 100 down 1.5%, giving up all of yesterday's gains and some of last Friday's gains. And then the Russell 2000 small caps also down nearly 0.9%. So we're seeing some weakness. 10-year yield has kind of flattened out around 4.67%. But as Kevin and I were mentioning it earlier, in about 15 minutes we're going to get the results from that 10-year auction. We'll see if that's weak like the 3-year was yesterday. We might actually have maybe some more headwinds for stocks if we see those yields pop, because right now we're at about 8-month highs for that 10-year yield. All right, let's get into, Kevin, a discussion about Apple. MoffettNathanson downgraded to sell in Apple. They were already neutral, so they missed the rally, so they were wrong on the way up. 30% gains in 2024 to all-time highs just last month.
260.
You and I, we've talked about this name repeatedly, at least once a week, just because the valuations are so high compared to historicals as they roll out their Apple AI, their Apple Intelligence on the new iPhone 16s and the iPhone 15s. That super cycle never took place, but it seems like the optimism in these shares. I mean, this stock was actually positive earlier on a downgrade when the market was lower also.
How important is this earnings call coming up for Apple?
At the end of January.
It's going to be massive.
Massive.
Right? Because all this rally from mid-June to here was about this super cycle, and you have to think if it was going to happen, it would have happened for Christmas, or at least in the fourth quarter.
Yeah, so
there's
we'll get
a
some
lot
results.
of pull forward in this stock that people are starting to question, frankly, doubt that they're going to deliver on.
Right, and we always talk about that Apple does things the right way. They don't always innovate as quickly as like Samsung.
They're not the first.
Yeah, but they seem to do it the best.
Yes.
And they develop it into their ecosystem where, you and I are Apple ecosystem people, and we're not going to leave.
No,
it's
not now.
It's difficult to leave. I mean, we could leave, but it's difficult to leave. But I think a lot of the hope and optimism we just had there on the screen is the Apple Intelligence, and they haven't released all the functionality of that yet. That's still later on this.
The volume's real slow.
It's the full upgrade. Maybe then I'll actually use Apple Intelligence, because that's the thing that I'm getting from a lot of people that have the iPhone is that, well, I think I have it on my phone, but I don't use it in any way.
Right. I mean, if you're not a regular person that goes, "Hey Siri, what you?" There's a big percentage of the iPhone population that probably doesn't use voice controlled or AI or things like that.
Right.
That's where they may have missed their mark, assuming that everyone that didn't have a 15 or 16 was going to upgrade because of Apple Intelligence. Well, that might be getting ahead of himself. We don't know what the numbers are going to be yet. They could still surprise, but boy, this earnings event is going to be a volatile one.
Yeah, and MoffettNathanson, the analyst, came out. He did say that steady drumbeat of bad news, the payments that Google makes to Apple each year, that could be under scrutiny. The incoming Trump administration. Part of the reason the rallies happened is because that Tim Cook navigated the tariffs in Trump's first term, and I guess they're on equal footing there, so maybe that will help. But we've seen the stock rally pretty significantly. So I based my trades that we're going to look at here for examples based on this note. If you think it's going to go lower, or maybe you have Apple as a stock position and you want to maybe protect some of the gains, or hedge maybe some of your bullish position. So first trade we looked at, Kev.
Yeah, I got to get out of this.
Weekly cycle. So this will avoid the earnings event at the end of the month.
I don't think it's going to work.
Expires before that. Buy one of the 245 strike puts, sell two of the 235 strike puts, and then buy one of the 232.5 strike puts. You're paying roughly about a $2.50 debit is what we got up there. Well, that's when the stock was only down about 0.25%. It's about $3.20 right now, so it's actually expanded the price of it. Now you can change strikes and stuff on this if the stock has moved down. Maybe you buy the 242.5 strike put and move all the strikes down one.
I don't know if you were watching the price action in Apple this morning, but even with the downgrade, even with the market softening, it hung close to unchanged for a big portion of the morning and then broke hard down $3.
Right. It was actually positive. Right?
You got a chance to hedge or get short and stayed with all the news out. Early morning, soon after the market opened, and now it's down over $3.
Yep. If you pay $2.50 debit on this, that's going to be your risk. The debit you pay on this type of strategy is going to be your risk on it. Should be $250 if you pay $2.50. Pay $3.30, it's going to be $330 in risk. Break even would be $242.50 to the downside. We're already below that, so that's why you're paying more for this position. But even if it does fall below 232.5, the downside of this put butterfly to the downside is still more than a double in profitability on this one. Mm-hmm. Kev, and this isn't one that you expect the thing to crater down to 220. You'd still be profitable. But if it grinds back down towards 235, maybe consolidates below 240, it's going to be a decent trade.
It's just a directional play using one short spread to finance or lower the net debit of the long spread. And the target where you want to set those short strikes is your target. In this case, it's 235.
Yep, buying $10 wide bearish put vertical in that, and then offsetting some of the cost by selling the $2.50 wide put vertical with that same short common strike at 235. That's where we've got short two contracts on that. So that's a good look at the bearish put butterfly in Apple. Now we've got another trade. It's a bonus trade here in Apple. Now we mentioned that if you own the shares, maybe in your portfolio, maybe in your 401k, maybe in some index.
94 billion.
This is another strategy that's neutral to bearish, where you take advantage of maybe giving yourself a little cushion to the upside while still taking that stance that, hey, I don't think it's going to go much higher if it does go higher at all. Going out to that same January 24th option series, so avoiding the earnings event, sell the 250 call, buy the 255 call, short $5 wide.
February 6th.
The bearish call vertical. Now, we got $1.20
I thought he said tonight.
on that. I'm guessing it's not trading $1.20 credit because the stock's now down nearly 1.5%, trading closer to 80 cents on this. So you can adjust strikes on a trade like this also. But if you sell this $5 wide short call vertical, that's out of the money to the upside, and you collect $1.20 credit, that's what you can make on it. You'd have $380 in risk on it, but your break even on that one, $250, $120 if you collect $1.20 on it. But you might have to adjust maybe your price on it. But Kevin, this gives you that opportunity that, hey, if I own the shares, I can hedge maybe my position by selling an upside call spread, or if it's a speculative type of position where I'm giving myself a better probability of success, right?
This is one that was probably trading 120.
It was.
Late, early, about an hour into the open when this stock was hanging in there. So there was opportunities to do this spread today at those prices now. Now, do you want to maybe adjust your strikes potentially lower? What the learning lesson here is the strategy. And this would give you downside protection, but room on the upside for the stock to come back and you still be profitable, despite the downgrade.
Yep, and the 240s, the short 247.5, 252.5 short call vertical, still $5 wide. That's collected nearly 120 credit on that. So, like Kevin and I mentioned, you can adjust these strikes based on where the stock is at the time. When we looked at these about an hour and a half ago, they were trading at those levels, but Apple has sold off. Now, if you sell that 250 call, that's got a probability of finishing out of the money about 78%. So that's what we mean. You're giving yourself a higher probability of success, but you've got more risk, about $380 if you collect $1.20 on that one. All right, that's going to wrap it up for us today here on Fast Market.
Yeah, I'm still in it.
Right here on the Schwab Network. Next Gen Investing is coming up.
Apple had a downgrade.
Join me, Oliver Rennick, alongside Schwab Network's
Oliver
experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who
got down to 45 cents.
And
now we're at 75.
Online education.
Again, we're at the 63.
Also, you can trade brilliantly.
If I can just get one body above it, I'll be happy. This will either sell now or wait. Oh, there we go. That's an engulfing candle. Maybe that'll get some interest in the game. Better sell it now. If I can keep that body above that 63, I think I have a chance. That's on the 1 minute. If not, it's really going to depreciate. Oh man, she looks hot today too. Smoochy, smoochy. I'm feeling a little bit better about it now.
been at highs. I don't know about a 5% pullback, but it was not really all that exciting as far as a keynote, at least as I was concerned. Maybe I'm being too critical.
I love how you just framed that, and I don't know if you did it entirely on purpose, but you basically said what my favorite thing about financial news is, which is stock does X because of X, and it changes, and they just simply switch it.
Switch it.
Even though it's the exact same story, same news, nothing changed.
Yeah, I think it was bothering me this morning, so I was like, wait a second, what happened to all the bullish commentary around NVIDIA, which frankly, they did unveil some cool things like their own personal computer now. They're also going to ramp up some of their chip as far as for gaming, but again, gaming's 10% of their revenue. I frankly wasn't thrilled, and when you have a stock that's closing at its all-time highs, I think you have a really high bar, and we're seeing that maybe today, especially throughout our Mag 7.
That's a nice knife on NVIDIA.
Everything here. Bitcoin futures also down about 5.25%. So some overall weakness, really outside of the dollar as well as the 10-year and crude oil and gold. So we'll step away from the macro as always on the show. We will kick things off with upvote and downvote. We'll be charting and trading those upvoted names. And for FOMO, we're actually talking a move that's hanging in there, and that is Micron, which is still up 4% on the session, as perhaps being seen as a memory maker making a comeback. We'll dive more into some of the favorable activity around CES for Micron, of course, later on. We'll also be discussing Carvana and the latest volatility that has been this name. I say latest, it's always volatile, frankly, after closing out up over 280%, I believe, for last year. And we will close things out with under 30 today, talking Aurora Innovation actually tracking for its best day since November of 2021 after announcing a partnership with NVIDIA and Continental for self-driving trucks. So that is the one area, again, that it is hanging in there, but a lot of these names have given back a good majority of their earlier strength. I say that, but the stock is also up like 38% as it stands.
Yeah, that'll be a fun combo. I'm looking forward to that with KG later on, that Aurora Innovation, one of the self-driving names. So one I don't think we've talked about before, so looking forward to that. Let's do upvote, downvote, though, not endorsements, not recommendations. All over the board here, but there's probably a theme in there somewhere. Let's start with the first name on our list, which is Costco. This has been a really, really nice performer for quite some time, but it does seem that it kind of ran into a wall around 1,000, and it's kind of failed to break through there, slipping back quite a bit now, down to 920. But when you look at the grand scheme of things, we're talking about a grocery warehouse wholesale company, and this chart really, really impressive over the last 12 months.
I know, I was going to say maybe we have a food theme for our beginning of our show here, maybe because it's lunchtime in Chicago, and I was just thinking about Costco and their food court, frankly, which has been, I mean, some of the most amazing because prices really haven't changed, gosh, in the last 2 decades or so, but unfortunately, like you said, some more negative commentary from the sell side today. Bernstein reducing its price target to 1,058 from just over 1,130, while keeping that outperform rating. They do expect the renewed inflationary pressures on the back of potential tariffs and wage inflation in 2025, which is a net positive for a lot of these mass and club retailers, but a net neutral for dollar retailers as consumers need to trade down. That is, of course, then offset by higher labor costs, and also makes it a net negative for home improvement retailers, as this could dampen the rate cut outlook. So I think that the historical evidence does show that typically we do tend to see growth, but they're highlighted right now this gross margin pressure to varying degrees with expected continuing inflation. So I think the importance there of the fact that we are still in an inflationary environment, despite the fact that it seems like every other day we're basically at new highs in the overall market. Costco is, of course, very much loved by those that cover it. 25 buys and 14 holds and not a single bear. So I think that fair to say there's still strong conviction in this name, but yeah, a pretty decent pullback from its all-time high.
Yeah, decent pullback. Perhaps some of the reasoning behind
Cost.
that is some of those inflation fears bubbling back up. Maybe some concerns about, are we finally going to see a slowdown in the economy? The data today definitely doesn't suggest that aspect of it. But when you look back over the years, I mean, it's been tough to bet against Costco. So even with this, the price target's lowered, but it's lowered to a new all-time high. So it's still a pretty bullish.
It's not lowered to no time high.
Let's talk Shake Shack. One of these, names that has made quite the comeback when you look at it on a longer term, breaking out to what I believe was new all-time
I actually pulled back to my
highs,
third
just last
support.
month, made a run at them
Last
today,
week.
was unable to hold that, kind of falling back towards unchanged as the overall market stumbled here.
Yeah, 7% now pulled back from that all-time high, but I will say that Shake Shack and Costco are only 2 of these 4 that are near at least their all-time highs. The other 2, you have to zoom out a bit further on your platform. But Shake Shack with an upgrade today from Barclays to overweight from equal weight. Price target also raised to 150.
I got out of it.
125. Just for context, the street high in this name is 160, so this definitely puts them at one of the more bullish targets among those covering this name, 24 analysts. But they do expect the company to guide now its 2025 comp growth in the low single-digit plus range, with unit growth in the mid-teen plus range, supporting mid-teens plus revenue growth. So with comps, they do say being relatively modest and the stock's valuation no longer outsized relative to some of its high-growth peers. They think that they should continue to perform it now in 2025. This is actually our best performer of the bunch on a 12-month basis at this point, up about 85%.
I sold it.
Yeah, and you can see it when you look at the chart, done really, really nicely. And the thing is, too, that I think is most impressive about it is that it's kind of made back those losses of the previous few years.
$75 loss.
All the way, because if you look at 2021 into 2022, it was a disappointing name, bottoming out towards the end of the year, but also in the middle parts of the year, which reminds me of kind of what Meta and the Netflixes of the world were doing around then. So really sold off with that growth kind of cohort in 2022, but slowly but surely building it all the way back up, basically to all-time highs nearly this morning. So nice performance out of Shake Shack. Cheesecake Factory, great stock ticker in cake. I don't know if we've talked this before. I'm sure we have. I think most are familiar with the brand restaurant across the country. But
$80.
A relatively rough go on a longer term, let's call it 4 or 5 year time frame. But altogether, pretty nice 12 months.
Damn it.
Pretty nice
There it goes.
performance as well.
Yeah, actually, this is one that pleasantly surprised me because I was like, I mean, I haven't been to, maybe this is just anecdotally, I haven't been to a Cheesecake Factory, I think, in 15 years. So
I was just too far out of the
need to
money.
get back into it because that place you can eat for like, I think like 50 people for
Damn.
one serving. It's.
If you can make it through the menu is like a geometry textbook.
I was.
Wouldn't you know? Man, she can yak.
$1 price target. They did say that they've become bullish on the stock for the first time since launching their restaurant franchise back in 2011, saying they anticipate this breakout performance now in 2025 as the model is now finally armed with same-store sales and margin upside. So they did say that in their opinion, the rest of the portfolio now hits an underappreciated unit growth, as well as some of these coveted brands and valuations that are seen as a discount to some of their peers. So with, again, it's underperformance, but I say that this is a name that's actually performed pretty decently over the last 12 months. It's up 50.7%. So it's not exactly like it's underperformed by any means.
Yeah, no doubt. And it's not necessarily the name that you would think of as like an outperformer in this recent environment either. So that's, to me, what I think is most impressive about it. Not one that I think of when I think of publicly traded companies, but it's on my list today because we're talking about it. Looking forward to seeing where cheesecake or cake goes from here. Last one, DoorDash. Maybe you can get Cheesecake Factory on DoorDash. I bet you can.
I bet you can too. I should check that actually because I am an all too frequent user of DoorDash. And I will say that I was surprised actually how massive DoorDash has gotten. I know it's not really comparable to a traditional restaurant business model, but now its market cap stands at around 70.7 billion, excuse me.
70?
So 70 billion. Yeah, I mean, I guess that's surprised to me because consider the fact that like Shake Shack, for example, its market cap is.
Why didn't we think of that idea?
I know. Well, right now we'd be fighting for that coveted market share because there's so many delivery services. I know DoorDash has the lead right now as far as its share of that market, but gosh, I mean, there's like 100 to pick from, especially when you live in an urban area, frankly. I know that Uber Eats is also a pretty formidable competitor, and actually this was part of a broader note we saw from Cantor Fitzgerald, raising their price target on DoorDash to 200 from 180 with an overweight rating. But their commentary was pretty macro, at least on the internet space. They did say the fundamental backdrop for internet stocks does remain healthy into this year, despite emerging risks like, of course, tariffs and the pace of innovation in areas like AI and AVs and robotics. They did still say that they expect digital ads and e-commerce and mobility to deliver strong growth and margin expansion. And DoorDash is actually one of their top picks in 2025 with a secular growth story. On the contrast, they actually reduced their price target on Uber modestly to 75 from 90 a share with an overweight rating, and also did raise their price targets on Amazon and Alphabet.
We broke out of the wedge too.
But I guess I just was surprised how massive this company has become. I know it's had a pretty
God, girl.
it was around $257 a share.
I'm not sure if I like her top
I've
tonight.
seen, though, a name turn the corner.
I guess I would if I was sitting by a fire with her.
Consistently being able to have, positive EBITDA, and I know it's been a while
You
that
can't
it's
touch
been
this.
that way, but it did have some struggles when you looked at net income in 2023 and 2022 in particular. So it seems to have gotten to this place where it's able to kind of grow now effectively. It doesn't have a ton of debt. I'm just fascinated and kind of shocked.
3 matches closer to where I need to be.
Delivery software company, but that is the world we live in. 60 or so times forward earnings is where it's
When my hands got so cold today, I cut my finger.
range, but not anywhere near the kind of max that we've seen over the last couple of years. If you look
There's
back,
that Band-Aid.
kind of March of last year, it was
On my face.
So it certainly has room to swell in profitability or in valuation on that metric. If you do believe
Might get back in it here
markets are going
if we break the 200.
higher valuations for things, but when I look at this one, I'm just impressed to see that a simple idea like, hey, let's help restaurants deliver food can become 70 billion, and to your point, very competitive space too. So, apparently there's plenty to get to spread around despite that competitive nature.
I mean, no kidding. And I know, again, we pulled back from highs here at around 180, 178 a share, but gosh, a 6% pullback with a really healthy chart, at least over the last year or so. So yeah, it's been an incredible story to watch, and I credit DoorDash, Uber as well for, the excellence in which they've handled a difficult business model, frankly. And both of these names.
That's one of my
have seen
smallest
really
P&Ls that I've had in a long time.
But we'll actually be diving more.
Today I've only made $95. That's a lot less than my average. Oh. If we break the 200, I'm getting back in. Now there should be some bargains in if the market turns around right now. We've got Nvidia down $7. Regetta, I'm waiting for about 16 on it. No, I'm not. I'm waiting for 11. Well, I'm going to set an alert above the 200 here. 200 EMA. We're having technical difficulties. We're experiencing technical difficulties. $95. God darn it. It's better than red. I've never had a double yolk until this month. Now I got 2 of them. Maybe that'd be a good sign for my test this weekend, my calcium test. So today's Bible verse is not girdle. Okay, it's called GNASH. Grinding of teeth together that expresses great emotional upheaval, such as rage or anguish. LAM 2:16, Matthew 8:12. Gash, GNASH, which I don't know if that even has a word. Ganache, Gash, GNASH. Gird, part of an article of clothing such as a belt or fastened with a belt. Samuel 17:39, Acts 12:18. Now here's evil one, Satan, the devil. John 17:15, John 3:12. Okay, get ready. I have to move these up to the 5960s. Yeah, I should have added there when it was down there 50 cents. I think that's what they hit. 45. I could have done pretty well with that. 45 cents to 85. But dumbass didn't add. Okay, let's go through the watch list like I said I was going to do. Oh, Shaq.
Off at this point. Now we can see that we have a very modest green upward trend line, a little bit of a sharper red trend line going downward here, but kind of within these
oh my, there's a beautiful trade right there.
So maybe a bit more of a bullish bias here, but the bulls would want to see a breakout in terms of both price action above our ceiling and an RSI above our downward sloping trend line, Jenny.
Okay, so last but not least, when we watch these levels of course, some support and resistance, what are we keeping on our radar going forward? As far as the street's concerned, they say 159, which is, I mean, as high as really the street goes. I saw 160 was the highest, I believe, in this name. But what are we watching as far as some near-term price levels?
Well, we've got our standard deviation channel study here. We've also got our volume profile study that we've overlaid on what we're working with before. We can see that we are crossing above a important volume node, relatively speaking, for our near-term price action, near like 130, 131 or so. That's the heavy trading area. So we are retreating back sort of within this heavy trading area that it contains our yellow 21-day exponential moving average. So this area, 130, 131, could be a key support area.
I could have made a lot more back there.
Small gap up and the subsequent low.
It's at 110 now.
At this level near 125. So if we start to break through our trend line, 125 is the site of not only our previous lows, but also our linear regression line and our orange 63-day exponential moving average. All the big volume all the way down here near 103, though. Pretty big drop to get to that point. But to the upside, 140 really sticks out. That's about where we topped out. That's about the side of our +1 standard deviation channel here. So 1 standard deviation above that linear regression line. That would be the kind of breakout area to keep an eye on. If that were to happen, +2 channel comes in near 158. We're pretty close to some of the levels that we mentioned earlier. And now we can see 5-year chart. Well, kind of a interesting setup here because the highs that we're at right now pretty much are the old high there. So about 140. It's also the weekly +2 standard deviation channel. So potential consolidation here. Not saying we're going to crash or we're due for a pullback or anything, but a curious set of weekly bearish divergence kind of matching these other areas that were precursors to drop-offs. Not saying it's going to happen. Just be on the lookout. Be nimble with your trading.
Okay, now I was somewhat applauding this name because we are closer to these all-time highs than the other ones we were looking at for as far as like restaurant stocks were concerned. But this does illustrate a different picture here when you zoom out and you see that, well, we are continuing to see bearish divergence over a more long-term trend. So I think great point out there. And it's still up 1%. So as far as the street's concerned, lots of love for this name. I mean, an outperformer in the restaurant space, which has been difficult as, of course, inflation is one of the major components of operating a restaurant with food costs. But nonetheless, walk us through how you think about trading this name for example purposes.
Yeah, going for the 140 mark as a potential target to the upside. Looking at a call calendar spread in this name just till the end of this month. So selling January 24th, buying January 31st, 140 calls, 50-cent debit means $50 in risk. Looks like a mountaintop risk profile. We've talked about these type a lot over the recent years and months, Jenny, when you're looking at this particular strategy. We kind of talk about it as like throwing a dart, finding an area on the chart, projecting that point, aim small, miss small. In this case, 50 cents means $50 in risk. A very customizable trade. 140 is the target for Shaq with this particular example. But if you have a different target in mind, you could adjust it accordingly.
So a bit more modest than our 160, but looking for more, obviously, that near-term
Barkley upgrades
activity.
Shake Shack to overweight from equal weight. Price target 159.
Maybe a larger company than both Alex and I had realized, and also another name.
Now what
that
is it
looked
here? It
really
says
strong, and I think you have
159.
to give them credit because I for covering the gig economy space for so long and the ride-hailing food delivery space. I mean, the outperformance in this name has been commendable.
Yeah, so recent price action here has formed a triangular shape, but after a lengthy rally, we had a bit of a drop-off. We trailed off here. We hit these lows here. We didn't quite make new 52-week lows at that point based on our current price activity, but this was the start of a rather lengthy rally. We touched on our yellow 21-day exponential moving average a few times along the way. That was a general area that was supportive there. We also had this blue trend line that was price action was mostly sticking to pretty cleanly. You could extrapolate it, put it across those highs to give you this channel type shape. Now we have trailed off a little bit despite making new intraday highs. We have not been making higher closing prices. This was our best close back here in November, just around the 180
360,
mark. So
baby.
you can see now that after a push above our previous day's highs, we were hanging out above our yellow 21-day exponential moving average. Today we are forming a bearish engulfing candle, big red candle, completely swallowing up the previous day's small green candle here. So not what the bulls would want to see as
370.
we test the supportive level here.
Okay, I'm going to sell them here.
Engulfing candle needs a downside follow through the next day though, so that's a key component. Be on the lookout for kind of a break out of this pattern.
Yeah, and hopefully able to recover its highs here because we've also pulled back pretty substantially, although all-time highs, I believe, are a bit further away in this name. So now when we look at momentum, any divergence here?
Well, not so much divergence right where we are now. I guess you could, you know, look at this and say this was a notable divergence point here. We had a high point, another higher closing high, and even though we were managing to cross back into the overbought area, things were not really looking super good. And what this tells us is that the pace of the gains is slowing down. So when you're watching a stock and it's kind of struggling to squeak out more and more kind of narrow highs at these elevated levels, it can be a warning sign. It's certainly not a crystal ball that tells you a drop is coming, but when you are having trouble making new highs and momentum is falling and you're breaking through your trend lines and etc., it's something to take note of here. So right now we are crossing below the bearish the 50 midline to cross over to the bearish side of the spectrum once again here. Very short-term green trend line still in play. Longer-term red trend line has been broken. So kind of a question mark right here. Look for a push beyond our triangle boundaries and an accompanying breakout in the RSI for further clues.
Okay, so last but not least, and again, I do think the importance there is obviously using multiple indicators. So I'll just go off one and base everything on that. As we know, things can oftentimes change. But as far as assessing now some key levels we're watching, what are you keeping on your radar?
So the area here, 178 to 181 or so, that represents kind of the closing highs that we established and the intraday highs. Kind of around that area is also where the volume starts to really drop off. We've got a node here near about 176 or so. That was where we were rejected earlier today, and we are slipping below that 21-day EMA once again there. So that is the area to watch to the upside. Maybe 178 to 181 are some notable price points. The green line here, a couple lows there near 168, and then we had an old high point near 165. That's about where we bottomed out recently, and that also lines up with our orange 63-day EMA. So to the downside, maybe the most extreme boundary would be 165. To the upside, around 181, 182 or so. Now to look at a quick 5-year chart here, actually going back to December.
Meta's at a resistance right now to break.
You're right. Those highs are pretty far way off. They were all the way over at 275 there. We are getting close to our +2 channel there, our standard deviation channel near about 189. So that could be an area to watch as momentum continues to suffer on our weekly chart here, Jimmy.
Yeah, and I also will say that I know we got a price target raise today, but not exactly acting favorably as we're down about 2.3%. So appreciate it, as always, Rick Ducat, our chart master. And now we trade to this name. And actually a very similar chart to Shake Shack in the sense that they both outperformed, but seeing some different price activity, especially when you zoom out, and obviously a different name as far as like its reach into restaurants and consumers into the new year.
Can I have a smooch?
More upside maybe by the end of the month, and you want to structure a strategy where you can control the risk but not limit the return too much. I looked at a call vertical spread that's sort of at the money, buying the 172.5, 180 in the January 24th cycle. So just going out a few weeks here. So looking for kind of a near-term bottom maybe to be in a name like DoorDash, and then to turn around, perhaps move to the upside. As structured, $7.50 wide spread, elongated Z risk profile, you'd be risking $250 if the stock did not rally, but you have a chance to make upwards of $500 on this spread. And so when it moves up,
not dash.
Best case scenario is a move above 180. Below 172.5 is where your risk is. 175 is the break-even point. $7.50 wide spread. Take that debit out. You're left with $5. That's your max profit, 500. Max loss, 250. 175 is the break-even point. So you need some help from the market here, but 2-to-1 reward potential versus the risk. So a little bit of positive asymmetry if you do get a bounce back in dash.
Yeah, I think a good way to look at two names that are similar but very different spaces and seeing different price activity today. But we will leave it there for this segment. Now coming up next, it's time for FOMO. We are talking Micron, which is a tech name that's actually held on to its rally today. We're up about 4.6% on the session on news of its NVIDIA partnership and all of the buzz. We'll discuss more coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free.
Damn, look at that knife on it.
Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles?
Back to the 200, so it's
For
retesting.
online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture.
235.
Comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for FOMO. Today we are discussing a tech name moving firmly to the upside, and that is Micron. Although
Ooh, nice little sending triangle on Shaq.
its session highs, it's still having a pretty
with
nice
the head
day
and
on
shoulders.
considered. So joining us now to discuss more is Caroline Woods, senior markets correspondent for the network. So Caroline, I have to imagine that anytime you're in the same sentence as an NVIDIA partnership, it's good news. So walk us through this.
Yes, if you're an NVIDIA partner, you win, and that's clearly the case for Micron today, as you set off the highs, but Micron's still up another, call it 4% right now. The memory chip maker, of course, is bucking the downtrend. It's the best performer on the NASDAQ today, one of the best performers on the S&P 500, and that's likely thanks to Jensen Huang. Now, NVIDIA's CEO gave his keynote in Las Vegas at CES last night. There were a lot of expectations about what he would say regarding NVIDIA in terms of the ramp of Blackwell chips and, of course, the next generation Rubin chips. Not a lot of details given there, hence why NVIDIA shares are lower today. But Huang did unveil new gaming chips, the GeForce RTX 50 Blackwell series of chips, and said that Micron is providing the memory for the GPUs, and that's likely what's giving Micron a boost today. Huang described the GPUs in the new chip series as just a beast. Said that the G7 memory from Micron of 1.8 terabytes per second is twice the performance of the last generation, and they now have the ability to intermix AI workloads with computer graphics workloads. So not just giving a call out to Micron, but really, touting the strength of those, and Micron shares are gaining in response. Micron and NVIDIA have long had a partnership, but investors clearly excited about this, and really just adding to gains that we've been seeing from Micron. If you take a look, now up about 15% this week, up 23% so far in January, so really off to a really great start. Now, we did see Micron shares get that huge pop after Taiwan's Foxconn reported record fourth quarter revenue yesterday as well, driven by demand for AI servers. So that's a good sign for AI infrastructure. Micron makes high bandwidth memory chips, so they're needed for processors, so they're poised to be a beneficiary. And last year, Micron's CEO said that its high bandwidth memory, the kind used in AI chips, is sold out through 2025. But that being said, Micron disappointed with guidance a few times last year, most recently just in December, and we've seen the stock get hugely punished for that, including that big dip in December. So potentially, investors could be looking at this as sort of an AI value play as well, and finally buying that dip. But it's a strong start to the year for Micron. Obviously, a long ways to go, but 24%, 23% pop year to date, not bad.
Yeah, Caroline, I was kind of looking at this stock, given the kind of hype around AI and semiconductors.
AI.
Of course, earlier on in 2024, this was one of the big winners.
Yep,
but
stopped
the
that
second half
again.
Wasn't so friendly to Micron investors. Seems like analysts probably haven't had enough time to react to this news just yet, but broadly, it does seem like the majority of those analysts remained pretty steady despite the sell-off in the second half of the year and kind of maintain those buy equivalent ratings. Is that what you're seeing?
Yeah, I mean, when we first saw, I think it was back in June, Micron delivered disappointing guidance. The stock got hugely punished, and then again in December. So we have seen the median price target for Micron come down, but it still shows about more than 20% upside from current levels. The median price target is 125. And yes, if you take a look at the breakdown, 85% of analysts or so have a buy rating on shares. There's 39 analysts that cover the company, and 33 have a buy rating. There's only one sell on the street, so then only a few holds as well. So the majority definitely bullish, but Micron failed to impress at first with inline guidance, and then very disappointing guidance in December, and that's really what weighed on shares. That was very much around other parts of the business, though, in terms of sluggish PC refresh cycle, also the smartphones business, and that seems to be what analysts were really focusing on, because back in December, Micron had said, we continue to gain share in the highest margin and strategically important parts of the market and are exceptionally well positioned to leverage AI-driven growth to create substantial value for all stakeholders. And it seems like investors, at least so far, in this new year, are very much focused on that AI opportunity, and of course this partnership with NVIDIA as part of it.
Yeah, I think you made such a good point, though, the way that they were sold out almost entirely of their high bandwidth memory chips, and that to me was as optimistic as you could get, but that didn't translate into any performances.
I'll be right back with some hot chocolate.
Maybe this is Micron's year. I think that those that have held on to this name are probably growing impatient, so hoping for more of this upside to continue, but appreciate it. Caroline Woods, Senior Markets Correspondent for the network, and of course, now we look at trading this name, Alex, and actually I was saying we haven't pulled back much from highs. We are continuing to weaken here, still though firmly at 4% on the session.
Yeah, still a nice day. Obviously a struggle for the overall market. It's not going to be easy to rally in a backdrop like this, but I looked at a bullish strategy similar to what we just looked at in DoorDash, and so what we're looking at is buying a call vertical spread, bullish strategy. In this case, similar expiration, January 24th. Just a few weeks out, looking at the 110, 115. So this is fully out of the money. You're really only doing this if you really think there's going to be a substantial rally in Micron in short order, but this is the FOMO segment, and so I set up something that has 4 times the profit potential on the risk, so chance to make $400 on $100 in risk, but you're really going to need some help from the market. The market break even for this particular strategy in Micron would be 111 at expiration. So
he'd been hitting around some of the best stocks out there that are really, had a good time. But if the trend is not your friend, it can pull back any of them. And I think it's going to be like this until Trump's in the office. But we're going to have earnings coming out next week, I think, the banks. So that could be a good catalyst to get this started. They've already upgraded Bank of America. So I think earnings, like I said last year and the year before that, after they started the interest rate hikes, it's all up to earnings to drive the market now. Plus, they want to see, a lot of these fat cats are a little bit freaked out on these tariff deals, and I'm not really bothered by it because they're fundamental traders. fundamental. And we've had printed so much money for these guys. They could take off 5 years and still be feeling good. So we got to leave it to the newer generation of traders coming in that will run Wall Street. And they might be more progressive than what we have now, but the way the country's changing, I just can't support a party that wants to cut a child's penis off. Yeah, I said it, YouTube. I think I could probably get away with saying it now on Facebook, but I'm going to give it a little bit more time. I said it once and I got thrown in jail for 3 days.
Trading the trending names every day. I'm Tom White.
I'm really disgusted with all my liberal friends, and I got a lot of them. I'm thinking about going back to church just to see if I can find some conservative people out there. I got my interaction here on who I can pick and choose on YouTube, and I mean on all my social activity. I don't have too many liberal followers. Anybody that supports the Moss, I kick them out. I don't want nothing to do with you. You were stupid enough to vote for this war, you got yourself in it. I warned everybody, I said, you vote Biden, we're going to be going into wars and some bad shit's going to happen. But I never thought that we'd have open borders. That was not even on my mind. But that just made it worse.
Which is a name that is always all over the place, but I mean, it always then provides, I think, interesting opportunities as far as trading and news cycle, and it always keeps us.
MU's had too big of a run too.
Look at the recent decline we've seen on the back of a short seller report. Now being seen perhaps as a buying opportunity, at least as far as RBC Capital is concerned. They upgraded shares to outperform and lifted their price target to 280 from 270. Again, following that report we got on January 2nd, which was announced by Hindenburg Research. They took a short position in shares. We've seen them soar over the last year. I will say, though, as far as all the short selling is concerned, I follow the short interest in a lot of these names closely, and it's come down quite considerably. I know we used to say this was somewhat of a meme stock, which is a term I don't believe is necessarily used so much anymore, but its short interest has come down, I mean, substantially. We've also seen signs of a much more mature Carvana.
It's still 10% though, so there's still quite a few doubters.
Still elevated.
when you look at that, but yeah, I thought Brad Erickson's thoughts at RBC Capital were interesting. We covered this earlier on Trading 360 as well with Diane King Hall, and one of the points that they make is to your point, which is that this, what he describes, Brad, that is, as a controversial sell-off, kind of in light of the recent news around that Hindenburg short report. Is an opportunity to increase risk exposure in a company that they think can maintain how much they're making per car, has a chance to incrementally improve its balance sheet in the year, and also is one that has had this remarkable comeback. And I don't think we can really understate that this company was on the brink. I mean, its debt was priced at, astronomical levels that were basically suggesting, pretty high likelihood of going bankrupt. So for it to come back from the brink there, not many companies can do that or do that. And so they lived to fight another day. And so while they're under pressure recently as a result of that short report, it's a different type of pressure than this company faced a few years ago.
Yeah, I mean, it was like they're operating, their cash and their ongoing levels of operational cash were a going concern at one point. I mean, I remember we talked about the way that shares had just nosedove and were not able to fully recover. That is not really the case. I know we've pulled back. I oftentimes look at that as perhaps a healthy, if anything, opportunity, but I think that maybe perhaps settling of the dust, if you will, because we had risen to over 228% actually in 2024. But I also think A+ to them for responding back to the short report, basically denying the allegations, saying that they're intentionally misleading and inaccurate and have already been made numerous times by other short sellers that are seeking to benefit. So the controversy focused on whether they were struggling to sell the loans they originate, which is a critical component of their gross profit per unit metric, or GPU. However, the private transaction of around roughly 800 million of loans last year was done similarly as it has been in the past, and they did, RBC did highlight the fact that the renewal of the partnership with Ally Financial indicates that business is as usual, but the company more so has a likely growing and declining pipeline of potential loan buyers. So I actually looked at that story yesterday, and I kind of entirely agree. If you hit back out on these allegations and say that's not true, like we could essentially show you why, I think that's huge, versus what we usually discuss is these short reports and no follow-up from the company, which always has me be like, well, if it's entirely untrue, why wouldn't you necessarily say that?
Yeah, and that goes to kind of the point that while Hindenburg has not been 100% in these calls by any stretch, they have earned some credibility, and they have been right in some of the circumstances, and so that's why there is this reaction in shares when news like this comes out. But to me, this story can be not true, and Carvana can still be, way up in the clouds based off of, where it maybe reasonably could be priced. This is still a company that's figuring out the economics of its business more than has them figured out. If you were to ask me, they do, of course, make positive EPS. So that's a notable difference from a few years ago. But it's still a volatile market, and it's one that scale really is the name of the game. So while they're making the economics work on the cars they are selling, they got to figure out how to sell a lot more cars.
They do. They need more of those car vending machines. There's always one when I drive back to my parents' house, and that's the only one I've ever seen in real life. But that's as far as I can speak to it. I also have to imagine that what we're seeing in the auto market right now is this price is expected. At least as of right now, the trend has been deceleration. Now, that could all change under a new administration, but that is not a favorable thing for Carvana. That's favorable for us, of course, but not those that are selling the cars.
Yeah, it's possibly bad for Carvana. It's bad if they buy a bunch of cars and they can't move that inventory, and then price shifts a lot. As long as they're able to buy at, relatively, fair prices for their business and then offload that inventory before things shift too much, they're fine. I don't think Carvana's super, concerned if prices go up or down. They need to be relatively stable more than anything. And the more stable they are, the more likely they're able to figure out the math behind, what do we pay for this car so we can sell it for slightly more. Because that's really the business of Carvana. They're buying a car from one person and trying to sell it for a little bit more to somebody else. And if I buy it from you at $10, and that was, a good deal at the time, and then all of a sudden that car is selling for $8, well, that was a bad trade. And so they're basically just trying to buy it 10 out of the 11.
And that's a really good one. It's not necessarily the price as much as the stability of price, and I think that is actually could be said for maybe a lot of industries right now, but no industry has felt more than that than I'd say the housing or the auto market, especially over the last couple of years. So I entirely agree. Stability is more what we're all hoping for here, and especially I think us as potential car buyers, I'm also hoping for some stability there. So we'll leave it there for our Carvana discussion. Of course, having a very nice session today in spite of the overall weakness in this market. But last but not least here, we'll dive into another name that's having a really nice session. That's Aurora Innovation. After news of NVIDIA and Continental announcing partnerships with the company for self-driving trucks. We'll discuss that more coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Schwab. Look at the pennies. Game Changers, Hoth and Dats. Dats. Ooh, look at Dats. Why?
Trading the trending names every day. It's Fast Market. Ready for you ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. Time for Under 30. Joining us is Kevin Green, Senior Markets Correspondent for the Schwab Network, to discuss Aurora Innovation on the heels of a deal with NVIDIA. This is a driverless car and truck company, KG. So moves being made in this autonomous driving space.
Yeah, definitely, and you're seeing this, the stock up over 30% in the session here. I mean, it's a very low-priced stock, so it's not really surprising that you're seeing this sharp reaction to the upside, as well as maybe some short covering that is taking place. But as you kind of stated, Aurora Innovation is going to be working with NVIDIA, as well as another company called Continental, to be able to develop and implement some autonomous driving features, if you will, and software, as well as potential hardware that's out there. And what's actually interesting about Aurora Innovation is that they actually have applications not only for passenger vehicles, but also for freight systems as well. And that's something that has been kind of neglected when you're looking at the autonomous space, but could actually have a very large market cap and addressable market that they could actually capitalize on. Now, once again, this is something that actually broke the airwaves yesterday during the CES conference. And you're starting to see some of the fallout there. But once again, this is a company that has been very under the radar over the last couple of training sessions and the last couple of years when it comes to their technology. But it seems like now they're getting a little bit more of the spotlight here to be able to try to expand and potentially become a big major player within the autonomous driving space.
Okay, so Kevin, that's pretty much exactly what I was going to ask you, because we talk about the autonomous space, especially when it comes to, I mean, NVIDIA, Tesla, all the EVs so frequently. Why have I never heard or discussed of this name? I mean, frankly, that's amazing in itself to me that this name flies so under the radar that I wasn't even really fully aware of its existence. So that to me, like, where does it carve itself out a niche in this very highly competitive and right now costly space?
Yeah, it's really kind of the environment that they're building out when it comes to their infrastructure. They also, not only do they have the top-end software suite in order to try to implement some of this autonomous driving, but they're also kind of building on top of that when it comes to logistics. That's where the freight side of the equation really comes into question here. And once again, something that really a lot of people just have not been highlighting. The freight business itself actually probably could have a larger market cap or addressable market than passenger vehicles. When you're talking about the sheer amount of volume that actually hits the roads on a day-by-day basis. So I think that's another reason why. And then a lot of the oxygen has been taken out of the room because of the technology that we have for FSD and Tesla and their work towards the robotaxi and autonomous driving. So there's a lot of companies that have been under the radar. Mobileye is actually another one that provides LiDAR, radar systems and things of that nature. But the stock hasn't gotten any love over the last couple of quarters, if not year, because of the fact that everybody's really just focusing on Tesla being that make or break for autonomous vehicles moving forward. But now it seems like NVIDIA is trying to shake it up, doing a deal with Aurora Innovation, also potentially maybe doing something with Toyota Motors. That was also kind of announced too. So we might be seeing some competitors really trying to take the space a lot more seriously, and Tesla could see some disruptions here. They might not be the front runner for too long. Obviously, they're way ahead of the space right now. It seems like some other individuals, other companies within the space are trying to catch up here, and NVIDIA seems to be the conduit in order to do so.
Yeah, and KJ, I think this also highlights another kind of general trend that I'm seeing in the marketplace, which is the NVIDIAs, the Apples, the Microsofts, the Alphabets of the world. Yeah, they're doing some innovation on their own, but they're also sitting.
Leader of the Conservative Party in Canada said, under no circumstances will ever be the 51st state.
Maybe he won't win, but maybe he will. I don't care.
You had suggested.
Listen, I don't care what he says.
Sir Lopez, you said you were considering military force to acquire Panama and Greenland. Are you also considering military force to annex and acquire Canada?
No, economic force, because Canada and the United States, that would really be something. You get rid of that artificially drawn line, and you take a look at what that looks like, and it would also be much better for national security. Don't forget, we basically protect Canada. But here's the problem with Canada. So many friends up there. I love the Canadian people. They're great. But we're spending hundreds of billions a year to protect it.
We're spending hundreds of billions a year to protect it. That'll be interesting. God. Trump, calm down. Can you imagine that? Canada, a state of the United States. I don't think it's going to happen.
Join me,
They could be a province.
experts, as we explore the second derivative.
If you want to be a dictator.
Brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
But imagine you become a state of the United States, Canada, and your taxes will automatically drop in half. That might persuade them. They made a $5 price target on Hoth. This is one of my old penny scans that I used to use. No, not this one. This is, let me go to one of my penny scans and see if it's on there. 2 to 5, 290 to 10. DATS is on top, but there's no Hoth. Man, Fannie and Freddie, we missed a good trade on these. Look at this. And I should have thought about it. I did think about it with Toll Brothers. I figured Toll Brothers would run, but it didn't. But $1.50 to $5. Knowing me, I'd have sold it a lot sooner. Then you got Freddie. These was one of the first stocks I ever traded. And that was during the housing crisis back during Obama years. Clove is another one. Clove's spiking. But DATS has got a cure, some kind of medicine for cancer. Am I right? DATS awarded the U.S. patent for blockchain. Oh, it's a patent for blockchain. It was Hoth.
Pressure points there and some cause for concern, especially when you look at one price metric in there, and that fuels some worries about inflation, right, Kevin?
Yeah, exactly. You know, you look at the data that we got this morning. First, we got a trade deficit that was a little higher than expected, as maybe ahead of Trump tariffs, there's a little bit of stockpiling of trade coming into the country. Then at 9 o'clock, we got two very
So
important
Mullen's
numbers.
got an
Number one,
electric
the
van.
jobs
I
data,
want to see
job
this.
openings and labor turnover survey, now with an 8 handle, 8.09 million job openings. And that means that the labor market is getting stronger. And of course, you can connect the dots to wages and all the different inflationary things that that may lead to. Then we also got ISM services, another key component of U.S. economy, came in 54.1 with strength in business activity, supplier deliveries,
Hello, everyone.
and
Welcome
lower
back,
supply
finally.
chain disruptions came through in this ISM number. Prices paid all showed slightly stronger U.S. economy.
To another episode of PCs and EVs. In today's video, we've got a cargo van, but electric. Now, some of the crazy things about this van is it's a Mullen van. I've never heard of the brand up until coming here to Eco Auto in Tewksbury, Mass. And they have quite a few of them. This is actually Mullen's East Coast demo, so we're going to be able to drive it around. We're going to be able to take a look at the inside. This is set up with a cargo divider, which is this thing right here. And yeah, let's dive right into it. Now, first thing that you may be wondering about this van is what's the range, what's the battery capacity, and what's the price? These are the three biggest questions you must ask yourself when you're looking for an EV. What's your budget? How far do you want to drive? And what kind of car do you want? So, this being a cargo van, an electric one at that, it's actually smaller, similar to like the City Master, the NV200, or the tiny Ford Connect van. And this van is $36,000-ish from everything I can see online. It's got a 40 kilowatt hour battery pack, which means it can go realistically right around 110 to 120 miles.
Oh, God. That ain't worth it. For such a small van, that's like what? Maybe 3 trips? 5 if you're lucky, if it's within 20 miles. So probably in a big city, it wouldn't last 1 trip, maybe 2. It's got to be bigger. You got to get more. You got to get at least 300. So that's probably why it ain't doing too hot. Mullen had one of the worst, what do you call it, presentations when they came out at first. I just thought they had high hopes for Mullen. They really did. This guy was a nut. Looks like it's had splits and everything already. So that one's out of the question. Here's Cheek to Cheek. Oh, I haven't played that song in a long time. Is Mike in here? If he is, I won't play it. No.
Cheek to cheek. Toes to
toes.
Here's a dime.
Do the dime. Oh, toe to nose. And just fine. Round to round, trying to side. And just
Squatty. Squat.
One of my favorite hits. Bark. I got a presentation at the ICR conference. So bark would seem like it would be a pet store. Don't bark up the wrong tree. A dog-centric company, services and content of dogs, operates 2 segments. Get BarkBox. Get a gift. Super Chewer, BarkBox. Trits. That's what they are. $20 for a pack, 4-pound bag. That's not bad, I guess, for BarkBox Dental. Bark Bright. Oh, Our monthly dental kits of chews and toothpaste are guaranteed to reduce plaque and give fresher breath. Randy, you might need some of that for your breath. Bark, please. Okay. Harley move.
They're so far ahead in the AI. I mean, over the next few years, they're just absolutely going to crush it. And the tech sector is
So we got the 9 crossing the 21.
sector that we're looking at for this year, just because we have such great earnings that are coming from the tech sector, and this got so
There used to be a hammer one in here.
And especially with a lot of things that's happening in the tech sector with data centers. We're in Atlanta here. We're in the Silicon Valley of the South now. It's crazy. We have all these tech companies here now. And we're seeing all these massive data centers popping up everywhere, and electricity demand is twice as much as what's needed right now. And so you've got a lot of infrastructure that needs to be put into place for utilities and nuclear power for these plants. So like those sectors, they were one of the top performers for last year.
Hood had an upgrade.
We're very excited about the tech sector moving forward, even though the pricing, like you said, is pretty high right now.
Only to $43 though.
Like as well is industrial and also financials, and that's going to be because of a lot of the deregulation that I anticipate happening this year. With
So I don't know why they put that out today.
With
if you're already there.
Regulations, reserves on banks right now, and I think that's going to create a lot of mergers and
Carvana had an upgrade after a downgrade.
that we just haven't seen a whole lot of that in the last few years, but hopefully we start seeing that moving forward into the future. And then the same thing with industrials, you know, with the regulations overseas and trying to bring jobs back from overseas, and people, you know, wanting to manufacture in the States. Like I just bought my wife a new Ford Bronco, so hopefully that helps stimulate the economy here in the U.S.
She might stimulate you from keeping on the couch.
I do expect us to see more M&A activity and IPO activity this year with this incoming administration.
No, I'm not in any trades yet. I'm looking.
President of Bella Advisors, thank you so much for joining us today. Coming up, we've got Options Corner. Tom White joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news on Palantir, Aurora Innovation, and Moderna. We're seeing some big moves, especially in Aurora today. Stay with us.
Snow had an upgrade.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time now for Options Corner, where we analyze unusual options trades seen throughout the day. I want to welcome in Tom White, host of Fast Market here on the Schwab Network. All right, I know for the ones on your radar, you found some just bullish activity.
Disney get an upgrade? Are you kidding me?
With one that was a heavy hitter last year, Palantir. It is under some pressure, but you found some bullish action, right?
Yeah, not surprising.
Oh, because of
Diane, we
Fubo.
typically see bullish activity every
Fubo.
day
Damn, I
in
took
Palantir
Fubo off
after those 340% gains that we saw in 2024. Now the stock's down about 11% so far this week, off about 16% from those all-time highs we saw at the end of December here. And Morgan Stanley came out with a note yesterday. They initiated coverage of it with an underweight rating, $60 price target. That's probably why it's been under pressure the last couple of days, and especially today with the market selling off. They said that the commercial side of their business continues to grow, and it's nearly 50% of their revenue on a quarterly basis now, after most of their previous revenue was government contracts. Now, they did state in the note that maybe with the new administration, there might be some headwinds for this stock in the near term as valuations have exploded in this AI platform software that many commercial industries are starting to pick up here, because you need to figure out ways to monetize AI, and that's what Palantir provides, along with some of the security measures that are probably going to be needed there. But we did see some bullish activity early on in the day when the stock was down. It's off another 6% today. In the January 17th monthly cycle,
I think we can drop more.
For just 10 days, traders bought over 4,000 of the 75 strike calls.
I think SPX can drop more. I wouldn't be ready to get into it yet. Not much, just a couple of bucks. One more red candle, maybe. And SPY. Here, I'm going to set an alert on that sucker. SPY does have a head and shoulders. It can also drop to 290. $290.18. Up. Well, I'll just leave it there. And we'll put it right here on this here head, right here, shoulder. Give it a little bit more time. I'm going to give it a little bit. New York State Appeals Court denies Donald Trump's bid to halt Friday's sentencing in a hush money case. Damn it. I need to have a talk with Stormy Daniels. I remember when I first started Messenger, I said, I don't support human trafficking. Oh, Stormy. Come on, girl. Look at this. Getting a little stormy here in Missouri. Oh, okay. What do you have for me? What do I have for you? Nothing. Come live with me and I'll give you something. What do I have for you? About 3 inches. I have a pack of cigarettes. I have a pizza. So, what else in here that I like? Shell. Shell's already had too big of a bounce. Adjust price target to $79.80. Really? Morgan Stanley upgrades Shell to overweight, raises price target to $79.80. Now, I thought White House issues order bearing new oil, gas drilling along the coast. I thought U.S. President Joe Biden on Monday issued presidential memorandum restricting new offshore oil. That's what I heard. Lulu has an upgrade. Price target to 400. We're already there, so that's too high. Well, I'm not seeing much in here. A lot of good tickers. Run. The Beach Boys. Upgrades Sunrun. Oh, what's that other one? FSLR. Sunrun to outperform neutral raises price target to 16 from 14. It's already had a run. FSLR. First Solar. Yeah, that ain't gonna work either. Oh, we pulled back. I missed it. Damn it. I had it on mute.
Number one broker here.
Now
for
I'm
the
pissed.
Number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take
Man,
this
I missed it.
Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into
These things are too
real-time example trades.
the 5940s.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market weekdays at noon on the Schwab Net.
I set an alert down here.
Ready for you.
You
Ready
nailed
to
it.
go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch
The
list.
spy
I'm
didn't
Diane
trigger.
King, live from the floor of the New York Stock Exchange. Let's start out with a couple movers in the market right now. We're taking a look at shares of Carvana. They've been gaining steam after an RBC analyst said that he sees the company's, quote, remarkable turnaround continuing in 2025. The analyst upgraded the auto retailer to outperform from sector perform boosted the price target to $280 a share. Previously had it at $270. Carvana shares are up over 300% over the past year. Keep in mind they faced some headwinds off of that short selling Hindenburg report recently, but back on the upswing right now, up more than 6%. Meantime, Tesla shares lower after Bank of America downgraded it to neutral from a buy. This is a Couch report. They've got a price target though of $490 a share. It's up from their previous price target of $400 a share. The analyst cited execution risks really around FSD. They said it remains high. The stock is now trading at a level that captures much of the firm's long-term base case. All right, for a look at opportunities in stocks and fixed income, happy to be joined by Christy Akulian, head of iShares Investment Strategies Americas over at BlackRock. Christy, thank you so much for joining us this afternoon. Let's talk about the setup for 2025. We faced it seems like there's some push-pull action going on in the early days of this year. We're just a few trading days into the years. Do you expect to see the performance that we saw the past 2 years? For instance, when we think about last year, right? The setup going into last year, the expectation was for the S&P 500 to continue to outperform. Not as well as it did. I mean, it was almost the same as the prior year. But for 2025, are you still bullish when it comes to U.S. markets?
Going into 2025, I would say that, we do still think that we're in a bull market for equities. We are still relatively pro-risk, and we prefer the U.S. equity markets relative to the rest of the world. That's certainly not without risk, but we do think that the market can continue to drive further gains, even though we've seen such a tremendous last 2 years, like you mentioned.
And when you think about, okay, so you're still bullish, but it looks like it will be a harder bull case to make this year, at least by the early days, and especially when you think about how last year finished to how the setup is this year. Where do you find balance?
Yeah, so I think that's a great point, right? Is that the longer in the tooth a bull market goes, the more volatile they tend to get. So where we like allocating to best in this market is really high quality U.S. equities. That's our biggest overweight at the moment. So when we think about quality, and I'm specifically talking about QUAL, which is our BlackRock ETF, our quality ETF there, we're really defining that in 3 ways. One is high.
I didn't miss much.
2 is consistent earning growths, and then 3 is strong balance sheets. And we think that's going to be the mix for success going into this sort of late stage bull market. And to your point, it's certainly not going to be a one-way up directional trend. We think we're going to see choppy markets, but eventually they're going to close higher on the year.
And then what about the balancing in terms of risk? When you think about, if you want to hedge, where do you go within fixed income, especially if you still want some income?
Yeah, no, it's a great point. And where we're focused right now is really on the income side of the fixed income equation, right? So we like capturing really attractive and high all-in yields, but we're less reliant on the duration component for performance right now. So we're pretty cautious on the long end of the yield curve, as you even just saw today. We've seen that underperform pretty meaningfully as rates moved higher. So we like investing in sort of the front end of the curve up to and including the belly. We're really focused on income, so something like Bank, the BlackRock Income ETF is a great way to express that. But, to your point, that's not necessarily giving you the ballast in a portfolio that longer duration, longer dated fixed income used to. So, when we see the stock bond correlation really break down and it's not as reliably negative as it used to be, we like being really deliberate about adding other components of our portfolio and beyond just the 60-40. So we're looking at things like gold to be a bit of potential ballast, even things like cryptocurrencies, really playing on the scarcity.
Man, the video looks
particularly
sexy.
If we think that inflation or the reacceleration in prices this year can be one of the bigger risks for portfolios.
When you think about one of the big sectors that
I talked about NVIDIA yesterday. I said usually when it breaks out to a new high, you get a drastic pullback. Boom. $12 sell. I did say it. Right to the 200 on the 1 hour time frame. I mean, I would, if I was more secure in the market right now, I'd buy that. for a swing overnight, but I'm not going to do it. And then I got QSI down here at 290. I'm waiting for that. I want to go long and not worry about this one.
And so getting richer. So I think that it is a
There's
story of some of the Magnificent Seven and some of
BlackRock
the
ETFs QUAL.
continuing to drive the market, but it will also broaden out. So we like owning high quality parts of other sectors as well.
Is that the one that?
Why? So obviously, you talk about large cap, and then really that is seeming to be, kind of where the focus is, especially coming from you all from BlackRock. When is it wise to move down the cap spectrum?
Yeah, so I think that there was a lot of chatter around small caps. Everybody almost wanted it to be small caps moments in Q3 and Q4, particularly after the election. What we have found is that small cap rallies tend to be really sharp, but also pretty short. So that wasn't a trade that we wanted to chase coming into this year. The main reason why is that we thought fundamentals were going to catch up. And what I mean by that in particular is that interest rates are probably going to stay higher than we thought when small caps were rallying pretty hard back in Q3. And so, in an environment where interest rates are higher, that's really challenging to corporate profitability in the smaller cap end of the spectrum. So that's what really underpins, I think, our preference for staying large and staying up in quality.
When you talk about, it sounds like, especially when you think about what you're advising positioning-wise, liking the U.S. in general and liking large cap, do you expect U.S. to kind of maintain its exceptionalism edge as compared to overseas markets, even compared to, say, Europe?
Yeah, I mean, if you look at the growth trajectory, both of the economy and corporate profitability, it still is much stronger in the U.S. relative to the rest of the world. But the one thing that I'll caution is that U.S. exceptionalism doesn't mean just allocating to the U.S. So we still think that it's really important to stay, diversified regionally as well. Something like IQLT is a great way to play international markets, but with also a quality lens. And I think that it's important, equally for diversification, if for nothing else, even if we do see the strongest growth coming from the U.S.
And then I'm looking at one of your notes where you call AI the mega force that could fundamentally reshape economies. Where else do you see, what other economies do you see benefiting from the reshaping of especially the global economy, especially when you consider, for instance, NVIDIA is still considered a leader in this space?
Yeah, I think what we're watching for with the AI trade, which we are very much believers in and still think that we're in relatively early innings, is really that it's moving more from a technology story into a broader part of the global marketplace. So we're looking at data centers, we're looking at utilities and materials is really what's going to power that next leg of the AI trade. And I think that that's one to watch for 2025 as well.
Okay, and then when you think about the risk that may be in front of us to the momentum, especially that we've seen recently, momentum within equities, trade is one of the big factors that we're paying attention to. Tariffs and what will they be? There was a lot that was pledged on the campaign trail for President-elect Trump. What are you advising around that, especially when it comes to your clients?
Yeah, I mean, I think that the market is going to respond to headlines in a very real way this year. So I think it's about finding balance within your portfolio so that you can comfortably sleep at night is one thing. So making sure that you have ballast that may not come from duration, but may come from other targeted exposures. Buffered ETFs are a good way to do that as well. And then specifically, if we are facing a world where tariffs are coming our way and potentially bigger in scope than the market is currently pricing in at this moment, I think there's opportunity in select thematics as well. So MADE, a great ticker, just MADE, is really focusing on domestic manufacturing. And I think that that is something that could get a real boost if we do see tariff surprise to the upside this year.
Okay, so potentially a return to thematic investing with that one. All right, we'll have to leave it there. Love the wide-ranging conversation. Christy Akulian, head of iShares Investment Strategy, America's BlackRock. Thank you so much for joining us today, Christy. Still ahead, it's Technical Tuesday. Charles Schwab's Kevin Horner looks at the markets, hims and hers, and Starbucks. That'll be on the other side of this break.
CRM, new 20-day low today. And PLTR, I haven't looked for PLTR. I bet you it triggered. SPY just hit my support. Randy, this is going to be it. Which one you want to do? Do SPX on the SPY. Yeah. The 5490, the 5940s. Oh. Jimmy said we were going to pull back. Set for the 5940s.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Lynn.
Oliver. There we go. Right here.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim.
1.60.
Analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Ought to move them up to 5930s.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Welcome back to the watch list. I'm Diane King Hall. Time now for Technical Tuesday. For that, I want to bring in Kevin Horner, Senior Manager Trading Services and Education for Charles Schwab. All right, Kevin, it is great to see you. Let's start out with kind of the overall market action that we're seeing today. We're seeing some pressure on the S&P 500 as it continues to drift away from that 6,000 level further away. So what does that tell us about the market right now? This level?
Damn.
Well, I feel like yesterday was, and I'm sure a lot of bulls felt like yesterday was the beginning of something bigger, and it just hadn't carried today. That JOLTS report seemed to let us know that maybe we won't be getting even the couple of 2 to 3 rate cuts we were hoping for. And it seemed like we just really disliked the look of that. And the price action following that report this morning has clearly been negative. And when you look at the SPX, the levels that we took out today, real quick, moving through yesterday's low so speedily today, makes yesterday's candle really look like a rejection at the downtrend line after having once again tested 6,000 point level on the SPX. So yeah, it's a little bit precarious all of a sudden, Diane, and I think the levels we're going to monitor going forward, we have that 58.30 level below us. That's the matching lows we made about a week ago and then 3 weeks ago. And if we take that out, we got to keep an eye on 56.75. That was horizontal support, prior all-time high, broke out, tested, held along the 50-day moving average. So we have a number of key levels that we can use to set our trades against, at least in the SPX here moving forward in the near term.
So I got 2 contracts.
Yeah, it does sound like there are some hurdles to watch there right now at 59.23, but 58.30, that's the level we want to see.
160, 125.
If you're bullish, you definitely want to see 56.75 holding there. What is if we hit that 56.75? Where, if we hit it and break through that, where's the next worrying, or where do we need to look for support?
Well, I mean, I think 56.75. My hope, of course, is that if we end up there, it allows that blue 200-day moving average to get caught up. You'll notice that we're a bit below that. That comes in at around 55.65 today. So even another 80 points below us could be that support. But as usual, it all comes down to when we get there, right? Because by the time we get there, if this is more of a slow and steady decline as opposed to an escalator move to the downside, we could see that by
Escalator move. I haven't heard that term.
700, the 200-day is right there, and it may very well be an opportunity for buyers to then step in. I mean,
Don't jack around.
at the 200-day, if we got there, would be about an 8.5% retreat from the all-time high we just cut at 6,100. So it would make an appropriate. It might very well be an appropriate spot where bulls would be a little bit more emboldened to step in.
I'm stepped in right now, buddy.
What do you kind of think about today? Just a natural reaction to what we got. And
I'm green.
to the momentum that we've seen
Break it.
Yeah, I hope so. Obviously, that's my hope. I'm a long-term bullish trader as well. I want to see that type of upside, but it feels like, at least in the short run, we are possibly looking at just a bit more volatility than maybe many were expecting heading into the year.
Not me.
We had that nice 2-day move covering Friday. And
I made it
Monday.
perfectly clear,
And,
buddy.
today just reminds
170. 180. Uh-oh, don't jack around. Take profit. Come on. 190. $2. Whoa. I'll take it. 195. There you go, Randy. I said I'd jet. Told you I'd do it. Whoa. I want 10% of that cut. I want 10%. You understand? I want it, and I want it now. Oh, I want 20%. Give me 20%, Randy. Three white soldiers. That was a nice trade. Bingo. Jimmy said, wait, patience. That paid off. We could probably get it again here. Jimmy says we could probably get it again. We pulled back to the second soldier for support. Let me ask my buddy here. Hey, Waylon, what do you think about this position right here? Waylon.
I had to leave my nursing job. I was stunned.
Well, I think you got a chance. Morning. We have 3 black crows. It's time to catch the train. We're getting ready to bounce. Gone, gone, long gone. Long time gone. Yeah, yeah. I'm gonna move these cars up 5930. Gee, like a damn dog. A double bottom, yeah. Do dog. Oh, yeah. Looking at the 5930s, got in at 350, yeah. You're a long time gone. The 5930s at 350. I'm up at 110 with 100 degree. It's time to sell. 350 to 450, yeah. I'm out at 450, yeah. Have to work, 'cause I trade stocks. Woo, I don't have to work. That was an easy one. For God's sakes. So let's say you're new to trading and you have a part-time job. Me, when I first started trading, I had to find a job that would make it to where I could trade stocks and learn how to trade stocks. So
let's say you're new to trading and you have a
So my ex-girlfriend at the time, which was my high school love, she was a cheerleader at Parkview. She kind of fattened up over the years, but I decided to go ahead and date her. And her ex-boyfriend had a cleaning business, so I said, "Hey, I'll buy your cleaning business from you for 10 grand." And he wanted to get out. So I bought his cleaning business, which allowed me to sit here and learn how to day trade stocks in the day. That was back in 2004, after I got back from Hawaii. So let's say you had a part-time job and you were working just early mornings, or maybe you opened up the restaurant at 5 and got off at 10, and you want to learn how to trade stocks. So you could break that day down and say, I'm going to trade stocks about, after lunch, come in here and do my homework, and then start scalping these trades right before close. It's called Power Hour, which is going to happen in about 7 minutes. And you could get that one trade in every day, like we do here when we're sitting here and we're calling out these long shots at the end of the day. Right now we got a flag, so we're getting ready to squeeze. You see you have a 1, 2, 3 and a 1, 2, 3 bits, and then you have another flag right in here. So you got a snake breakout with 3 white soldiers, which is racist, and it pulled back, and then it created a symmetrical flag out of that snake. Now these are higher lows. So if this holds right here, it's getting ready to what you call squeeze. So if this breaks above this trend line that I have, I don't know where I got it, but I got it. I'd probably take it up here to a double top, and then maybe run it up to the 200. But like I said, we got 2 more weeks till Trump's in the office. And the market's going to know what's he going to do. They've been threatening with let me see here, the damn tariffs. They don't know what he's going to do. He says he's going to. That question was asked: are you going to use military force to take over Panama Canal? Like, hell no. People are assuming what's he going to do, and I already know what he's going to do. He's been president for 4 years. He's going to shut the border down, and he's going to stop the wars. And he's going to secure our country instead of having unspecified aircraft flying over our major cities. So it didn't break resistance. Now it's giving us a better buy here. Let's see where we are on this map. We could still come down and hit this bottom and sell off into close. Trump's not the kind of guy that likes to hold grudges. But I do think he's a little pissed off because he's been treated worse than Al Capone. He was pretty loved there for a long time until he started to run for president. Especially the liberals loved him. So he's probably holding a little grudge. we're getting close to a double bottom. Now, if it doesn't hold the double bottom down here, so see it failed the flag, but we still have snake breakout, we're leading out with 3 white soldiers, and then we still have a higher low. You take the body of that candle right there and run it up to the body of that one. So I'm still looking at the 5930s. Let's take and run that trend line. And we broke down below the trend line. So that tells me we're still bearish, which means we could probably hit a double bottom down here. Okay. Now, Randy, I think we could maybe take this trade. With a 1, 2, 3. It's dead. Jimmy's going to do it. 59.30s at $3. It's 285. Come on, you freaking idiot. Okay, let's do it. So we got a 1, 2, 3 bits, 59.30s at $3 with a tight stop. We know it's a very risky market right now because of the gibberish, the rhetoric. And like I said, we got 2 more weeks till Trump's in office to get some kind of they want to see what he signs. He's going to definitely close the border day one. He's going to start pulling some of these criminals off the street. Not all of them. Probably not ones with families. I would doubt if he's already got the list from Venezuela. Anybody with a tattoo or a raindrop under their eye. No, I have to get out of this trade pretty soon if it don't work here. We got a double bottom. That'll be your lowest support right now at 230. That one more at 240. That's not what I wanted. Okay. Yeah. Now I'm getting a little bit too far out of the money. I'm 3 notches. We've got a hammer with another 3 crows. I get 2 more, and that'd really cut this down. Right now I got $540 in this trade. But I'm just 3 notches out of the money, so we'll just leave it alone. Dollars up. The dollar futures. /DX. Ooh. My neck's so stiff. This is CBD. Smells good. There's 330. Blake it. 250, I mean. 230, 250. So I'm down 40. I'm schmeeving. Almost. So when you get close to even, you think you're in trouble. You either sell it or hold on. It's 207. I don't know if we're going to have that big recovery at the end of the day today. Ready for a nap. So we got a megaphone. Man, it sucked. Big old ugly candle. The U.S. equity drops as job service data push 10-year yield to highest in 8 months. Drops as job openings unexpectedly increase. Service beats expectations. Better get out of this before it's too late. Damn it. Well, I was wrong on that one. Stopped out. Jeez. Very good. So I have to add on. Now I'm just too far out of the money now. 4 notches. And buy 10 of them and scalp it, and that's what I could do. I'd be careful and have your pork chops and come back in tomorrow. Thursday's closed. This market, you see what, 1, 2, 3, 4, 5, we could probably see somewhere in here on the SPX before we start to reverse to the upside. Somewhere around that spot right in there. And that'd be a big old fat megaphone. I wouldn't doubt it one bit. Not today, but I mean tomorrow. And then come in Friday and have the bounce. But again, I just want everybody to put a caution flag for at least 2 weeks until the earnings start to come out. And when are the bank earnings? Let me see. Banks started off, BA. Bank earnings start, low rate impact debated. Barge, are you out there? When do the earnings start? When is earning? January 7th. Earning calendar. So earnings have already started, kind of. January 6th. So they've already started. Delta Airlines on Friday. So Jeffries tomorrow. Earnings start this week. Jeffries Tilray's on Friday. Walgreens
Again, a lot of uncertainty, a lot of wild cards here, though. You know, what say, you know, China's stimulus. Certainly, we'd like to think something is coming, but you know, Xi is going to do what Xi does, just like Trump does what Trump does. We're going to see about that. The bond market remains an overhang until, again, correlations are never static. You know, we could say there's pain levels and pain thresholds that we're getting close to, but how much of that is in our minds versus the reality of what can play out in this sort of multi-moded market here?
Well, that's kind of why I'm watching that 59, 58, 50 the way you are, because that's basically top of the election gap. I feel that if the policy elements has been contributing a lot of positivity, that's a symbolic break if we erase the post-election gap, which already did happen with the Russell, it happened with the Value, it just hasn't happened with S&Ps or Mag 7 yet.
Post-election gap.
You know, another area, you know, we said, you know, the gas has gone out of crypto. Don't be so sure. Again, you know, when the reality of lower regulation, when the reality of, you know, how this is all going to be regulated or not regulated, and how it's going to affect issuances, how it's going to affect the altcoin market, the altcoin, environment, you know, don't be surprised when that does take off again. And that's something that we're seeing some burgeoning signs of. We track things like what are the altcoins that have the upside potential. We're watching everything like that. The agents are watching that, and users know. It's almost like ask me anything. Let's go.
Sounds like you're generally the signals that you're using are generally pointing towards a fair amount of optimism. It sounds like more that the trend can come back rather than that it's meaningfully breaking right now. I mean, the Nvidia comment, the altcoin stuff, kind of sounds like that's where it skews a little bit.
Well, you know, as a Republican retaking the White House, let's say trust but verify, right? A little bit of a different style these days, but some old sayings still hold true.
Yeah. Hey, Mike, real fast, less than a minute. You got a Delta thing you're watching ahead of earnings. Tell me about it real quick, because the airlines were doing great up until basically heavy travel season last month.
Heavy travel season last month, you know, there's still a lot of worries about geopolitical tensions. You know, right now going into Delta, and this is going to change a few times before Friday morning if I have my, you know, if I had this right. You know, we're kind of neutral. You know, there has been some bearish put activity all the way down to the 56 strike near term. You know, there's obviously some concerns about, you know, about the whole travel game playing out. But then again, Delta has a nice track record of doing well in their reports. You know, there is solid revenue growth. There are still concerns about premiums, so there's a bit of this right now. What our users are doing is they have the Agent E page pinned. They're watching Delta. They're watching all the other exciting stocks coming, like Constellation Brands and other names that are coming this week. Obviously, next week's a big week. Agent E is a really valuable tool, and she'll just give you the snapshot of what it is. Right now, neutral on Delta. I would not be surprised when I check that later or tomorrow morning. She may have shifted one way or the other as the wind goes. When circumstances change, Agent E changes her mind. What do you do?
Cool. We'll check in. Thanks, Mike.
All right. Always a pleasure, Ollie.
Enjoy your perspective. Mike Block, co-founder, chief operating officer at Agent Smith. When we come back, we're going to talk about some more AI, but on a little bit of a different beat. Discussing vehicles and perhaps an underappreciated part of the automotive industry. You have the CEO of ticker OSK, fresh off big consumer electronics debut, Oshkosh Corporation. We'll talk about it next.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
accelerate your market knowledge,
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Let's talk some AI. Let's talk vehicles as well. Coming off the Consumer Electronics Show, Oshkosh debuted a few pretty sweet new vehicles for some gigs that make the economy and our lives run smooth. John Pfeiffer,
OSK,
CEO at Oshkosh Corporation, ticker OSK on the New York Stock Exchange. John, thank you for being here on the Schwab Network.
Yeah, thanks for having me, Oliver. I appreciate it.
You guys have a pretty cool pitch because when it comes to all things AI, basically you are specializing in areas of our economy and our lives that are everyday heroes, firefighters, soldiers, postal carriers, construction workers. Tell me what kind of stuff you're making.
Yeah. So we do exactly that. The theme here at the CES show for us is exactly what you just said, Oliver, technology for the everyday hero. We serve a lot of different end markets where people are doing really tough work. And you just mentioned them, people on the tarmac of an airport, working at great height, working in construction industries. And it's our job to take technology and help those people do their work more intuitively, more safely for sure, and more productively than they've ever done it before. And we do that through autonomous functionality.
Damn.
We do it through full autonomy in many cases. We do it through AI, we do it through electrification, and we do it through digital connectivity. And then
USPS General
real-time data from hundreds of data points constantly and give our customers insights that help them be more productive.
Electric fire truck.
Time, and we're excited about what we're doing.
Your company's been growing at double digits on sales or one sec, let me make sure I got the right one. Firstly, just for some perspective, you grew at double digits throughout all last year, high single digits in your last report, so the growth is obviously there. Among those verticals, where is it coming from most? The EVs, the autonomy, which part is selling the most right now?
I think that right now you see, in the recent year, you've seen really nice growth in our access equipment segment.
Okay.
But you've also seen a fantastic growth in our fire and emergency segment. In our fire and emergency segment, actually, we've got a 3-year backlog for vehicles. Because of some of the technologies that we're coming out with, but also some of the industry dynamics in fire and emergency are really healthy. But again, we've also got the airport markets. You showed on some of the video that you showed an airport rescue and firefighting vehicle. That's only one vehicle that we make at an airport. When you go in and out of an airport, you see all those vehicles beneath the airplane getting it ready to come in and out of the gate efficiently. We make all those vehicles. We all see what's happening in the airport industry. More gates, more modernization, more airports being built around the world. So that's another area what we see as being long-term growth for us. It's right in our sweet spot. We're making it more autonomous than it's ever been before, and it's really exciting.
For those markets, John, how much is, according to sort of the industrial cycle, the economy, how much people are flying, how much they need to refresh their machines, and how much is secular growth where you're going to those customers and saying, I know you've got one of our trucks or vehicles, but I've got an even better one now that can save you money because it's running on its own or something like that.
Yeah. Well, I mean, customers are always upgrading their fleets, right? So fleet upgrade is certainly an area of growth because in many cases the fleets are aged. You know, nobody spent any money during the pandemic, particularly in the airport world. So there's fleet replacement that's driving demand. But we see in airports everywhere, even in the United States, we see expanded terminals. Every time one of our big customers, whether it's Delta or United or Southwest, says they're going to add more airplanes, they also have to add the fleet of vehicles that we provide to make it all work. So it's coming from a variety of angles today in the airport world.
Okay. And when you look at the updates from a technological perspective, are you making all that software in-house? Do you partner with with software companies or with data providers, when you are using an autonomous a product from Oshkosh, how much is in-house, patented, your IP, your mind?
So, I mean, the simple answer is both, but we've been doing autonomous vehicles for a long time. We do full autonomous vehicles in off-road terrain for the Department of Defense is one example. Over the years, it's one area where we've developed the expertise. So we always lead with regard to the software development, but there are certain cases where we bring in other software experts when we have a specific use case that we have to design for. But essentially, we're driving the software development in-house. It's really interesting when you see our business. Hey, we're 105 plus years old. If you go back 10, 15 years ago, most of the engineers in our company, we have thousands of engineers, were mechanical engineers. Today, it's completely shifted. We've got more software engineers today than we have mechanical engineers. So we're almost becoming software.
No, I sold SPX.
Company, although the hardware is also still really, really important because it's got to work right every single time.
That's a great insight. It's kind of what I suspected. So NVIDIA's got this Cosmos thing, and it seems like they want to continue to kind of sell AI as maybe being an answer to some degree of like.
You got a little too scary.
To some extent, like, for example, in the financial industry, one of my guests there at the top of the show, I mean, you used to kind of pay, you have to have like a team of analysts, a technician, all this stuff, and you can do pretty well. I've seen examples of folks who build out financial models through AI and large language learning models. It seems like NVIDIA kind of saying that every industry can do this. Can you do that in autos, or do you need to have like the hard evidence that, say, like a Tesla has built up for years of tons and tons of miles driven?
Yeah, no, and we can do it, and we do it. You know, some of the interesting areas where we apply artificial intelligence are, for example, if you look into like repetitive tasks of the refuse collection industry. Today, our refuse collection vehicles, they're learning about what they're doing every single day that they're in the market. They're learning about what is the difference between a garbage can and a mailbox. They're learning about what goes into the hopper of the truck, because the driver wants to know if he's picked up something that's contaminated or something that's dangerous, and our customer wants to know that so that they can deal with it properly. So we've got AI models that get built into our products, and they're constantly learning as they go about their duty cycle every day. So we design them so that they can pick up data. You look at our new postal vehicle, there's 360-degree cameras and sensors all over that vehicle, so that for the Postal Service, it can help them collect information that makes them more productive, insightful, and to do what they do, last mile delivery, better.
Very cool. Appreciate the introduction, John. Let's stay in touch, and we'll be following along with the story this year. Very cool, and congrats on the debut at CES. Sounds like you guys made some waves.
Thanks very much, Oliver. Appreciate it.
Thank you.
Still dropping on SPY. I wouldn't trust nothing.
Kind of been a rough couple weeks for the stock, but market's been getting rough too. Coming up, let's look at the options, flows, technicals, and more with Kevin Green.
I'd go eat your pork chop.
Now down 76 points and change, and the NASDAQ down worse.
Yeah, I'd say 10%.
Most of them are.
Officially kicks off on the 15th. We'll be waiting. $69 degrees in here.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way.
Carl's Way is the only way.
At Schwab, how I choose to invest is up to me.
Exactly.
You snooty
Invest
chick.
and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Schwab's killing his business. The puts would have paid good today, that's for sure. I think we need to be aggressive in them. The 5,900 strikes at 275.
Stocks are getting walloped. Bonds also. Russell somewhere near the lows. Kevin Green joins us for a look through the market and the options flows. KG, we are coming back down to threaten some pretty big levels here. Take me through what's most important in your mind today.
Yeah, I think it was actually the technical setup that we talked about on market and close yesterday, Oliver. We had this look above the 20-period moving average, and then we had that failure towards the end of the day. And it kind of set up to be this kind of shooting star pattern. Or that
Shooting star pattern.
Showed up,
Oh,
a little bit less than
Kevin.
shooting star because we did actually have a pretty decent close. But it was a bearish signal, and today we're seeing that follow through the signal. And unfortunately, now we have kind of a bearish engulfing candle that's taking place. We have now broken through the 50-day moving average, and I have there on that chart too. Pretty much probably by the 9th.
He's got 58.50. What did I have?
Next week we will see a cross of this the 20
I had
SMA below the 50 SMA, and that's not really good. That's a bearish cross signal to say the least. Where are you looking for areas of support to
I had
step in?
58.39.
Focusing on is 58.65. That's going to be a key area where we've been pretty much bouncing off of that on a closing basis throughout this whole consolidation pattern that we've seen basically since
So him and I are
here.
thinking
If you have any type of
about the
fundamental
same.
breakthrough of that, the next one's going to be 58.50. That's still your negative gamma area when you're looking at open interest across all of the expirations for now. And then what else are you going to be focusing on? That MACD cross.
He's got 58.65.
Bottom out. It looked like it wanted to hinge higher when you're looking at that 12 EMA, but just was unable to do so. If I can provide just a little bit of context here, because if you're looking at it high level, breadth, even though we have a down day like today, is actually still holding up decently, right? You have about 40% of the stocks, last time that I checked, that were still in the green.
Right.
That's good, right? It's obviously mega cap tech selling it off. But if you're looking at the E-mini S&P 500 futures contracts, okay, and the sell volume, and we look at the percent volume on upticks as well as downticks, total volume, today, right now, we're sitting at around 99% of all volume is on downticks for today.
That's big tech, basically. That's concentration
That is a
right
lot.
there.
Actually, Oliver, we probably will see that's probably going to be the highest number that we will see over the last year, to say the least. So if you kind of go under the hood, there's a lot of pressure that's being built up right now to the downside, even though you're starting to see, some outperformance on a relative basis from some of these underloved sectors. It does not really look good under the hood when you're looking at the internals for the E-mini S&P 500 futures, as well as if you're looking at the SPY. The SPY is sitting at around the same type of level, around 99%. Last time we saw this aggressive selling for the SPY, the ETF, which a lot of retail traders like to track, was in April 30th of last year, which was also another aggressive time where we actually saw some selling hitting into the market here. So overall, this has been a pretty aggressive day. It's kind of unfortunate that we did see this failure, but we do have some economic data that's on the horizon.
Wow, them jumped up pretty fast.
To the downside and or kind of turn us around here.
$3 to 520.
Like the data was not helpful today.
The
But to your
5900s.
point about the selling intensity on the index level, which is of course Mag 7 driven, given the concentration and the other outperformance of breadth of the 493 today. I'm paraphrasing a little bit, but that's what we were talking about too at the top. Like, this does feel a lot just like flushing tech out. That Mag 7 kind of euphoria, arguably being a primary driving
$7.
force. So, I mean, obviously we got the macro stuff mixed in, but it's a really good point to describe the contour of the market that way, because it does put in perspective how much of this is really about tech. What about that head and shoulders, KG, for the index?
Yeah, I mean, so the pattern itself has already kind of played out. We already have the left shoulder, we already have the head, we have the right shoulder now. What you're really trying to focus on is if we're going to break the neckline. And that neckline, once again, we'll give it some wiggle room.
Shoulders in a sling right now.
Yeah, exactly. 58.65 to say 58.50. 58.50 if you really want to kind of align it a little bit when it comes to the options positioning on the put side, especially the downside there. But 58.65 technically is kind of that neckline that you really want to be able to hold here. And that's, once again, a sign where if we have a break of that, you're going to get a lot of technicians out there, as well as some bears. Some bears might be looking at this and saying, look, you tried to get to that 6,000 level, 6,100, you consolidated, you failed. You tried to retest 6,000 level, you tested it, you failed. You broke some moving averages. You're starting to see volume, once again, get a little bit more lopsided when you're looking at the internals. Liquidity starting to dry up here. You're going to start have them, they're going to start, kind of sniffing this out and say, hey, do we actually see Mag 7 selling off here? Because that's what's going to drive the market to the downside. But there's still opportunity in this market if you're looking at, breadth as a whole. And I think that's something to kind of be mindful of, especially in bull markets. You have two cycles. You have the leaders that are usually the first 2 years, and then you have the rest of the market in the last 2 years. Maybe we're starting off that cycle of everything else starting to catch up.
That's a fun thought. It's a very fun thought. Somebody today posted on Twitter, I think, a decent case for the others outside tech, which is that we've seen all the CapEx numbers that got spent at somewhere. The theories that maybe it'll come for some of the smaller companies, or maybe it'll show up in more IPOs or something. So, I mean, some of this could be still part of a corrective process from a frothy market. And I guess we'll find out in the coming days if the economic data is surprising enough or disruptive enough to be a fresh force to break it down. Because usually if there is no fresh negative force, tech finds its legs eventually. So, but maybe the other stuff will too. Russell 2000 hanging in there today. Thanks, KG. Appreciate it. Good look at the market, the breadth, and the levels there, and that head and shoulders, which kind of looks like it's looking more like reality than not. Coming up, we got a lot of good stuff to get through. We're going to take a look at some of the cracks in the equity market that gave us some warnings, and one developing story around a name that's up today from CES. We mentioned it a little bit earlier, a deep tease on Micron. So that's our developing story. We're going to go to the NASDAQ for some thoughts, and then we'll bring on Liz Ann and Colin Martin for the next 18 minutes. We're going to be jamming.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere. The market with the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
All right, we got stocks getting hit. Let's look for some more answers To the NASDAQ we go. To the Market Intelligence Desk. Managing Director Brian Joyce always brings us some good charts. Brian, you've got a few, I think, really good observations and technical perspectives on the home builders and the regional banks, which do, I think, if we look backwards now, offer a little bit of like a heads up folks might have missed that things were getting weak.
Yeah, so we came into the beginning of December, with markets, coming in for a very strong month following the election. We had some very strong overbought readings, particularly within financials, the broker-dealer index. Overbought measures there were 27-year highs, consumer financial index 11-year highs, utilities were at 15-year highs. So, and that really, you could see that across many different sectors. We had, the first couple of weeks of the month wasn't too concerning or surprising to see some, pullback and some corrective price action. But then when we had the more hawkish Fed meeting on December 18th, you really saw that corrective price action take another leg to the downside, and that selling become more widespread really for the end of the month. But by the end of December, the only thing that really was trading higher, as everyone knows, has been that Mag 7 large cap, mega cap growth stocks.
It's interesting because today that's the stuff that's getting hit, but we've been tracking for weeks some of the same stuff that you have been. The regional bank index we're looking at right now erased the election rally 2.5 weeks ago. So now is it a question of if it starts eating into the rest of 2024's gains?
Well, I do like where it is now stabilizing. It's stabilizing right at that price gap. So that day after the election, the index was up over 13%. It's one of its top 5 single-day gains ever, and so it's holding at that price gap, and so that's an expected support level. I do like where that is kind of bottoming right now. You mentioned the big mega caps are the ones today moving to the downside. I think if you want to look at the broader stock market from a glass half full perspective, we could say a lot of the different sectors have already gone through a pretty meaningful pullback here. So we look at 5 out of the 11 sectors are below the 200-day moving averages already. 4 out of 5 or 4 out of 11 are down more than 10% from their highs, and so if we're looking in the near term to see if there's going to be continued selling that are going to be weighing on the indices, I would expect that to probably be those groups like the large cap growth stocks that haven't yet really pulled back yet. So that could drive the broader indices lower. But maybe some of these other sectors that have lower weightings, like financials, etc., maybe they've already seen the brunt of their selling. But we'll just have to wait and see. I think that change by the Fed, was noteworthy. One thing that stands out to me, we were discussing, was the home builders. That peaked in October. They've been having a phenomenal multi-year run, whether it's from 2022 or from 2020, and that they did roll over about 21% in about 2 months, and so that I think is significant. And with rates being elevated, the dollar being strong, we are seeing the real estate sector really beginning to pull back as well as the materials sector that had a pretty significant move to the downside as well.
This was old reliable home builders, really about as the most reliable, I think, kind of traditional cyclical group in the market. So that long-term trend line, if that snaps, that's a pretty big deal. I mean, there's been so much demand that has weathered so many different interest rate cycles post-COVID that this is a big line to break. You're going back 5 years on this chart.
Yeah, it's a big line for sure. Now, if it breaks that uptrend line, maybe that's suggesting that if we go from a strong uptrend to maybe some longer period of sideways consolidation, it doesn't necessarily mean this group is going to roll over sharply to the downside. Now, we've already pulled back over 21%, so that's a pretty significant pullback in and of itself. 1 to 2% below, we have a price gap there. That's potential support, and then we're very close just below that to the July lows of 2024. So that's another potential support level there as well. However, we have been seeing what's been taking place within that industry. The announcements we've been seeing is that an increasing backlog of new homes available for sale, and so with rates elevated as much as they are, they continue to go higher. The 10-year right now, it's above 465. The next level is 475. That I think a lot of technicians are looking at. That's the high from 2024. If we look at the 30-year yield, that's already now back above 4.9%. It's above its 2024 high. So that that next level is the next high there is from
Goddesses,
2023.
I bring the vitality of sun
That's
by the sea.
I took the kids swimming, went to the farmer's market, and crushed my sales call. Typical Tuesday.
Awaken your inner goddess with Body Fusion's expertly crafted assortment of delicious and nutritious.
Oh yeah. Oh. Bye bye bye. Bye bye bye. Oh, oh, oh. Bye bye bye. Bye bye bye. Troll alert. Bye bye bye. Bye, bye, bye. Do we have a troll? Send me a private message. I'll make sure I boot him. Come on now, Bobby. Don't make me spank you. Did we have a troll?
Expand that time frame back a little bit, go 15 years back or so, there is more potential.
Well, who was that band? Is that called the Backstreet NSYNC? Anybody can sing like that. Well, you just got to put that little whine in it. Bye, bye, bye.
Who have been hungry for yield.
Good job. Good call, Randy. Sticking to your guns there, buddy. Does Randy get a grade? Damn. Always clean. This is Jim. May I help you?
Hello, this is Sean Adam. How are you today?
Yeah, I'm doing good, Sean. Will you take me off your call center, please? Will you do that for me?
Yes, I got you.
Okay.
But, it's none of your business. Now you understand?
What do you need? He understands.
And you saw that initial move up in yields. That largely hit down the CAT spectrum.
Down the CAT spectrum? What the heck are you talking about, baby?
Cap weight, Russell 2000 coming under some pressure. But I think if we were to creep closer to 5%, I think the impact on the market is a bit more broad and moves up that cap spectrum as well. So I think that there are different levels that are triggers for whether it's concentrated weakness in small caps or broader weakness inclusive of larger caps.
That's a good point. Today, small caps and the lower down this cap spectrum are holding in a little bit better. Thanks, guys. Great analysis, very helpful. Appreciate that. Good big picture discussion. Colin Martin and Liz Ann Saunders. We got the bell in less than 90 seconds. Finish it up. We'll see you on the other side.
Okay. Well, today was profitable after all. Back to my average. like I said, we need to be generously patient. And them end of the day calls when we have sell-offs like that are perfect. Perfect. Because there's people stuck in them trades, for one. And then you got people that know how to scalp that end of the day close. And that's what we're doing here in our room. It takes a lot of patience when you're having a day like today. I mean, you just can't go in there and scalp every 3 or 4 minutes, 5, 10 minutes. Now I'm going to show you a trick here. I always like pulling up 2 time frames when we're in a little correction. So we could easily come down and hit this 59, you heard that 59.50 area from Kevin Green. And you also heard it from me. We broke support off the 9 today, and we can come down and hit this 21. We've recently bounced off the 21, but we got to take in consideration of the uncertainty that people have as we go into Trump. Because they're so used to getting their way, for one. All that printed money, 13 trillion of it, 14 trillion extra dollars that was printed in the past 4 years, which is the highest I've ever seen. I thought it was pretty. It was 189 billion when Obama was in office for about 2 to 3 years. But this is a lot more. This is 13 trillion, almost 14 trillion of money that did not need to be spent. And a lot of that money went to the family members of a lot of them Democrats and them politicians that are in office. So we're going to try to put a stop to that in the next 4 years. That's why we had to create Doge, because the politicians are getting filthy rich as we have to pay for it. So I'm being very cautious. I'm not swinging much. I'm just going to be scalping. I mean, today I got stuck. I didn't have I had one red trade. But I didn't go in big. I went in extra small just in case I had to buy the dip. There's still going to be a lot of good trades. I think penny stocks have sold off so hard in the last 3 to 4 to 5 years that there can be some good bargains in there. I mean, they've really sold off. I mean, stocks that were 30, 20, 30, 40 bucks are now at $1, $2. And they can run it like, here's one today. I called out in the room. DATS. DATS was at $30, actually 41 3 years ago, and it's done nothing but sell off real hard. And then today it got some news. So I've got my penny scanner up, and I'm looking for correlations between my scan and what they have on their scans. And today we had a big pop off that news. I mean, all the way from 234 all the way from $2 all the way up to $8, because it got news. It had news, and it might be a low float. I use FinViz to look for up my floats. And this is a 2.7 million float, which is in prime territory for a lot of volatility in a trade. And that'll catch a certain market of people. I'm in a room right now that I kind of snuck in that used to be Stock Authority and a couple other guys that I used to trade with years ago. That's all they do is trade these penny stocks. And that's what they look for. They look for float, and they look for news, any kind of news. It could be an offering and the thing will bounce. I wouldn't get into a trade that offer an offering, but I would jump into it if it closed. But 2.2 million, 2.5 million is the perfect float for them kind of traders. Now, the higher the float, the more or less volatility you'll have in the trade. And that's the same way with what happened with Rime, R-I-M-E. Rime, 65 million float, but it had news, and it at 10 cents. A lot of these stocks have really pulled back to incredible levels. This was a $10 stock, and I called this thing out at 10 cents, and it ran up to 30 today at a new low. I mean, there's so many of these penny stocks that have just sunk. I mean, to hardly nothing. I was like, why don't you trade pennies anymore? Because they ain't worth trading. They're going to, and it took 3 years for these to start to sell off. So, and there's another one in here that I called out, I can't remember what it was, Rhymes on top of the list right here. This is my new watch list here. I need to add DATs. Now look at the highest volume. See, Rime had over almost $1 billion, had 667 million in volume. DATS had almost 200 million in volume. So them high volume trades, and it's up 330 some percent. Now, I used to be real good at trading pennies, but when I recognized that I didn't want to trade them anymore because they were just not going in the direction that I like them to be in. And during the winter time, they're always good to trade. A lot of rookies penetrate into these penny stocks, and a lot of them rookies now are seasoned traders. I started trading 20 years ago, and some of them traders, are still like Tim Sykes still trades them. Zach Morris still trades them. There's a bunch of them out there that still trade them. They kept on trading them. But I'm finding them to be very attractive right now. And you got to look at these blocks. There's 48,000 shares right there at 21 cents. Watch that tape. But I'm expecting, market says 10% correction, and then we'll start bouncing up from the top from 10% on the SPX. But we got to wait until Trump is in office before we get any kind of certainty in this market. There's a lot of uncertainty, and the market doesn't like uncertainty. They're saying this and that, and tariffs and this, and tariffs or that, and that's going to cause the market to have a reflection and sell off a little bit. We got earnings coming up on the 15th. The banks will come out, and then tech. And they could get great earnings and still pull back, because we've had two magnificent runs in the market. I've never seen anything like it in the 20 years that I've traded. And we had a president that couldn't speak a word during that period of time that was run by a bunch of bureaucrats. So it's just weird. but they'd love that money that was printed. I mean, 13 to 14, 2 trillion over the budget, and then an average of 2 trillion printed every year for 4 years. And that's what caused inflation, was all that money, all that. These people politicians don't care, because they're collecting the check. Hey, probably like Hunter, for example. He's a crackhead, but he got involved with an oil company that he knew nothing about. And we have a war on oil, but his son was on the board of an oil company making, I don't know how much was it, $100,000 a month, a week, or however. And that's goes with the Pelosi's, with all them family members. They've got their hands in the pocket, because they know when they print that money, they can. So it's just a big scam. So I'm being very careful. Today I got stuck in a trade, and I was waiting, I'd be impatient. And sometimes, that one I took, I got in at 2 something, and it ended up going down to 145, and I jumped in it and bought 2 more contracts and was able to get out with $170. But I'm not looking for big, unless like at the end of the day here today, where it jumped up almost $7. I got in and out of that within minutes. And that's a pretty chunk of money. You go up $6 times 10 contracts at $1.20, $1.30, 89 cents, 80 cents. Boom, baby. The 5900s in at 3, out at 6 in a matter of minutes. So if you have to sit here all day and be bored, and watch the market go down, or if you're in the puts watching it go down, but there's a time and a place for everything every single day. And if you just have the patience to sit here and not be so, in a rush, patience is one of the first things that a trader should learn when trading in the market, and being in the now. We know that there's going to be a lot of, you've heard these people talk every single day, tariffs, intentionally bringing this market down on purpose, because we've had such a great run, a huge run. Like I said, I've never seen anything like it, and I will probably see it again if I live through this, or if I want to trade anymore. But right now is the best time to make a lot of money, if you just trade one at a time and be patient. And that's my little story I want to tell. So I'm going to get on out of here. A lot of newbies and a lot of people that ain't used to, that just got in the market a couple years ago or 3 years ago, haven't seen what I've seen. I don't remember one year that we ever had stocks run up 1,000% in 3 months. We had one that run over 3,000%, Mister, from $34 all the way up to 2,000. I mean, that's very unusual, but it happened. And AI. What's AI going to do? It's going to change America. It's going to change the world. And then it's going to be, now it's quantum computing. We got to have something to generate. So quantum is going to be the year of 2025. It's always been tech in my name. I've always loved tech, although I don't know how to use it. I got all these computers and monitors, and I'd get something mess up, I'm lost. Soon I'll be getting me a little place, and I'll be a minimalist. I won't have a lot of stuff, just a place to live, a nice house, and do a lot of traveling. I want to see the world. So that's about it. And I'll be able to do that now because we can work remote. I'll just find places that have great internet service and chug along 2 monitors and a computer. And that's really about all I'll need. And some good clothes. I won't need a car. I won't need nothing. Just drive from island to island and buy a motorcycle or rent a car or buy a car and sell it before I leave. A golf cart. So I'm going to get on out of here. We'll catch y'all later. Yabba dabba do, YouTubers. Tomorrow, and we're closed on Friday.